Okay, so we are starting with ethics. Firstly, word of caution. Ethics curriculum, if I want to summarize, this is it. Like this is 80-90% of the curriculum. 7 standards, 23 substandards within it, and that's it. If you go and have a look at some book, maybe Schweizer, CFA Institute's material, it's not very voluminous, especially Schweizer. Hardly 50 pages, 80 pages, and entire ethics is covered. But ethics have got one of the highest weightage. So, ethics, why it is different than other subject is, it will give you real life situation and basis that it will expect an answer from you. Okay. So, these are the guidelines, standards. Okay. You have to follow these to react in a particular situation. So, what I have done is, because like my experience have been, candidates generally try to leave ethics for the end because they see hardly there is 50 pages, 80 pages of curriculum, and that too including questions and all. Therefore, we will do it in the end. So, they end up doing it in the last month or maybe sometimes in the last 15 days and a week. Na baba na. We have to start with this. Okay. So, ethics, you can see there are altogether 7 standards. Professionalism, integrity of capital markets, standard 1, standard 2, duty to clients, duties to employers, standard 3 and 4, investment analysis, recommendation and actions, 5th one, conflict of interest, 6th, and 7th, responsibilities of CFA Institute member or candidate. Is ethics applicable on you guys? Answer is yes, 100%. Whatever we are going to learn from now for next couple of sessions, you have to apply that in real life. Okay. So, see, if you are a student, it will not be like ethics other than this particular standard, you will not be able to relate too much to it. But if you are a working professional, working in finance industry, then you will be able to understand, like you will be able to connect, like you will be like, oh, this have happened with me. Okay. So, firstly, out of all this, since every one of us can relate with responsibilities of CFA Institute member or CFA candidate, we will be starting with this. So, this is the text given in the curriculum. Responsibilities as a CFA Institute member or CFA candidate. So, it is applicable on me, it is applicable on you. The first one says, conduct as participants in CFA Institute program. If you are participant of any CFA Institute program, not only like CFA level 1, 2, 3, right? Any program offered by CFA Institute, then you will not engage in anything. I am just simplifying it. You will not engage in anything that compromises reputation or integrity of CFA Institute. You will not do anything that compromises or that put a tarnish on the name of CFA Institute, okay, or CFA designation. So, you will not do anything that puts a stain on CFA Institute or CFA designation. That's it. Now, see, what I have noticed is candidates since don't solve ethics a lot. They think, okay, this is the curriculum, I'll just read it and I'm done. Hardly 2, 3, 4 pages. No, so what I've done is, I have in this particular set of videos, I've included almost 300-400 questions. I'll give you most of the possible situation and we will be trying to find answer for those situations. Okay. So, 200 to 300 questions will be covered. After this, do you need to like go and practice ethics question? Yes. But your accuracy will be very high. Let's say if you right now without studying anything, if you go and attempt ethics, your accuracy is let's say 30-40%. Just by watching these videos and now if you go and attempt, your accuracy will reach 70-80%. But I always ask candidates, ethics is one subject where I will not compromise below 90%. All of you unanimously should be getting 90% and above. Why? Because see, the amount of efforts you put in FSA, the amount of efforts you put in derivatives, fixed income, quants, in comparison to that, ethics is nothing. But the marks it carries are equivalent or even more, right? So this is very easy. You will not do anything that put tarnish or stains in the name of CFA Institute or CFA designation or integrity, validity, security of CFA Institute program. Okay, simple. Then reference to CFA Institute, CFA designation and CFA program. CFA Institute or CFA designation or CFA program. CFA Institute, we are talking about CFAI. CFA designation, we are talking about charter holder. And CFA program is like what you are doing right now. While referring to CFA Institute, membership or designation or candidacy. So sir, is it not applicable on us? It is candidacy. In the CFA program, members and candidates must not represent or exaggerate. You should not lie and you should not over exaggerate meaning or implication of membership of CFA Institute, holding CFA designation or candidacy. So basically, you will not try to say, I am CFA student, therefore I will be able to do this. Na baba na. Okay. This is the text, that's it. But from this, at least 100 questions can be created. So now CFA Institute, what it will do is, it will give you various situations. One person have acted like this, tell me whether it is violation of this standard or not. So what I'll do is, now we'll go through many questions. Okay. Let us start. I have question and their answer, question and their answer. Okay. We'll go one by one. Be very attentive. Be very attentive. Everyone, focus here. What is the main requirement of standard 7A? 7A, that is this one. 7A, conduct as participant of CFA Institute program. Very easy. You should not engage, we discussed this, into any conduct that compromises reputation or integrity of CFA Institute, designation or CFA program. Right? Easy? It's easy. We have already discussed this. Now, what type of conduct are prohibited under 7A? So, what you cannot do? Prohibited conduct includes giving or receiving assistance on exam. Basically, cheating anyone, helping anyone to cheat. Sharing confidential exam information. So, can you share what question was asked in exam? Na baba na. You cannot share. Can you say, this was the question, this was the figure, this was like, no, not allowed. You are not supposed to share exam question. Violating any test policies, like you are not supposed to carry arms and ammunition in the exam hall. If you carry, you are violating this standard. Or using association with CFA Institute to further personal or professional goals. You are saying, I am associated with CFA Institute, therefore I should be getting discount on purchase of some jewelry. Na baba na, not work. Okay. You should not be using CFA Institute association for furthering your personal or professional goal. Sir, professional goal, sir, I want to increase salary. I am CFA, so can I use it? Yes. It's not talking about that. It's talking about something that is personal in nature and professional goal that in which you are taking undue advantage. We'll discuss this in more detail going ahead. Why is confidentiality important in CFA program? Why it is important? To maintain integrity of the program. Integrity, security, fairness of CFA exam process. Sharing any specific detail, you are not supposed to share any detail or content from the exam would undermine the trust of the program. You cannot say from this chapter this question was asked. Once you get out of exam hall, you cannot say. Can you express your opinions? Paper was difficult, easy, we'll see that. What kind of information from exam is considered confidential? What kind of questions you cannot share? Specific exam question, broad topics. Can you say from this particular chapter this LOS was tested? Na baba na. These formulas were tested. Can you say this? No. That are tested, not tested in the exam. Sharing this information is violation. Okay. Next. Can candidates discuss general exam preparation with others? Can you discuss general exam preparation with others? Yes, candidates can discuss general exam preparation with others and non-confidential curriculum material with others. Non-confidential. Non-confidential as in, let's say, questions were asked from derivatives. It's very, like, it's not confidential. Everyone knows it will be asked. Or questions were asked from ethics. You can say this. But you cannot say this question was asked from ethics standard 1B. You cannot say this. But they must not share, discuss any specific detail from actual exam. Easy. What action related to exam process could lead to violation of standard 7A? What actions related to exam process will violate? So you are not supposed to cheat. Cheating in the exam will violate. Using unauthorized material, you are carrying your notes, books in the exam, violation. Disclosing exam content, violation. Failing to follow exam policies, like you are not supposed to use any other calculator than BA2, like Texas Instruments BA2 Plus and its various version, and HP12C, but you start using Citizen calculator. It is violation. Okay, could result in violation of standard 7A. Everyone getting this? Yes. How does CFA Institute handle online forum and discussion related to exam? CFA Institute, believe it or not, they actually monitor blogs, forums, social network for disclosure of any confidential information and works promptly to remove violation. So let's say if I start saying not anywhere in a very closed forum, let's say in QuintEdge forum, we have a forum where I start putting, okay, 100 students, let's say, gave exam in August 24, and I asked them what questions were asked in ethics. At least 2 to 3 they will remember questions, and I compiled a list and put it on the QuintEdge forum. Have I violated? Yes. Okay. Chal. Are we all good? Yes, yes. Okay. What happens if a candidate violates any exam policy? What if you have violated? Then what to do? Violating exam policy, like bringing unauthorized material into exam room, discussing exam content afterwards, can result in penalties, voiding exam results, or suspension from CFA Institute program. Penalty for such kind of act, when you have disclosed the paper and all, it will directly be violation of exam results. Like you will, irrespective of that, like whether you pass or fail, your exam result will be declared null and void, or you will be suspended from CFA Institute program. Like you will not be able to continue with your CFA level 1, level 2, level 3 education. Okay. Can CFA program volunteer the people, the proctors, right? When you, like, in case you have given CFA exam, if you go, there will be a lot of proctors, right? They are volunteers. Can CFA program volunteer share information about exam process? No. What is the internal working of volunteer? They are not supposed to share it. CFA program volunteers are prohibited from sharing any information related to exam questions, grading process, any confidential material. So I'll tell you, in a very close professional proximity, I have someone who checks CFA level 3 like essay type questions, right? So he just shared that I have got something from CFA Institute. That's it. But I asked him some certain details. Can you just at least help me so that I can help candidates to prepare? He said no, a clear no. Why? Because it will lead to violation, right? Are members and candidates allowed to express opinion about CFA Institute or its program? Can you say CFA exam was very difficult, or CFA is a very good course if you want to make career into equity research or portfolio management? Yes. Members and candidates can express opinions about CFA Institute policy, procedure, but they must not disclose any confidential exam content in doing so. Can you say it was difficult exam, easy exam? That is fine, but you cannot disclose the content of the exam. What is the consequence of disclosing exam content to others after the exam? It will compromise the integrity of exam process, and you will be subject to disciplinary action by CFA Institute, right? Like this, suspension, if in case you have given the exam, voiding of the results. What is the importance of following exam related rules and regulations? So why you should follow? Because you want to maintain the value and the trust in CFA designation. Believe me, like if in case a person comes to me and say, sir, I am a CFA charter holder, automatically the level of trust I have that on person is slightly more than some other professionals. Okay. Then can members use CFA Institute volunteer position for personal gain? So the proctors that you see, they are CFA charter holders. Sometimes they are willing to provide like their services to CFA Institute. So can they use it for personal gain? A clear answer is no. No, using CFA Institute volunteer position for personal or professional gain. Like, can you promote yourself? I am a CFA Institute volunteer and I also provide portfolio management services. So please take my services. No, you cannot promote this. Or any business to access, business based on to access confidential information is violation of standard 7A. So we are just discussing 7A right now. Yes. What was 7A? Not engage in any conduct. Now all the conducts are being discussed. That compromises reputation or integrity of CFA Institute, designation, program. Okay. This is done. How does standard 7A protect the CFA designation's reputation? Because it upholds everyone for ethical behavior. Ask them not to engage in actions that will harm public trust in CFA designation. Basically, you are made accountable. Okay. Now, question 15. What should candidates avoid when discussing CFA exam online or in person? Let's say you came out of exam hall, one of your friend also came out of exam hall. So things that you should not be discussing. So CFA Institute, what it does, it asks you questions in a very twisted way. So sometimes you will see, I'm repeating a point, but that's because 2-3 different types of question can be constructed. Like CFA Institute will create this question like this. Two friends who have been studying together from last 10 years have completed their graduation and post-graduation together, decided to enroll for CFA Level 1. They gave exams and now since they prepared for exams together, they are discussing the following information about the exam. Then they will give you the context like what they discussed. Are they violating standard 7A or not? So this is why I'm like focusing on some topics that are asked in a very twisted way. Okay. Candidates will and should avoid discussing specific exam question, topics. Topics, can you say, sir, fixed income was tested? Yes. Within fixed income, sir, yield and price relationship was tested. Nah, baba, nah, you cannot do it. Formulas, sir, standard deviation formula was tested. Sir, F test was tested, T test was tested. You cannot do this. From the exam, as this information is considered confidential and protected under standard 7A. Okay. How can candidate ensure they are following standard 7A? How can they do it? Just avoid discussing all the confidential exam content and refrain from any action that could undermine the integrity. So like very easy. Can the candidates be penalized for discussing general difficulty of exam? Can you come out of these two friends, can come out of exam hall say, it was a tough paper, man. Yes, they can do it. No. Discussing the general exam difficulty or how well they believe they've performed in exam is allowed. Oh man, it was a difficult paper, but I was prepared for it. I performed really well. Can I do this? Yes. It is allowed. You can discuss how difficult was the exam and how your performance you expect it to be, right? However, candidates must not disclose any specific content or details. Okay. So new point over here, can you discuss your performance? Like don't tell details that this LOS, this question was asked and attempted correctly. Overall, I expect I will pass. I expect I have performed well. I expect I will be amongst the best performers. You can do that. Then what is the role of candidate pledge in CFA exam? So when you enroll for CFA program, you are asked to tick right on accept. Then you are asked question yes, no, lot of things are there. There is candidate pledge within that. So candidate pledge is a formal agreement. So sir, how they can if I am not following, what they will do? They are based in US. So you have entered into an agreement, a contract kind of thing with them. That's the candidate. You have to sign it. Like when you install a software, there is EULA, end user licensing agreement, right? You accept it and then you are able to start the software. Pledges that EULA. So you agree with all these things. You will comply with all these standards. That candidates sign confirming their commitment to upholding integrity of exam by not sharing any exam content or violating CFA exam policies. Okay. Then what type of behavior would compromise the integrity of CFA Institute program? Cheating will definitely do it. Disclosing any information or using CFA Institute role for personal gain. Cheating, disclosing any confidential information, using volunteer role for personal gain will compromise. What is the importance for candidates? Why it is important for candidates to respect exam security measures? Respecting exam security measure ensures fair testing environment for all candidates and protect the values and credibility. Okay, so there are some security measures that you have to follow when you are going to give the paper, right? So you will be asked to keep all the material out. You're not even supposed to carry other than your engagement ring, you cannot carry jewelry, you cannot carry mobile phone, you cannot carry any stationery, right? They will give you everything. These are the security measures, you have to follow it. Okay. So I think I have covered lot of things that can be forming part of conduct. Now we will be moving towards the next part. 7B, reference to CFA Institute designation and program. Okay, few more questions are there. Apologies, I missed it. What should a candidate do if they accidentally overhear confidential information? Wow. Sir, I was just passing by and two people were discussing. I was not trying to do it, but it fell. Like I heard it, I overheard it. Now what to do? If you accidentally overheard something about confidential exam information, then don't do anything. That's it. Just act like nothing have happened. Do not share it. Do not act upon it. And maybe if you want, report also to CFA Institute, right? So if you overheard something, don't do anything. Just act normal. Don't use it. Don't share it. Can members use information from CFA exam to create study material for future candidates? Can you use CFA Institute's material or any information from CFA exam to create future study material for future students? No. If you want to create, you can do it, but don't disclose any confidential information. Can you use CFA curriculum and maybe create a summary out of it in your own words, like I do it? That is fine, but don't just copy paste it, right? Don't disclose any confidential information from exam. Like let's say I collect data, I have access to few thousand CFA candidates, right? I asked all of them to give 3-4 questions that were tested in exam. Now I'll have 10,000 questions, right? 5,000 questions, right? Now I can put it into my material and say, tested in exam, attempt this. Tested in exam, attempt this. Can I do this? Answer is no. So it is more or less for me instead of you. What should candidates do if they witness others discussing specific exam content? First of all, don't be participant into it. If others are discussing, what are you guys doing? No, don't do this. Do not participate in the discussion, and if you want, you can also report the violation. Okay. Is discussing study strategy for CFA exam allowed under 7A? Yes. I'm planning to do portfolio in the end. I will do fixed income. So I'll do derivatives and fixed income together, corporate shares and equity together, FSA and quants together. Then I'm planning to do revisions of it. Then I'll be giving 2 mocks and then I'll be giving exam. That's my strategy. Can I do this? Yes. Right? please, like in the whole process, you're not supposed to disclose any confidential information. Anyways, you will not have it also most of the time. What are the consequences for a member or candidate if found guilty of cheating in exam? You were cheating in exam and proctor caught you. I have seen it. Like when I was giving my CFA Level 1 exam, everyone listen to this. This is a real incident. Long back, when I was giving my CFA Level 1 exam, I remember it was in like at the place where Noida Auto Expo is there, right, every year. So it's very massive, like thousands of candidates were there. So just maybe 3-4 rows away from me, maybe like 15 feet away from me, some person was looking here and there constantly. Proctor came to that person and said, sir, please give your, like that time physical exams were there, no computer based exams were there, please give your workings and all, and you are not supposed to give exam. He argued with Proctor, but Proctor clearly said no, you're not supposed to do this, what are you doing, say hi while exams, right? So this is real incident. So what is the consequence for a member or candidate if found guilty for cheating in exam? If you are found guilty, so your results will be void. So you will not be getting your results. Number 1. You can be suspended as well. Suspended is temporary. Suspension is temporary. Termination is permanent from CFA program, and possible bans from holding the CFA designation. Can a member discuss the content of past exams as they have already been publicly released by CFA Institute? See, if any, I am not talking about questions. CFI don't release questions asked in the past exam. But anything else which CFI itself have released in the public domain, like weightage of particular subject, then they can discuss it. Because it is no longer confidential, CFI itself have done it. How should candidates approach online forum about CFA exams? They should avoid sharing, soliciting any exam specific content. So see, this is the same thing you are not supposed to discuss. But now they've moved from in-person to online. And some candidates will think it's a new situation, maybe online. It's an anonymous form. No one will be able to trace you. So can you do it? Answer is still no. Okay. But it is important not to remove any exam material from the testing room. So when you enter the testing room, you go empty-handed. When you come out of testing room, you go empty-handed. Even the rough workings, you are not supposed to carry with you. Pencil, pen, everything they will give you, right? So it is important because when you are like, if you are carrying a paper from exam hall to back to your place, you are carrying some memory of the exam, right? What questions were asked. So removing exam material from testing room compromises the security and integrity of exam and violates CFA program, leading to severe penalties. Even the volunteers, like right now it is not possible. When the physical exams used to be there, volunteers used to get paper 2, 3, 4 minutes earlier, right? But they are also not supposed to do this. Can a member use their CFA designation to promote unrelated business services? They are not using it for their professional purpose, but they are using it for some other purpose, personal purpose, right? Or maybe unrelated business purpose. Can they do it? Answer is no. Let's say XYZ person is a CFA, he manages funds, but he is also now willing to get tickets for, let's say, Diljit Dosanjh concert. It's very difficult to get it on like the websites like BookMyShow, etc. So he uses some of his connects of the people for whom he is managing funds, and he says, I am CFA managing your funds and I want concert tickets of Diljit Dosanjh. It's not for business purposes, but can I use this? Can I request my client to help me to do it? Yes, but don't put I am CFA, that's why I want it. Okay. So no, using CFA designation to promote unrelated business services or personal goals do not align with ethical standards, and it's a violation. This is standard 7A, 10. Okay. Have I covered every situation possible? No, obviously, but good part is covered. Second, reference to CFA Institute, CFA designation and CFA program. Just a second. Okay, chal. Focus everyone. Can a CFA charter holder use CFA designation on business card if they haven't paid the membership dues? So after becoming CFA, like after clearing CFA level 3, you apply for charter holder, you become CFA Institute's member. But if you don't pay membership fees, then what happens? You are no longer a CFA charter holder. No, if a CFA charter holder has not paid the dues or completed some professional conduct statement, so like you have to sign a document every year, then they use a right to use CFA designation. So before using this designation, so sir, to earn CFA, we have to pay fees to CFA Institute in the form of exam fees, registration fees. Yes, and to hold that CFA designation, you have to also keep continuing paying the membership fees. Okay. Is it acceptable for CFA candidate to mention their expected completion date for CFA charter or on a resume? Can CFA, see, it is that if you give exam, there is no surety you will clear or not, right? Pass rate is around 50% on an average. So 50% chances are there. So can you mention on your resume CFA level 3 expected to be completed by, let's say, August 2025? No, you cannot do it. No, candidates must not state or employ any form of partial designation or expected complete date. They may only mention the level they are currently enrolled or have passed. Can I mention CFA level 1 passed or CFA level 2 enrolled? Yes. Can I write CFA level 3 expected to be completed in May 26 or August 26? Nah, Baba, no, you cannot do it. Can CFA charter holder claim their designation guarantees superior performance to their client? Because I am CFA, I will be able to outperform everyone over here. Can I do this? No. Getting CFA charter holder, you cannot claim that I am superior than others. No. CFA charter holder must not exaggerate the implications of CFA designation. Can you say, I am first attempt clear CFA level 3, therefore guarantee 18% return per year? Not possible. Claiming that it guarantees superior performance is a violation of standard 7B. Is it permissible for candidate who passed level 1 of CFA exam to state CFA level 2 on their resume? If you have passed CFA level 1, why do you want to mention CFA level 2? You can write enrolled or enrolled for CFA level 2. You can write that. You can write CFA level 1 pass, but you cannot write CFA level 2. No, the candidate can mention pass level 1, but must not refer themselves using any partial designation form like CFA level 2. There is nothing called as CFA level 2 designation. Either you are a CFA or you are not CFA. Either you are an FRM or you are not an FRM. Either you are an IS or you are not an IS. Either you are an CA or you are not a CA. Can I say CA or maybe for becoming IS, you give UPSC exam. So prelims cleared. Na baba na. Similarly, over here, okay. Is it permissible for candidate who passed level 1 of CFA exam to state CFA level 2 on their resume? Okay, we did this. How should a CFA charter holder refer to their designation when they retire from the profession? I'm repeating this question. Very nice question. How should a CFA charter holder refer to their designation when they retire from the profession? I was a CFA charter holder, I was working, now I've retired. So retired charter holder should, it's far away for me and far away for you as well, must apply retired status with CFA Institute. Until their retired status is confirmed, they should not use CFA designation. Once retired status is granted, they can refer themselves as retired CFA charter holder. So you have not been kicked out for not paying the fees, etc. You are working, you were charter holder. Now maybe you have reached 60 and you want to retire. You don't want to do anything. You don't want to carry portfolio management services. So what to do in this case? Or maybe what navigating towards new career, right? So you can, like, until unless a permission is granted, you are not supposed to use. Once the permission is granted, then you can write as retired CFA charter holder. Like many senior faculties I've seen, like they have been training finance, they were charter holder from last many years. Now they've reached 45, 50, 55 at their respective age. They've decided to retire. I don't want to continue teaching, etc. everything. I just want to like chill in my life. So they now use retired CFA charter holder on their LinkedIn, etc. Okay. Can a CFA candidate mention in an online profile that they are preparing for CFA Level 3 exam? Yes, there's nothing wrong. You can write CFA Level 3 candidate. CFA Level 3 is not a designation. You're preparing for it, enrolled candidate, that is fine. In CFA program and does not imply any form of partial designation. There is no partial designation. You are a CFA or you are not a CFA. Okay. Everyone enjoying these videos? Okay, sure. Pay attention. See, this is just one standard that is going on. You could have, like, I can cut short the entire ethics into 4 or 5 hours. That's it. But I am discussing this one particular standard for hours and hours because I want each of you, every one of you. I don't know how many people will be watching it, but whosoever watch it, I want you to score 90 percentile. And if you like get 90 percentile, inform me back. So this effort really made like me achieve, right? It can be a difference between pass and a fail. Okay. Is it allowed for a firm to advertise that all its employees who pass the CFA exams on the first attempt are better investment managers? There is a company in which CFA charter holders are working, and the business is like promoting that all the charter holder working with us are first attempt CFA charter holders, therefore they are better investment managers than maybe some other person. Answer is no, you cannot do that. Firm must not imply that passing CFA exam on the first attempt guarantees superior performance, right? Passing CFA program is passing CFA program, first attempt, second attempt, third attempt, doesn't make a difference. If charter holder stops paying their dues, can they still mention CFA designation on job interview? No, you are not a charter holder anymore. So sir, you have to keep paying membership fees. Yes, you have to do this. Okay. So answer is no. Can a candidate state on their resume that they expect to pass level 2 of CFA program next year? No, you cannot do it. If you expect to pass CFA level 2, like in the last slide it was for level 3, now it is for level 2. CFA Institute turns and twists the question many times. So can you do this? Answer is no, you cannot do it. Okay. Must not state or imply an completion, expected completion date for CFA, any level of CFA program. They can only mention that they are currently enrolled or have passed. Passed level 1, you can write. Enrolled for CFA level 2 or level 2 candidate is fine. So when you are making your resume, make sure you follow these guidelines. Is it permissible for CFA charter holder to state that holding the CFA designation gives them a competitive advantage in their career? Holding a CFA, are you saying I am going to give you like superior returns? Na baba na. You are saying it gives me some benefits that others don't have. Answer is yes. A charter holder may discuss benefits of holding CFA designation, like the rigor of the program and its impact on the career. But they must avoid making statement or exaggerating or misrepresenting the implications of holding designation. Oh sir, this was the line. Yes, read this. While referring to CFA Institute, membership, designation, candidacy, members and candidates must not represent, exaggerate or exaggerate the meaning or implication of membership in CFA Institute, holding the candidacy, holding the CFA designation or candidacy in the CFA program. Okay. Okay. Everyone focus. So can you say CFA was a very rigorous program, it helped me to develop skills around valuations. It helped me to develop better understanding of financial markets. Now I have better understanding of other asset classes. Yes, this is why you are doing CFA. But can you say because I have better understanding of asset classes, I'll generate higher returns than the entire world or maybe like some other person? Nah, Baba, nah. Can a firm advertise that CFA charter holder outperform the other non-chartered holder investment managers? A firm, let's say, have CFPs and CFAs. Can I say CFAs are better than CFPs? No. Okay. The firm must not make claims that imply CFA charter holder achieve better investment results than non-charter holder. Is it acceptable by CFA? Is it acceptable for CFA candidate to discuss general structure of CFA exam with others? I think this question should have been there, but anyways, general structure of the exam, yes, you can discuss, like weight can be discussed. You can discuss there were 90 questions, 2 hour 12 minutes, session 1, 2 hour 12 minutes, session 2, or CFA level 2, there were like vignette style questions, 11 vignette style questions with 4 questions in each, so 44 per session. You can discuss that. General structure of exam or curriculum topics, however, they must not disclose any specific question. Can a CFA charter holder list the CFA designation on their resume, but omit the fact that their membership is inactive due to unpaid dues? Can a CFA charter holder do it? Now, like you are you're pandit of CFA level, CFA standards, right? Standard number 7A and B. Give me the answer. Can a CFA charter holder list CFA designation on their resume? You are writing CFA designation, like you are saying CFA charter holder, CFA. But you can omit the fact that you have not paid the dues. Answer is no. If charter holder members is inactive, like let's say I have cleared CFA L1, L2, L3, I have satisfied the criteria for charter holder, I apply for it, I am charter holder for last 2, 3, 4 years, and then I say I don't want to pay the fees, I don't have any benefit for it, and then I stop paying the fees. Now I am switching my job, I am putting it on my resume, CFA, Yash Chan. Can I do this? Answer is no. If I have not paid the membership fees, I cannot do it. They must not present themselves as current charter holder. They can only state that were a charter holder in past until they reinstate their membership. Can I say I was a charter holder before? Yes. Can a CFA candidate write an article and mention that they are currently preparing for CFA level 2? Yes. There is no harm in mentioning that you are preparing for CFA level 2 exams. Okay. We are done with 7A and 7B. So what are we done with? This. Okay. Now we will be starting with this. Professionalism. Okay. Professionalism. So this is latest edition. It was introduced in January 2024. So if you are using any book, like this is for 2025 and onwards. So if you are using any book, then like you might not find it if you are using outdated book. Okay, but it is there. And I suspect, like I think CFA Institute will forgive me. Few questions that since it's a new introduction could be tested from this. Okay, so this is it for this particular standard. Next we are going to start with professionalism. 5 substandards are there. Now let us start discussing this. Okay, so now let us start with first standard, professionalism. Okay, first standard, professionalism. Going back, check everyone. This was responsibilities of CFA Institute member or candidate. This is professionalism. Okay, so let us start with this. Altogether 5 substandards are there called as knowledge of law, independence and objectivity, knowledge of law, independence and objectivity, misrepresentation, misconduct, competence. Okay, 5 of them are there. This is the latest edition. This is added in 2024. Okay, Jan 2024. Okay. Now, let's firstly, what I'm going to do is, I have almost like 100, 150 plus questions for these. So what I'll do is I'll read one, then we'll solve question. We'll come back again, read second, we'll solve questions. Okay. So firstly, knowledge of law. This is about the laws that you should be aware of or what to do in a particular situation. First of all, CFA member and candidates, you and me, you and charter holder, should understand and comply. You should know and comply with all applicable laws. Whatever laws are applicable in that particular situation, should know them and you should be able to like comply with them. Laws, rules, regulations, everything. Law and like within law there are rules and regulation is made by regulatory bodies, including CFA Code of Ethics. Okay. So you should be complying with all the laws, rules, regulations, including the Code of Ethics, all these 7 standards. Okay. And standards of professional conduct of any government. So it could be a government organization, it could be regulatory organization like SEBI, licensing agency, or professional association governing their professional activity. Like I am a chartered accountant, so for me, CA Institute India, I should be complying with all the applicable laws, rules, regulations of the government of India, of any regulatory organization. Let's say SEBI standards apply on me, SEBI regulations apply on me. So that any licensing agency, so in case like any license I am taking, maybe license to operate an educational institute. So that, and any like since I am a CA, so this also professional governing associate, like professional association governing professional activities. If there is a conflict, if in case there is a clash, conflict is there, then you guys, candidates and members, must comply with more strict laws, rules or regulation. If law says something else and regulation says something else, law says something else and maybe governing body rules say something else, so I'll comply with the most stricter one, whichever is more strict. Okay, we'll see this with the help of example. And you guys, members and candidates, should not knowingly participate or assist. You will not be part of or you will not help others. And if you are there, disassociate, not be part of, don't help others. If it is like going on, disassociate yourself from any violation of such law, rules or regulation. That's it. Like this is knowledge of the law. Okay. Independence and objectivity we'll do after some time. I have few questions on this. Knowledge of law questions. Firstly, the very basic question. What is the requirement under 1A, knowledge of law? It is not to break any law. Break any law as in like comply with all the laws that are applicable. In case there is a strict, like in case there is a conflict, comply with the stricter version. Okay. What should members do if local law are stricter than CFA Code of Ethics? You are a CFA Institute member, you have to follow Code of Ethics, but local law is more stricter, so follow it simply. Okay. Again, CFA Institute will give you clash between local law, international law, local law, Code of Ethics. Simple thumb rule is always follow which one is more strict. Then, what if there is no local law, like insider trading is prohibited in India. Let's say it is not prohibited in Sri Lanka and you are operating in transaction that is in Sri Lanka. So can you do insider trading? If in case it's going on, are you comfortable with it? Answer will be no. Because Code of Ethics say no insider trading allowed. We'll read this. So comply with Code of Ethics. If there is no law, it is law, Code of Ethics, whichever is more strict. If there is no law, then obviously it is Code of Ethics. Okay. What steps should a member take if they suspect a violation of law or standards? You're not participating, others are doing it, you suspect it. What should you do? First option is keep mum. Second is let everyone know. Third, inform police, government authorities. What will you do? Okay. So firstly, consult a legal counsel. Consult a lawyer, right? Consult a legal counsel. Take legal help. and report the issue to compliance within your, you don't have to go to SEBI and report it. Within your organization, there is a compliance division, report it to them that this is happening, right? And then disassociate from any illegal activity. In case you see any illegal activity is going on, you have to report it to compliance within the organization, take legal help and disassociate yourself. Like, be very clear, I am not part of this, okay? Is reporting legal violation to regulatory, not to compliance, to regulatory authority required under standard 1A? Answer is no. Is it a requirement to report it to SEBI in case you find something? Answer is no. Under 1A it is no, right? No, but sometimes it may be prudent in certain circumstances. Now think about this. Under 1A you are not supposed to report it, but SEBI law says that you have to report it in case you find any like illegal activities going on in the capital markets. Now you have to comply with the more stricter law. Then SEBI law is more stricter than code of ethics. Then you have to do it, right? So it is very twisted. Okay. What should members do if they suspect a client or colleague of engaging in illegal activity? If you are not doing it, but you suspect your clients or your like colleague, professional friend is doing it, then in that case, disassociate from the activity and encourage cessation. Ask them to stop it, encourage cessation. If they do it, don't do it, it's perfectly fine, but you disassociate yourself, okay? So simply stay away from illegal things, right? If in case you find it is happening, take legal help, go to your compliance team, report it within the organization. You don't need to go to SEBI all the time. But in case law requires, like the law, local law says that if you find some information, report it to the organization, then follow the stricter law. And then if in case like friends, colleagues are doing it, ask them to stop it and you simply disassociate yourself. Can a member use material? That is important. Material is any information that can influence the price of a particular security. Non-public information, that is, it is not being released in the public domain. So can a member use material non-public information in a country where it is legal? In a country, they allow you to do insider trading, for example. Insider trading is done on the basis of material non-public information. So can you do it? Answer is na baba na. Legally it is allowed in that country. But code of ethics says no, you cannot do it. Follow the stricter law, therefore don't do it. Okay. So you'll notice this and this is same, but the way it is being like tested in exam is different. Okay. How does standard 1A apply to cross-border transaction? Cross-border is between two countries. If in case transaction is happening between India and let's say Singapore, so it's a cross-border transaction. Then follow the stricter law. If in case India have one law, Singapore have one law, and code of ethics is anyways applicable, out of all three of them, whichever is the most strict law, follow that. Must follow the stricter law or code of like CFA code and standards across all applicable jurisdiction. Simple. What should members do if they are in doubt of law or rule and unknowingly violate it? You're not aware of the rule, but you have violated it. So like not having information of a law is not a good enough reason to say like I'm innocent. So members will still be held accountable. Ignorance of law, this is a beautiful line. Ignorance of law is not a defense under section 1A. You're not aware about it, you accidentally did it, still you are responsible. Then can a members use material, can a members use non-public information if they are in a country where it is allowed? Answer is no, we just learnt it here, you cannot use it. Code of ethics anyway don't allow you to this. What should a member do if their firm is engaging in illegal activity? If their firm is engaging, simply disassociate, take legal help, report to the counseling team. Report to supervisor, disassociate, and like maybe take it to the lawyers. Is a member required to report illegal activity to CFA Institute? No, you are not required to do it. You are encouraged, but there is no specific requirement, right? So basically, if you find something illegal is happening, you take care of yourself. You don't have to specifically go and like tell to regulatory authorities or CFA Institute. CFA Institute don't want you to do. Anyway, CFA Institute cannot do anything. So can do it to the member, but what will it do to an organization? Nothing, right? It can report it to our authorities and authorities can do it. That's a different thing. But directly CFA Institute cannot do it. What happens if the law in one country is less strict than code of ethics? Then follow the stricter one, then follow code of ethics. If local law allows certain actions that CFA standards prohibit, allowed under law but prohibited by CFA code of ethics, which should a member follow? The stricter one, follow code of ethics. How should a member handle conflict between standard and local law? If there is a conflict between them, local law says something else, standard says something else. Whichever is more stricter should be followed. Easy? Okay. Now what is the first step a member should take if they suspect an ongoing illegal activity? Go to legal counsel. If you are suspecting there is ongoing illegal activity, consult legal counsel to determine the activity is illegal or not. What is the responsibility of a member when they learn of non-public material information? If in case, let's say, you learn, overheard, or it was discussed in a meeting that the company is going to 3x its profit because of XYZ reason. It's not released. Maybe it will be released after 1 month, but you are aware about it. So start, sir, insider trading mint money. Na baba na. Don't do anything. Do not act. And do not share the information until it becomes public. Once it becomes public, you can do whatever you want. Okay. Can a member knowingly assist, knowingly, जानबूझकर, जानते हुए, knowingly assist in an illegal activity? If their supervisor instructs them to do it, you know it's illegal, but your senior is saying do it. So what should you do? You should follow your supervisor. You should follow the law. Answer is obviously follow the law. Member must disassociate from any illegal activity or unethical activity, even if it is directed by supervisor. Supervisor is not above law, simple. What should a member do if they believe a fellow member? There is one CFA and there is another CFA, charter holder. One person, one CFA believes the other CFA is violating the law or code of ethics. Then in that case, disassociate yourself, firstly. Second, encourage, ask that person to please comply, but not required to report unless law requires. See, if law says you have to report, then you have to report. Otherwise, you don't have to do anything. Then can a member use non-public information provided by a company during a confidential meeting? No, he should not act on it. No, unless the information become public or is non-material. So if it is non-public information, it is non-public and material and non-material. If it is non-public, that is private information, but it is non-material, you can use it. If it is non-public and material, you should not use it. Like, let's say, non-public information is there was audit going on, and in this audit there are certain major discrepancies found. So company is still dealing with auditor, but this is not disclosed in public domain. It is non-public and material. Lot of audit discrepancies, it's a material thing. It can influence the share price. So you should not be doing anything on the basis of this, right? Keep it confidential, do not act on this. But let's say there is another non-public information. Another non-public information. Non-public information is about senior manager of production department, health concerns. Senior manager of a production department is having some health concerns. Maybe he is admitted into hospital from last maybe 1 week, 2 week, right? Now it is non-public information, but in the context you have to decide whether it is material or not. Maybe above senior manager there is president who looks after the production. There is vice president. So it is just a small piece in the process. It is non-public information. So you can, if you want, you can like let others know also this person working in this company is not doing well. So like if it is material, then you should not be acting on it. If it is non-material, then it is perfectly fine, right? Okay. So this is the first knowledge of law. Simple? Okay. Now independence and objectivity. Independence and objectivity. Members and candidates must use reasonable care and judgment. You should take care of, or you should like be reasonably careful and in your judgments and in general to achieve and maintain independence and objectivity in their professional activities. Basically, your judgments, your decisions should be rational, number one. Number two, it should not be influenced by anything. If it is wrong, you have to say it is wrong. If it is right, you have to state it is right, right? Members and candidate must not offer, solicit or accept, I'll just read it as offer or accept gift, benefit, compensation or consideration that could be expected to compromise their own on another's independence and objectivity. So you should not take a gift, give a gift, take a consideration, give a consideration, take benefits, give benefits that will hamper your objectivity and your independence, your rational side, your rational decisions and your independence. Okay. So like take care of your independence and objectivity and take care of others' independence and objectivity. This is standard 1B. Now let's do lot of questions on it. Okay, so firstly, what does 1B require from CFA member and candidate? You should be careful. You should stay independent. You should be unbiased in your professional activity. Okay, you should not give, ask or accept anything that could make you lose your independence and objectivity or some other person's independence and objectivity. So basically don't get influenced and don't try to influence anyone simply, okay, unnecessarily in your professional activity. What should members do if someone offers them gifts or money that could affect their judgment? Sir, please take this maybe 10 lakh rupees and can you increase the rating from maybe BBB to BBB plus? Can you do it? Answer is no. Simply say, sir, I cannot accept your gift or the consideration because it will influence my decision. If in case it's a gift from client, so sir, we can never accept gift. You can accept gift, just tell your employer about it, okay? Ask him whether it is like, whether you can accept the gift or not. And gift should not be influencing your decision making, okay? How should members handle pressure from their firm investment banking team to issue positive report? So like if in case you are working, an investment banking arm is also there, investment banking arm is dealing with someone and you have to issue a report on them. So if in case they are pressurizing you, please give a positive report. In that case, what should you do? Firstly, make sure it is an unbiased report. You should not be getting influenced by the pressure from investment banking side of the firm. It's the same firm, but still you should maintain your unbiasedness and rationality. Can a buy side client like a portfolio manager, hedge fund manager, portfolio manager, they are basically like investing in the security, hence the buy side client, influence sell side client to change their ratings? So let's say portfolio manager have decided I will be investing in TCS. Rating on TCS currently is negative. But since now I want to invest, or maybe after investment, can I ask another team to say, give it a positive rating now? Answer is no, you cannot do it. Analysts should not let clients influence their ratings or reports. Stay independent even if client pushes for higher rating to protect their performance. So if they issue positive rating, the TCS price will increase, and therefore the performance of portfolio management team will be better, but you should not do it. What must members do when conducting issuer paid research paid by the company being analyzed? So let's say Zomato comes to your firm and say, so do a research on us, we will finance it and give us a positive report. You will say no. If it's a issuer paid research, even if after that, whatever are our findings, we'll express that without getting influenced by you. Okay. So members must make sure their research is unbiased and independent. They must disclose any payments that they receive from the company for the research. So you should also disclose the payments, keep report unbiased, and disclose, okay, this was the compensation for the report. How does standard 1B apply to performance reporting and analysis? Performance reporting and analysis. How does 1B, independence and objectivity, apply to it? So members who handle performance report, like how our portfolio have performed, how our particular division have performed, they should stay independent, unbiased while analyzing and presenting the results. You cannot do misrepresentation. Okay? They should not let anyone pressure them to change or hide information. Untold information is as good as a lie. What should members do if they receive a small gift from the client? Small gift, sir, let's say on Diwali, someone gifts me a Ganpati Murti, or maybe year end, someone sends me a small gift hamper of maybe 500 rupees, 1000 rupees. That is fine. Small gift is okay. But members should tell their employers about them and make sure the gift doesn't affect their objectivity. So what happens is, so like being a professional who is working in this industry, and like we help in investment banking side of things also, right? We also help candidates to get placed. So what happens is, many times, many people want to influence kind of things that we are doing. So sometimes there will be like extraordinarily large hamper. Like I know that what I have done for that person. I know, right? So I have not done him any favor. If it is correct, I'll report it. If it is not correct, I'll report it, right? Maybe report is about to be released 2 weeks, 3 weeks, and then I'll receive a very fancy hamper or maybe a watch. I have to clearly say no to it. I cannot accept all these things, right? Small gift is okay as a good gesture. Like one client I remember, he I'm really fond of fancy pens, right? So he sent me a PRA Cardin pen, I think 700-800 rupees. So that is perfectly fine, right? But sending 10, 20, 30,000 rupees of watch or hamper like that, it's a clear that you want to influence my objectivity. I'll say no to it. Okay. How should members handle pressure from public companies to issue positive report? So you are doing equity research analysis, let's say on Adani Enterprises. Now Adani ji is forcing you. You have to issue good report for us. Positive should be highlighted more. Negative should not be spoken about. All these things. I have to resist that pressure from public companies and make sure reports are based on honest and independent research and not under the influence of the company. Okay. Just a second. Okay. How should members handle pressure from, okay, I think we have done this. What should members do if their firm's interest conflict with their client's interest? Client versus firm. If client interest is, let's say, client interest, you will be like a particular product, let's say a particular fund, he wants to put his money, retirement money there, right? So you would want him to like put it in a very safe place. But in that case, your commissions won't be very high. There's a conflict of interest. So what should you do? You will put client interest first and avoid letting firm business relationship affect the decision. If it is client versus firm, it is always client. Client versus employer, client first. Okay. What if a member feels their pay structure could affect their objectivity? Sir, if you issue positive report, we'll give you 30 lakh rupees. But if you issue a negative report, we'll give you 10 lakh rupees. I'll say, nah, Baba, I don't want this assignment. Should talk to their employers and make sure the pay is not linked to the things that might bias their objectivity. Basically, the pay and the results should not be connected. Report can be positive, negative, but pay will remain the same. Can members accept invitation to a fancy event or entertainment from companies they are researching? So let's say a gold mining company is being researched. Now you have to go to the gold mines to do the research. It is based in some other country, continent, in a very remote area. So how do you go there? You go via flights. But like to take you there, they are giving you like private jets, and then or maybe they are taking you via yachts with all the fancy things. They're trying to influence your objectivity. Decline such invitation to fancy events that can impair your judgment. Okay, accepting such invitations could create a conflict. Can members accept travel expenses from outside companies for business purposes? So let's say the same company is saying, sir, we will take you from location A, maybe your head office, to that country via private jet. Please feel free to join in. You'll say, no, I'll manage my own travel, right? Members should avoid accepting paid travel from outside companies. Your employer will do it, that is fine, but outside company should not do it. Until and unless it's a modest necessity. Let's say I want to move to that gold mine. From point A to point B, the flight goes from, let's say, India to the largest gold mine in the world, South Africa, it goes, right? I don't remember the name. I think it's like 5,000 meters deep. So from my head office to South Africa, wherever that is located, it will go to the nearest city. But from that city, I have to move 300-400 kilometers to the mine side, and there is no flight available, mine to the city. And that in that case, I am given a helicopter or private charter to go there. That is necessity. I cannot travel 400 kilometers in a desert. That's why I need it. So if it is necessity, it is fine. You should accept it. But otherwise, say no to paid travels. Okay. They must ensure their objectivity isn't compromised by accepting such offers. Sir, we'll give you private charter plane. You'll get all the fancy things, expensive liquor, the best of the best cuisines available. Then when you land there, you'll be staying in a 5-star resort. You will get all the facilities. You'll get to play the golf. You'll have a massage session. And then once you're relaxed, we'll take you to the original mining site and we'll take you in a helicopter there. No. It is trying to influence your objectivity. How should members handle their relationship with third-party managers and custodian? So CFA with not their organization, some other person. Firstly, should not let gift, entertainment or any other benefit influence their decision, right? So whatever any other person is trying to do with the help of gifts, any favors, say clear no to it. Okay, now next, what should members avoid during manager selection process to stay independent? So if you are a CFA charter holder and you are hiring someone, right, manager or any other role, please make sure their gifts do not impact the hiring process, your objectivity, independence, right? Let's say you have to hire for your fund someone, right? But that person privately messages you on LinkedIn that, sir, I have been asked for interview. If in case I sail through the process, you give me a green nod. In that case, expect a expensive watch as a gift from my side. Say clear no, okay? Should not accept or ask for gift, donation or any other benefit for hiring and firing a manager for their clients. 17, 18 are connected. Firstly, let us do 18. How should members handle research reports when their firm has a business relationship with the company being researched? So let's say there are two arms. One is research division, another one is wealth management or investment banking division. Let's say wealth management division. Wealth management division is taking care of the investments of a particular listed company. Let's say that listed company is Hero MotoCorp. So whatever assets they have, the liquid funds they have, they invest in like bonds, etc. So you take care of that. So you have a business relationship that is taken care by wealth management division. Now equity research division have to research Hero MotoCorp and issue a report on it, whether it's a good buy, not buy, green, reds about the firm, right? So how should a member handle research report when a firm have business relationship of the company that is being researched? So make sure the research remain objective. Even if there is business relationship with the company, this business relationship should not affect their analysis. If you have business relationship with the company, that doesn't mean your report will be not objective. Now read this. What should a member do if they feel their independence is being compromised by the firm's business relationship? If in case you feel that your research is or your like research or whatever project that you are taking is being compromised, in that case, firstly avoid such situation. In case you cannot avoid, may use restricted list to avoid conflict of the interest. So you can say these following firms I will not be covering or we will not be able to cover, right? Simply inform that since we already have a business relationship with them, I will not be issuing equity research report on them. Then what should members do if they are pressurized to give favorable reports for a company, their business for companies their firm does business with? If you are being pressurized, we have a very good relationship with the company, let's say Hero MotoCorp, you have to issue positive report for them. You will say no, you will refuse such pressure and make sure the reports are based on independent research. If the pressure continues, then report it to your supervisor. Okay. Then can members rely on firm's compliance department to stay independent? There is a compliance department from the firm. Can they rely on them? Like, sir, they were pressurizing me. I reported to the compliance division. Now, like, I have to issue the report, so I'll continue working. Now, if they are pressurizing, compliance division is also saying, you can issue like biased report. Please don't try to spoil our relationship. So can you say, sir, I reported to the compliance division, my work was done? No. Ultimately, you are held responsible. Ultimate responsibility of making sure that you are independent and objective, you are following the code of ethics, is of members. Okay. You are ultimately responsible. Okay. So we are done with A and B. 1A, 1B done. 1C, it's very, very easy, but a lot of questions are there. Members and candidates must not knowingly make any misrepresentation. हिंदी में बोल रहा हूँ, जानबूझकर गलत चीज नहीं बतानी है. Relating to investment analysis, recommendation, action, or any other professional activity. That means you are not supposed to misrepresent anything knowingly. If it happens accidentally, then it is fine. Let's solve questions on this. What does 1C prohibit member for and candidates regarding misrepresentation? You should not knowingly make any representation related to investment analysis, recommendation, action, or any professional activities. We just saw it. What are the key areas where members and candidates must avoid representation, misrepresentation? So where you should, like, you have to avoid misrepresentation. Questions will be discussed regarding these topics only. Investment practice, you should not misrepresent anything. If you're reporting your performance, you should not compare it with some wrong index. You should not be misreporting it. We'll discuss this in the upcoming questions. Social media, don't make false claims, etc. If you know something that is negative for you, you intentionally omit it. That is again misrepresentation. Untold information is also a lie. Plagiarism, copying the work of others, work completed for the employer. So this is something that we need to discuss. Okay, what is a misrepresentation? Basically, any untrue statement. That is, basically it is a lie. Untrue statement is a lie. Is a more sophisticated word for lie. Omission of a fact. You know something, but you have not intentionally included it. Any false or misleading statement. Untrue statement, false statement, misleading statement, because of which investment decision process will be impacted. That is misrepresentation. Can members guarantee specific returns on a volatile investment? If let's say a client comes to you and say, sir, I have 1 crore rupees, I want to invest. So can you guarantee me certain returns if I invest in equity market? You will say no. If you are investing in volatile instrument, guarantee cannot be provided. But can you give guarantee that if you invest in, let's say, an FD by SBI for next 3 years, you will earn 6-7% interest per annum? Can you guarantee this? Answer is yes. Because see, can happen, SBI can also go bankrupt and lot of things can happen. You are providing guarantee on an instrument that is not volatile in nature. By default, see, default can happen, government bonds can also default, everything can happen. But for instrument that provides guarantee, you can also say, okay, you will earn fixed return. But equity kind of instruments, you cannot say. Derivatives, you cannot say. How should member handle performance reporting to avoid misrepresentation? Performance reporting, how your fund have performed in last 1 year, 2 year, 5 year, how it compares to benchmark. So firstly, select appropriate benchmark. Let's say if you invested in small cap shares and you are comparing it with bond returns. You cannot benchmark bond returns with small cap shares. Maybe do it with NSE small cap index. Then it is fine, small cap versus small cap index. Or if you have invested in bond, can do it with bond index. That is fine. But you should not be using inappropriate benchmark so that your performance looks very good. For comparison, ensure transparent reporting. Whatever is there, report it properly. Misrepresenting performance by using benchmark that are not comparable or cherry picking account is prohibited. Cherry picking account means, let's say you invested in small cap stocks. You invested or managed 4 fund or 4 accounts, 4 individual accounts, right? 1 crore each. Now this account generated, you invested in different shares, different weight is there, generated 20%. This generated 30%. This generated -10 and this generated -20. So average will be 20 gone, 30 and 10 is 20 divided by 4, that is coming as 5%. Average is 5%. But if you don't report this, you are cherry picking, then your average will be visible as 25%, 20 and 30. So you cannot do that. Include everyone, right? Every account that you have managed. Cherry picking is not allowed. Using false benchmark, non-comparable benchmark is also not allowed. How does misrepresentation occur in social media? So when you distribute incorrect information, when you intentionally, let's say you are running a blog where you say, I expect this share to go up because of XYZ reason, and it is all hoax, it is pump and dump scheme that you are promoting, then it is a misrepresentation on social media. Misrepresentation through social media happens when members or candidates distribute misleading or incorrect information about investment or their qualification. Yes, you can also put wrong qualification, CFA with 10 years of experience, but you have hardly 2 years of experience. That can also be there. The standard of CFA code apply equally to social media as to traditional communication. So it is applicable universally. What is considered plagiarism? Plagiarism means copying the work of others without giving them credit. So if you have seen a lot of YouTube videos good reputed channels, whenever they use clip from some other channel, they put okay, source, credits, something like this, right? So if you don't do it, that is plagiarism. You can use others' work, but give them credit, right? If you don't give it, then that is credit. So copying work of others or using other material without proper acknowledgement, including maybe you're copying someone research report, someone article, some statistical data which someone else have collected, then you have to give them proper credit, okay? You have to credit the original author and the source in all the form of communication from where you got that particular information. Give credit to the original author. This is important. Original author. Why this is important, I'll discuss. What if you have got information, some original author published some report, some other website copied that report and you copied that website. So should you be giving credit to the author or that website? We'll discuss that. Is it a violation to omit critical information in investment analysis? You're hiding a fact. You're not telling you're not telling lie, but you're hiding something that is as good as a lie. Yes, omitting key facts or input that could affect the outcome of analysis is misleading. Okay. Then I'll just read this as well. Model and outcomes must be presented with transparency about their assumption. So if in case some outcome is based on certain assumptions, like the stock will give good returns, positive returns, 5, 10, 15% if the interest rate falls below this level. So disclose that assumption that it is based on the assumption that interest rate goes down. How should members handle research or models created by former employee? If in case there is a team in which 5 people are working, one of the person have developed a model and other people are maybe involved in some other thing, but the same team. Now that person has left. Now how do you deal with that situation? If in case a former ex-employee have developed a model, it belongs to firm, right? It belongs to firm. Can the firm have to give credit to that employee? Answer is no. Belongs to the firm and can be used without attribution. You don't have to tell, like whenever research report is published, go and check at the end of each research report by good like Barclays, HSBC, you'll find in the end report prepared by some name and generally CFA is written before their name. So if in case you have to give their names, right? But in case that person leaves your firm, you don't need to necessarily attribute it to him because that research ultimately belongs to the firm. However, members or candidates must not claim the work solely under their own name if it was initially prepared by others. And if it was a team effort, you cannot say I have only done it. Let's say in the previous example, 5 people worked on a research report, created that report. Now one of the person left the firm, joined another firm, joined competitor. Can he say I did this work in the firm? It was only me? No. He can say we did a work on this, our team did work on this, but he cannot claim it was solely my work. What are the recommended procedure for avoiding misrepresentation? How do you avoid misrepresentation? Present factual information of qualification and services. So like don't misquote qualification, services, past returns, anything. Give factual information. If in case there is a third party information, verify it before distributing it. We'll discuss this in some time. Maintain and monitor websites for current and accurate information. So like whatever data is made available on a particular website, cross verify it. Implement policies to avoid plagiarism, and like a firm should implement policies also so that plagiarism is avoided. This is mostly at the firm level. At individual level, these things will not be there. Can members use third-party research without acknowledging the source? If I have to present a report or prepare a report, I am using a research done by, let's say, some other person or some other organization. I have to give them credit. Members may use third-party research, but they must disclose that it is not their original work and provide proper attribution. You can use their work, but give them proper attribution and let everyone know it is not your original work. Okay, just a second.
What should members do when providing information from third party source? If you're using some other research or some other article, etc., prepared by someone outside the organization, and now you're using it to provide certain information, then whosoever have done the research, and you cannot say I'm solely relying on it. You have to verify the accuracy of third party information and disclose that information comes from external sources. Okay. Say, but how do I verify? So give your best efforts. Like if someone have done research and given some numbers, obviously you cannot go to the back and check their numbers, but at least check what sources they used. Make your best efforts. Okay. How should members approach selecting benchmark for performance reporting? So you have to report your performance against a benchmark. So which benchmark to select? So most appropriate benchmark that reflects the investment strategy. Small cap investment strategy should be compared with small cap index. Maybe a gold investment strategy should be compared with gold index, gold prices, right? They should explain the choice of benchmark to the clients and avoid misrepresenting performance by using benchmarks that are not comparable, and disclose like which benchmark you are using and why you are using it. Okay. Then what should members do if they discover, everyone focus, you're losing attention, I can sense that. What should members do if they discover typographical error in performance material that were already distributed to client? You found an error, typographical error, not like, it's not an intentional thing. Typo is there. Instead of, let's say, reporting 6% returns, someone like maybe reported a 16% error or 1.6% error. There is typographical error and it is distributed to everyone. So immediately correct the error by informing everyone who received the incorrect information. Okay. Failure to correct known error is violation. So if you know you have done misrepresentation accidentally, now you know it, inform everyone that I have done the misrepresentation. How should members handle outdated information in marketing material? So many times you publish our returns versus other funds returns, our returns versus benchmark returns. So in case you're using bit outdated information, so how will members handle it? Firstly, update it, right? Update it. In case there is no update available, in case like you cannot update it, then in that case withdraw any outdated marketing material to avoid misrepresentation. Then don't give information. If in case, let's say, you have information about returns till 2023, now you are in 2025, you don't have data for last 1 year, in that case you can also avoid putting this information, right? Don't put it. Withdraw any outdated marketing information. Using outdated fact sheet or performance report can mislead clients regarding current risk. Okay, so what they are telling over here is, let's say from 2020 to 2023 my fund gave exceptionally good result. Now I'm in 2025. 2024 have been bad for my fund. So can I just give information from 2020 to 2023 and ignore 2024? Answer is no. If it is a bad performance, you have to report it. You cannot send outdated information to the client. Fact sheet is basically like where all the details about funds performance, returns, etc. is there. So don't include basically outdated information. Either withdraw it or update it. Okay. What is required when using social media for professional communication? If you're using social media for professional communication, again, avoid misrepresentation there as well of qualification, investment recommendation, etc. What is the responsibility of member when using external managers in investment practice? When you are taking help of some external party, in that case, what is your responsibility? Firstly, disclose that you are using help of some external party. Okay. Ensure your clients understand the investment practice of those external parties, are not being misrepresented as firm's own. If you are taking help of some other firm or some other, you're like basically outsourcing certain work or like asking someone else from the outside the organization to pitch in for a particular project, let client know about it. Okay. How does standard 1C apply to performance reporting for illiquid or non-traded security? Basically, mostly it is OTC security. See, what happens with OTC security is, on one counter it will be, let's say, at 100 rupees. Since it is illiquid, on another counter it could be 102. On another counter it could be 95. So what is the real price? It's 95, 100 or 105. This will influence my return calculation, etc. as well. So firstly, you should not shop for high valuation. 3 prices are available. Let me go and pick 105, because of which my returns will be much higher. Not shop for high valuation from different providers to inflate the value of illiquid security. Provide accurate information, consistent valuation to avoid misleading and overcharging fees. So basically, inform your client it was available on 3 counters. The prices were 95, 100 and 105. Maybe taking weighted average or simple average of it. On an average, the price seems to be around 100 rupees of this particular security. Don't shop and say 105 is the price. Disclose the entire information. How can members avoid misrepresentation in oral communication? Like maybe in meetings, in presentation, over phone call. Make sure whatever comes out of your mouth is accurate. All the statements are accurate and not plagiarized. In case there is any plagiarism, then you will violate. So you let others know that it is not my research. I got to know this from this particular source. Okay. Any idea or data from other source must be attributed even in informal discussion. I think pretty understandable. Don't steal anyone's credit, right? This is the gist of this entire thing. How should members handle incomplete model or technical analysis in investment recommendation? So if it is an incomplete model, it will lead to, like, let's say you have to do a valuation and basis that you have to recommend buy, hold or sell. But you will be getting commission when you issue a buy report or sell report. Hold will not generate any commission, right? For your team. If someone buys or sells through you, you will earn your commission. So what you did was you shared a particular information or particular analysis that is partly revealing the truth. Like it's a technical analysis. Stock have went up, down, up, down, up, down, up, down. Now you know it is trying to break this, but it is not able to do it. There is a high probability it will keep moving around this level for some time. Ideally it should be hold. But you say, sir, I believe this time it will break. So please buy it. That is, you are giving incomplete information about investment recommendation, or you are using incomplete model. So avoid omitting key inputs or assumption in the model. If in case it's a key assumption or input, use it or analysis that could mislead the client. You are misleading the client, okay? They should clearly explain if in case there is limitation, if in case there are certain assumptions, disclose it to the client. Okay, our thesis is this based on this assumption. We discussed this earlier as well. Ensure transparency. What is the role of a firm policy? What is role of firm policies in preventing misrepresentation in performance reporting? What about firm policies in misrepresentation of performance reporting? Performance reporting is basically giving your performance by comparing your performance with a benchmark, comparing your performance with another fund index, right? So what is the role of firm's policy? First of all, firm should have a strict policy for composite construction and performance reporting to avoid cherry picking. Composite construction and performance reporting. Composite construction means you cannot handpick. All the accounts should be reported together. Like maybe you can take average, that is fine. But you cannot say I'll not take into account the negative returns and will take only into account positive returns, or manipulating the data to inflate the results. Members should ensure their firm policy promote honest and accurate reporting. So that is, I think, fine. What should members do if they identify, if they identify misrepresentation in client reports or marketing material? If in case you have not done it, we are finding it in client's report or marketing material produced by your firm. In that case, what will you do? Correct that misrepresentation. Correct any misrepresentation that you have identified and work with their firm to ensure all the materials are updated. Simple. Failing to address a known misrepresentation. Dhyan rakhna everyone. If you know it is wrong and you're not making any efforts to rectify it, then it is again a violation. How does 1C address the use of issuer paid research? Issuer paid research, we have discussed this. TCS or I think Hero MotoCorp is funding me so that I can issue a report on them. So you have to disclose the nature of any issuer paid resource. In that research report, write that this is sponsored by Hero MotoCorp and ensure that their analysis remain objective. So that is fine. It should not be influenced. Failure to disclose compensation arrangement with issuer violates in case 1C and 6A. So if in case you are not disclosing, 6A we'll study later, in case you are not disclosing the compensation, you have to tell that it is a paid research, we are getting compensation, but you have made sure our objectivity is maintained. Disclosure of conflict, so I think this is like disclosure of conflicts, presentation and ensure comprehensive coverage of the material. Okay, so that is done. Okay, this is question 23. So how many questions are there? So I have tried to cover most of them, but obviously like it takes a lot of time and efforts. 45 questions are there answering your query. Okay, it takes a lot of energy for me also to like continue delivering the same thing at the same pace, but we have to do it. I want 90% for everyone. Make sure you revise this. Maybe watch this video a couple of times, 2-3 times. Practice question at least once, right? Okay. What steps should member take to avoid plagiarism when using external report or studies? So you are using some external report to do your own research. So how should you make sure there is no plagiarism? Firstly, maintain copy of all the sources. Like basically from where you are getting the information, keep the sources handy. At the end of each research report, you will find the sources. Properly attribute all the direct quotes, data, table, ideas used in the work. Let's say I have copied a table. Like whenever I prepare your notes, I write here that it is taken from CFA Institute's material. If you see Schwezer book as well, they give, in case they use any table prepared by CFA Institute, they give credit to CFA Institute. Otherwise it will be plagiarism. So maintain copies of all the sources and proper attribution of codes, data, tables, ideas you have used in your work. Their work, like you have used their work in your work. Failure to acknowledge the original author of external material is plagiarism. What should members do if they disagree with third-party research but are pressured to use it as their own? If let's say you have done your research, third party have also done the research, and both of you have reached different conclusion, but you are now, maybe you have reached negative conclusion. Let's say a research says you should be investing into EV sector. Your research says you should not be investing into EV sector. Now you are, because if you don't act on it, you will not be able to maybe get some contracts, get some clients. So you are being forced, discard your research and use the other one and give it the credit. So members must not submit or distribute any report as their own if they disagree with its finding. If you don't agree, don't spread. They should either add their own analysis. So you can say, like, this is what original source is, this is what I think should be the one, and then circulate it, right? Add their own analysis and disclose the original source, or refuse to use the report if it compromises the independence. If in case like you are being pressurized, then simply say I won't be able to do it. Okay, don't submit, don't distribute. If in case you are being forced to distribute, put your opinion also. If in case that is not possible, then don't submit it or don't circulate it. What actions violate 1C when members rely on second-hand information from media source? So you might have heard about secondary research, where you are not getting on ground, you are getting on Google, searching so many information about a particular topic, and then you compile all this information, right? That is secondary research. So if you are using secondary research, second-hand information, like someone researched, some other person created a report, like someone research created a report using like a report of this person, some other person created their own report or put their own opinion. Now you're using this person's opinion, but still you have to give credit to the original source. Must cite the original source of information rather than the media intermediary. You cannot, let's say you find some article on news website. That research is done by, let's say, World Bank. So you'll not say as per the article of CNBC. You'll say as per the research of, or as per the research of CNBC. You'll not say this. You'll say as per the research of World Bank. You have to avoid using the media intermediary, cite the original source. If they rely on second-hand information that is inaccurate, they risk spreading misrepresentation. Best practice is to obtain the original source before using it. So if in case like the media house is using the second source, then there might be like, don't use them, because what happens is original research, media house will put their own analysis and you are using their analysis. Go back to the first one, because media house is biased, you don't know, right? Then what are the risks of using outdated or inaccurate research in client report or recommendation? Outdated, inaccurate, it is a clear-cut violation, because you are not giving them the current market information, or you are giving them half-baked or old information, inaccurate information. This will lead to poor investment decision, violating 1C. You should make sure every information is current, accurate and relevant. What should members do when they discover misrepresentation made by third-party research provider they relied on? I relied on CNBC, or I don't want to take any name. I relied on some news, right? Now I found out that there was some misrepresentation done by them. Then what should we do? Stop using that, simply. Stop using misrepresented information, number 1. Correct it by informing clients of the error, number 2. Make sure, or they must ensure, that the future reliance on third-party research includes, and in future verify the accuracy so that you avoid the further misrepresentation. That's the reason, right? From where you are picking up the information, they might have diluted the information, they might have made changes. Don't rely on them. Go to the first source. So what's the guarantee first source is correct? There's no guarantee, but at least whatever biases we can avoid, we are avoiding. How can members avoid misrepresentation when describing their qualification or those of their firm? Misrepresentation when describing your own qualification. So how do you do that? Make sure whatever you are telling about your qualification, experience, service, like a 2-year experience, you cannot say I have 8 years of experience. If you are not a CFA, don't write you are a CFA. If you are a CFA Level 3 candidate, write CFA Level 3 candidate. And services are accurate and not exaggerated. If you have generated, let's say, 12% return on an average in last 3 years, please don't cherry pick the accounts where the returns were substantially higher and report that. They should provide client with truthful representation of their abilities to avoid implying that qualifications are greater than they are. You cannot say I'm a CFA, first attempt clear with maybe expertise into this, unless you actually have it. How should members handle situation where different pricing sources provide varying valuation of illiquid security? I think I told you this earlier as well, because CFA Institute will ask you question in a very twisted way, different forms. I think that's why it is getting repeated over here. Do not chop. If 3 sources are available, mention all 3 of them. They should consistently use one reliable pricing provider and disclose any changes in the valuation method to the clients. Okay, so maybe if in case like if you're using one, then use this over the period. Like first year, maybe you are using Bloomberg. Second year, you are using Refinitiv. You cannot do this. Bloomberg, Refinitiv are the sources where you can get information about the OTC securities, right? Prices. So you cannot do this. If you're using Bloomberg for each year. If 3 sources are available, report that 3 sources are available. We have picked Bloomberg. Now we will continue to use Bloomberg in the upcoming years as well. What is the appropriate way for members to handle composite performance reporting to avoid cherry picking? What is composite performance reporting? Reporting of all the accounts that you have managed. Selectively including the best performing ones to inflate the performance is violation. Report all the accounts. Good, bad, positive, negative returns, everything. What should members do if they are asked to approve misleading promotional material? Someone is saying it is misleading, but I won't be able to put forward this unless you approve it. In that case, what will you do? Firstly, like refuse it. Don't approve any misleading material, any exaggerated claims, and ask your firm to revise the material and ensure that they are accurate. Okay. Then how can members avoid misrepresentation when comparing their firm's performance to benchmark? Select the comparable benchmark. Okay. If a benchmark is not a good reflection of strategy, members must disclose and explain the reason. If in case there is no benchmark available, then in that case, at least give this disclosure, no benchmark is available, right? If benchmark is like you have to pick up a benchmark, it is not very appropriate, so maybe pick it up, but at the same time disclose that since other benchmark is not available, then we have to go with this. What should members do if they discover their firm has been using inaccurate performance reports for marketing? In that case, ask them to stop. Should take immediate corrective actions. Inform the affected clients. If in case something wrong have been going on, you're giving inaccurate report, maybe accidentally also, or like knowingly as well. Inform all the clients and stop doing that. If you continue to do this, it is misrepresentation. How should member handle investment strategies that do not lend themselves to clear benchmarks? So there are many like the client portfolio is 10% into gold, 20% into Bitcoin, 30% into equity, 40% into real estate. There is no benchmark that is composite of all this, right? That includes all these indices, right? In that case, how do you manage? In that case, this is the same question. How do members handle investment strategies that do not lend themselves to clear benchmark? Then clearly explain to the client complexities of the strategy, or maybe you're using some derivatives to like do hedging, buy, sell. So there is no clear benchmark available. Why a standard benchmark may not be appropriate. Let me erase this. May not be appropriate. They should avoid using misleading benchmarks. Okay. Then next, let it go. What steps should member take to ensure accuracy when using social media for professional purpose? All the information shared is true, correct, accurate, current, in line with CFA Institute. Any form of communication, traditional, in-person, writing, social media, the same thing will apply. Focus everyone over here. I think you are losing your focus. What I'll do is, do one thing, I'll continue to teach, but if in case you want, you can pause this video, take a chill pill. After, let me finish the remaining questions. Then we'll be left with D and E. So D have its own almost 35 questions. E is relatively new, so we don't have a lot of questions on that. Okay, so almost 55 questions plus these ones we have to do. Almost 60 questions we have to solve. But that is very important. So after doing these 5-7 questions that we have over here, you guys can take a break and we'll resume post break. Okay. Chal. How should members approach the presentation of complex model or analysis to avoid misrepresentation? It's a complex model, complex analysis. How should you make sure that there is no misrepresentation? Firstly, present it in a way that your clients understand it. Do not use unnecessarily difficult diagrams, unnecessarily difficult terms, number one. Make sure You do not omit the important information or assumptions and limitation. Important assumption, limitations, assumptions are not omitted. You have to disclose everything. Pros and cons of the model, assumptions and limitations of the model. And misrepresenting the results of a model by failing to disclose key inputs can mislead the clients and give them key inputs as well. So what all you have to disclose? Firstly, presentation should be simple. It should be understandable to the clients. No omission of important information, assumptions, inputs and limitations. Okay, no omission should be there. What should members do if they are aware of potential misrepresentation in their firm's advertising but are not directly responsible for the material? So if there is a firm, your firm is doing some misrepresentation. It's not connected to you. It's, let's say, some other team that is doing it. But you notice it. In that case, what will you do? Firstly, bring it to the attention of supervisor. Let your supervisor know or compliance team know that there is a misrepresentation. We need to correct it. And if they are not directly responsible, allowing the misrepresentation continue without any action violates. So if in case you see and you say, it's not connected to me, what to do? I'm going to continue my own work. If you notice something that is wrong, at least try to rectify it. You have to disassociate yourself as well, but it is not in your team already, so at least bring it to the attention. And if they don't do it, then you cannot say, like, here is a gun, you have to do it. My standards say me. No, report it. Now it's their job, whether they want to do it, how they take care of it. Firstly, you have to report it to your supervisors. If they do it, that is fine. If they don't do it, that is also fine. But if you don't take any action, that will be wrong. What constitutes plagiarism in research reports and how can members avoid it? Plagiarism is copying others' work without giving them proper acknowledgement, attribution, right? So others' work including like report or maybe a chart or an idea. How can you do it? By crediting the media house, by crediting the original author, citing the sources. And if in case a permission is required, this was not there earlier, a permission is required that you have to take permission from third party before putting their results. And if you do it without their permission, then again it is plagiarism. Take permissions wherever required. Okay, you are giving them acknowledgement but they never permitted you to do it, so it is plagiarism. What should members do if they are asked to sign a research report based on other analyst work without proper attribution? This is interesting, actually really good. So you are a CFA charter holder. You have to sign a research report. You have to tell it is my research, right? Based on the another analyst work without proper attribution. You have to sign a research report. Some other person have done this and you are not giving him the proper attribution. In that case, don't sign the report. Refuse to sign the report unless accurately acknowledges the original author's contribution. Basically, you are not promoting the plagiarism. Signing a report that misrepresents not only the information but its source is a violation of 1C. Okay? Are you fine with it? Okay. What are the consequences of omitting negative information in a research report or investment recommendation? Omitting negative information. It is as good as misrepresent. Half untold or untold information is a lie. Gives misleading picture. This will give negative information, can give misleading or will give misleading picture. Therefore, can lead to poor investment decision, therefore a violation. Okay. You have to provide balanced analysis, that is, you have to include both negative and positive. What is the best practice for member using data from multiple sources in their research report? What is the best practice for members using data from if you are preparing a report and you have used data from 10 different sources, so what is the best practice for you? You should, each data point that you have used should be credit to the original author, right? Even if they are combining information from multiple sources, this ensures transparency and avoid misleading client by presenting the research as their own work. If you have compiled 10 different sources, give 10 different like citations, okay? So last 3 questions, everyone focus. How should member handle situation where they use a model or tool created by another analyst within the firm, let's say who now left the firm. He was working with the firm, he developed the tool, but now he has moved out. So see, whose property it is? Does that person have right over this or the business have right over it? The business have right over it. So members may use model developed by another analyst in their firm without attribution, right? If it was developed by the firm, then it belongs to the firm. You don't need to give them. If that person has left, you don't have to give him any attribution, right? If that person, everyone focus, if that person is working with you and now he developed a model, then he left. Some other person is using that model. Do I need to give attribution to that person who left the firm? Answer is no. But sir, what if he is still working? In that case, you have to give him the attribution. He is your employee, you have to give him the attribution. If he leaves, the firm doesn't need to give him any attribution. But he is still working with us, then you have to give him attribution. However, they must ensure that they are not presenting the model as their own creation if the original analyst is still staying in the firm. This person, see, there is person A and person B. Person B developed the model and left. So person B will not be credited by the firm. That's it. But let's say person A is using person B's model and he is not left the firm, he is still working. So A cannot say it is my model, belongs to the firm, right? A cannot say it is my model. Must ensure that they are not presenting the model as their own creation if the original analyst is still working with the firm, okay? What steps should member take to verify the accuracy of third-party research before presenting it to the client? If you are presenting anything basis the third-party research, you cannot blindly use it. Make reasonable efforts to verify its accuracy. Members should perform due diligence to ensure third-party research is reliable, has reasonable basis and compliance with CFA code and standards. Avoid relying solely on external report without verifying the underlying data. Whatever you can, you should try to do it, okay? How can members avoid misrepresenting their own qualification or capabilities of the firm? I think we discussed it earlier as well. Same answer over here. Accurately or factually describe your qualifications, services that you have to offer without exaggerating the experience or expertise, and should ensure that any promotional material or client communication reflect the true capabilities, not the exaggeration of the firm, okay? With this, we complete 1A, 1B and 1C. Here we are. This is done, this is done. Now this is also done. Misconduct and competence is pending. Now let us move to misconduct.
Let's do 1D and 1E together, misconduct, okay? So members and candidates must not engage into any professional conduct. In your profession, you should not, do anything related to dishonesty, fraud, deceit. So basically I'll just write fraud. Professionally, you cannot do fraud or do any act that reflects, so it could be a professional act or non-professional act that reflects adversely on your professional reputation, integrity or competence. So basically not do anything wrong in your profession, any fraud in your profession, and outside profession also and within profession also, you should not do anything that reflects on the integrity or competence or the reputation of CFA designation, right? So no one should be able to challenge your competence. By the way, for this we have competence as a separate standard. This is added in 2024. Let's read this as well. Member must act and maintain the competence. Basically, it is your responsibility to remain competent, to update yourself. necessary to fulfill professional responsibilities, because the world is changing so quickly. Every day there is something new coming up, so you have to make sure you update yourself. Okay, so as a teacher, my responsibility is to update myself and teach you this. Actually, this is about that. Okay, so I hope this is clear to you. Now we'll be solving questions. Okay, so let's skip to the questions. Okay, misconduct. Firstly, what does standard 1D prohibit for CFA members and candidates? What does it prohibit? Professionally, don't do any fraud, number one. Within and outside profession, don't do anything that reflects adversely on CFA designation or competence, right? Then how does standard 1D differ from 1A? 1A was related to compliance with laws and regulations, and 1D is related to any conduct, even if it is not illegal. It can be legal, but if it reflects adversely in your competence, professional reputation, it is legal, but if it does, then you will be charged under 1D. Even if it is not illegal, that negatively impacts professional integrity, reputation and competence of a member and candidates. Can behavior unrelated to professional activities violate 1D? Answer is yes. Any activity that you do that reflects adversely on your professional competence, etc., right? So yes, if personal conduct negatively affects members or candidates' ability to perform professional responsibility, like you are there for visiting a particular site and gave a research about it, but you consumed alcohol and then you created chaos there. So you have done it in your personal capacity, you might have done it outside your duty hours, but still you are reflecting adversely on CFA designation, your competence, professional reputation, so you will be charged under 1D. Like abusing alcohol during business hours could impair professional competence. What we have taken is outside business hour, they are saying within business hours also. Okay, so if in case, let's say you have to take a decision, like Gurgaon recently have started, you will be served wines and beers within office, you don't need a license for it, but it is your responsibility to consume that much, after which you can take sane decisions. Okay, does personal bankruptcy automatically violates 1D? Personal bankruptcy, if I became bankrupt, is it violation of 1D? Is it negatively reflecting on my professional reputation, integrity, etc.? Personal bankruptcy does not necessarily violate 1D. However, if you are bankrupt because of a fraud, then it is a violation. Normally it is not, but let's say you did some fraud, then police caught you, then sold your assets and tried to replenish the losses that others have suffered because of you, and you became bankrupt in the process. It is a violation of 1D. Can a lack of due diligence in investment recommendation be a violation in 1D? You are giving someone, you are saying buy XYZ share without doing research. You might have heard about it, or you might have just gone through the company's financial and quickly you have seen, okay, sales is growing, company is profit making, let me give the recommendation. Without doing proper due diligence, proper research, if you make investment recommendation, is it violation? Yes, because it is reflecting adversely on your competence. Professional reputation is gone. Can using CFA Institute code and standards to settle personal dispute be considered as a misconduct? Answer is 100% yes. If you want to settle some personal, political, unrelated disputes, this violates the 1D. So basically, you cannot use professional code of ethics for your advantage. It is a guide for your behavior, how you should be carrying yourself, but you cannot use it to threaten someone, you cannot use it to for your personal advantages. What are some recommended procedures to prevent misconduct under 1D? Some recommended procedures are: develop a code of ethics for employees. If an organization is involved into, let's say, investment management, fund management, develop a code of ethics, like how your employee should behave. Number one. disseminate a list of potential violation and associated sanctions. Prepare a list. If you do this, it's a violation, and because of this will be the consequences. Conduct reference check to ensure employees are of good character. So basically do background check, like surprise audits could be there. Then what constitutes professional misconduct in the context of use of alcohol at work? So alcohol consumption over the years I have seen have increased a lot. Even at workplaces now prefer, sometimes people have it, or maybe during breaks in a professional meeting they are ordering alcohol, and that is fine. I'm not judging them on the morality, but make sure excessive drinking during business hours, especially when it impairs your judgment. You drank too much that now you are not able to take sane decisions, constitutes professional misconduct. For example, investment officer who became intoxicated during lunch and makes investment decision violates 1D. So what to do in this case? So like I was having a discussion, if like we also run an office, right? So if some employee consumes alcohol maybe during break, or maybe some, like it's, let's say 45 minutes 1 hour of time he is having, so if he consumes some alcohol during this period, we mostly say you can take a off now, like off as in come back tomorrow and continue with your work. Right now you don't need to work. Okay, now how does dishonesty in personal conduct like altering health insurance reimbursement forms violate 1D? So fake health insurance claims or something, anything else, it is a dishonesty in your personal life. What like will it violate? Answer is yes. Any dishonesty, fraud, deceit violates standard 1D regardless of whether it directly impacts investment activity. So sir, I cannot commit fraud in my personal life as well. Yes, you should anyways not be committing. Okay, can members violate 1D through misconduct in charitable activities? You're doing some charitable activity, it is a non-professional activity. In a non-professional activity also, can you violate 1D? Answer is yes. We learnt above as well. In personal, non-professional, you can do it. Like example, an analyst who inflates the price of charity purchases to repay personal debts violates the standard by engaging in fraudulent behavior. So unnecessarily you are putting in the fake bids so that the prices goes up and maybe you earn more commission, etc. It is again a fraud. Okay, next one. Are acts of civil disobedience a violation of 1D? So like breaking any law basically is violation of 1D. Answer no. Like if I break traffic signal, whatsoever reason, I was in hurry or I was ignorant, whatever. So have I violated 1D? No, it is not reflecting on my professional reputation. Is it a fraud? Is it a deceit? No. It just broke a law, right? So I should not be charged under 1D. So act of civil disobedience that results in legal issues like trespassing or breaking a traffic signal generally do not violate standard 1D. This is a tricky question, and if they do not, obviously if it reflects poorly on your professional like reputation, then it does. Otherwise it does not. Okay, what should members do if they observe potential fraud activity in their firm's reporting? If in case you are working in a particular business and you observe your business firm is engaged into fraud, you are not doing it, others are doing it in your firm, then in that case what will you do? Answer is, firstly disassociate yourself, report this activity to like the legal counsel or take help, let supervisor know about it. So members should follow internal procedure to report potential unethical activity. Do that. If internal reporting does not resolve the issue, if something unethical is going on and it does not resolve the issue, if you have internally reported and let's say the people who are within the organization are involved into this, in that case they may consider reporting it to appropriate regulator following the guidance for whistleblowing in standard 6A. We'll discuss about 6A. But sir, last time you said, sir, you don't have to report it to anyone else. That was under 1A. 1A don't ask you to report it unless there is a law for it, right? Follow the stricter law we have said. Here what we are saying is we have observed a potential fraud. Under 1D, what should you do? So under 1D, firstly try to like report it within the organization. If that works, well and good. But if it does not work, sometimes let's say you are observing MD etc., the senior people in the organization involving into some fraudulent activity. Now you know it. Go through the whistleblowing policy, right? We'll discuss it over here. Okay, so you can mark this with a star because there is something that is yet to be discussed. What should a firm's code of ethics include to support principles of 1D? So if it is an investment management firm, it will have its own code of ethics. What should it include so that it support principle 1D? It should clearly state personal behavior reflecting poorly on individual, firm or investment industry will not be tolerated. If in case you behave in such a way, it tarnishes the professionals, like this particular industry image, firm's image, then it will not be tolerated. It also provide example of violation of associated and discipline. So also give like these are the list of violations, exhaustive, not exhaustive lists, and what are the disciplinary action that will be taken. How can firms help preventing hiring individual who might engage in misconduct? If you want to hire someone, how does a business check that hiring this person, like this person might be involved into misconduct or not? So basically, check whether the potential employee have good character and no history of misconduct or legal infractions that would make them ineligible to work in investment industry. So like I belong to Indore, right? Indore is in a very bad way famous for fraudulent stock market activities. Each of you who are watching this video, if you are let's say 23, 24 and above and have been into stock market, at least once you would have received call from Indore. And like I have met many people who are debarred by SEBI not to access stock market. Then they come to me, sir, I will operate, but sir, I want to use your name, your firm's name, you have got good reputation. It's a clear no. So how, before engaging into any partnership, anyone else, what do? Is I ask them, is there any SEBI notice or is there any something related to misconduct from SEBI that you are like, are you debarred from accessing capital market? Is there anything like this? Have you been summoned by SEBI for any particular case? Were you involved into anything? So I don't have like when I'm doing it on personal level, I don't have any particular written procedures, but I always check the person with whom I'm engaging. I want a long-term relationship. What is his character? How does he behave in a pressurizing situation? This is a check. What if like he's having good character, but he is part of some illegal activities or maybe have been trapped into it? This have also happened. In that case also, it's a clear no from me. Unless you get your legal things clear, I will not be engaging into any business with you. Even few students, I don't want to name anyone, but few students, maybe you are watching it right now, would have like they have FIRs against them, and then like they want to like enroll for the course, and they ask, sir, when you fill the CFA form, right, the pledge that you sign, they ask whether there is any case going against you or not, right? And if I fill wrong information, what will happen? CFA Institute is also doing this character check. Obviously, it is not in line with 1D, but before engaging into any business, it's a life lesson. First thing is not about like how you gel up together. First thing is how good of the other person is. Is he having good character or not? Okay. How does standard 1D address situations where members fail to challenge suspicious activities at their firm? If let's say you observe something suspicious in your organization, but you don't like, you just ignore it, then what does 1D tell? So members must take appropriate steps to address any suspicion. If in case you observe, don't act like nothing have happened. At least report it internally if you cannot go outside. Any suspicion or unethical activity, even if they face pressure not to ask question, failing to address such issue may violate 1D. Because see, what 1D was saying is, it should not reflect anything negatively on your professional reputation, integrity, and in your professional work you should not involve into fraud or deceit or like dishonesty. If you notice something is suspicious, at least bring it to the attention. Okay, if they don't act on it, that's not your part, but at least bring it into attention. Okay, may violate 1D and related standard on supervisory responsibilities. Can conduct outside of work unrelated to investment profession violate 1D? Answer is yes. Conduct outside work can violate 1D if it negatively affects your professional reputation. How does excessive risk taking in investment decision relate to 1D? If lot of risk is taken while making investment decision, how can it be related to 1D? So if excessive risk taking is based on lack of due diligence or inability to properly assess the risk, you're not doing due diligence, or you're taking excessive risk because you're not able to understand the risk properly. In that case, risk as in the volatility of the prices, or maybe if you're investing into fixed income security, then probability of default, all these things. That means you're not competent enough. Therefore, you have acted in such a way which impacts or which negatively reflects on your professional competence, reflects poorly on the members' competence and professionalism, violating 1D. Members are required to act with integrity and sound judgment for all the investment decision. What should members do if they are pressured, everyone focus, to overlook unethical behavior by the supervisor? You found something, you reported it to supervisor, but supervisor is now saying, let it be, chalta hai. It's fine. In that case, what will you do? Firstly, members should not ignore unethical behavior, even if it is instructed by supervisor. If like supervisor is telling you to like just let it be, then report the misconduct through proper internal channel. Maybe someone superior to supervisor, report it to him, like compliance officer. If in case possible and required, externally also if internal efforts are unsuccessful. Can lying or misrepresenting information to client be considered as a violation? Lying is definition of dishonesty. So yes, it is violation of 1D. How does 1D apply to members' behavior on social media? 1D and social media. I think you all guys will be able to relate more with it. You should ensure even your conduct on you cannot be bully on social media, right? You cannot be like engaging into frauds over social media. Whatever you do in real life, the same principles apply in the social life as well, right? Social media, even in non-professional context, does not reflect poorly on their professional integrity. Let's say I start YouTube channel, I start promoting buy the share, and I say I'm a CFA, trust me, without doing any research. I have not done it in real life on the floor, but I have maybe done it via Instagram ads or maybe YouTube channel or maybe Twitter. Then it is a violation of 1D. What should a member do if they become aware of fraud or deceit within their firm? I think we have discussed this. CFA Institute asks questions in multiple ways. Now you have not reported to supervisor, you are just aware of it. In that case, what will you do? Follow internal reporting, report it to supervisor, disassociate yourself from the unethical activity if possible, if you are involved into it directly or indirectly. If in case internal efforts fail, then like supervisor don't take any action, report it to his senior. If in case he is also not taking any action, if possible you can report it to external regulators as well, following whistleblowing policy. But we have to discuss this whistleblowing, right? That will be discussed in standard 6. So right now putting a star over here. Can failure to fulfill professional responsibilities due to negligence or lack of efforts violate 1D? You are negligent. It is you're not able to deliver the expected results because you are negligent. You tried your best and investment generated negative returns, that is fine, but you are negligent. In that case, yes, negligence or lack of efforts in fulfilling professional duty can violate standard 1D. It reflects poorly on your professional competence and integrity. Okay. Does misconduct in personal finance matter, such as personal loans, bankruptcy, automatically violates 1D? Answer is no. If in case, let's say, you're not able to manage your loan, if you missed your EMIs, is it violation of 1D? No. Until unless it reflects adversely on your professional conduct, or maybe it is because of fraud, etc. you have done, then it is violation. What should a firm do to prevent violation of 1D by its employees? Like we have studied this earlier. Here it is. Develop a code of ethics, disseminate a list of potential violation and sanctions, check their character. The same thing will be over here. Implement code of ethics, provide training on potential violation, conduct through reference checks before hiring employees to prevent unethical behavior. Employees should be aware of the consequences, yes, including termination. How does 1D address conflict of interest that lead to unethical conduct? If in case there is any conflict of interest and because of which there will be any unethical conduct. So 1D prohibits any dishonest behavior, including situation where conflict of interest results in unethical decision. If there is conflict of interest and because of which you have to take some unethical decision, it is violation of 1D. Okay, because you are compromising the integrity of CFA. What constitutes fraud and deceit? So this question ideally should have been much earlier, but anyways, what constitutes fraud and deceit? Intentional act of dishonesty, like falsifying documents, misrepresenting facts, submitting false travel, insurance, etc. expenses, manipulating financial data, P&L, balance sheet. Any such behavior reflects poorly on the personal integrity, professional integrity of the member. How does 1D apply to whistleblowing? Whistleblowing. I hope you understand whistleblowing. If something is wrong going in the company, you notice it, you let everyone know about it. That is whistleblowing. So 1D supports whistleblowing. When members or candidate encounter unethical or illegal behavior. If in case you are seeing something wrong is happening, you should let everyone know about it to the best of your extent. That damages their firm integrity or investment profession. They should first report the issue internally, but if unresolved, whistleblowing to regulators may be necessary. Like you notice, the promoters are using the loans taken by firm for their personal purposes. Firstly, report it internally, but since they are promoters, still, like they will not let anything happen within the organization, even if they are doing it. Let shareholders know, but they are also the shareholders also, so you cannot do anything. In that case, report it directly to SEBI. So 1D supports whistleblowing? Yes. Can professional incompetence violate 1D? Answer is yes. If you are incompetent, then also. You are a CFA, but you don't know how to prepare, let's say, a well-balanced portfolio for a retired person. It is your incompetency. It is violation of 1D, because when you put CFA, let's say I put CFA Yash Jan, that person expects some knowledge from me, right? I may not be expert in everything within investment domain, but I should be like having knowledge and skills at the basic level to fulfill my professional duties. If I don't have it, it will be violation of 1D. Okay. Members must maintain high standards of competence, professionalism in their work to protect reputation and trust of clients. How does 1D handle situation members' behavior reflect poorly on the investment industry as a whole? Let's say a CFA is involved in a fraud, and now everyone starts saying CFAs are not a good, like what happened with CAs, right? Many times chartered accountants have been found guilty of multiple frauds with the help of chartered accountants or false audit report that have been there. So how does 1D handle it? Members must uphold integrity of investment profession through honest, ethical and ethical behavior at all time. So members must be ethical, members must be honest, they should not be dishonest, they should not be doing anything in their personal life as well that reflects adversely on their professional repute. This is how 1D upholds member. Okay. Sir, how many questions are there? This is last. Okay. Last 6. What should members do if they suspect firm's financial report are being manipulated? If P&L, balance sheet, cash flow are being manipulated, raise your concern to supervisor or compliance department. Follow internal reporting procedure. If not addressed, consider reporting the matter to external regulators. Simple. Internally, if it is resolved, well and good. Otherwise, solve it externally. What kind of personal behavior might violate 1D, even if it is not related to professional action? Personal behavior is excessive drinking during business hours, or maybe fraudulent personal financial dealings, dishonest action, false claims, anything that negatively impacts the professional reputation or competence will violate 1D. Are you with me? Now you should be able to solve questions like this. Many times many points are getting repeated because CFA Institute will ask you multiple times same kind of questions but in a very, very different way. How should members act if they suspect that their firm's hedge fund is reporting inflated performance? Now you are aware about a fraud. What will you do? Same procedure like this. Same. Does participation in illegal activities unrelated to work automatically violates 1D? You are participating in illegal activity. Think about it. Don't watch the answer. I'll just stand like this. If you are participating in illegal activity and it is not related to your work, but it is illegal activity, will it violate 1D? Think about it. Pause the video and think about it. If you break any law, small law, let's say entering a particular area that you are not supposed to enter during, let's say, work in progress, or maybe you miss, let's say, like you consume alcohol at a public place, that you're not supposed to do it, right? It's illegal. You're not supposed to do it. Or breaking a traffic signal, or going on the wrong side of the road. All these things. You're not supposed to do it. It is an illegal activity, right? You're breaking the law. But does it reflect adversely on your professional reputation, right? Like, I'm not supposed to write, I'm not supposed to use high beam lights on my bike. It is illegal. Traffic police can actually seize my bike for it. I've done it. But it doesn't have to do anything with my CFA designation. So participation in illegal activity unrelated to work does not necessarily violate 1D. However, if illegal activity reflects poorly on members' integrity, such as fraud, you're doing illegal activity is fraud, illegal activity is terrorism, illegal activity is drugs, dealing in drugs and all, then it is violating 1D. Small breaking of law is not a major concern. Can action in charitable work or personal projects violate 1D? Answer is yes, if it involves dishonesty, fraud, deceit. What are the consequences of members who violate 1D? Suspension, revocation of CFA charter, termination, as well as legal case. Okay, so this is it. This is 1D. Now we have E. 1E. This is the latest one. Since it is latest one, I also don't have a lot of questions on it. Okay. So we read earlier that you should maintain it. It is your responsibility to be competent so that you can deliver on your professional duties. So what is required under 1E? to have necessary knowledge, skills, ability to perform professional duty and must continue to improve and maintain their competence throughout their careers. How can members and candidates maintain their competence? How? By continuously educating themselves, earning certificates like what you are doing, attending seminars, going for training sessions, self-study, keeping up to date with industry changes, basically reading and updating. It could be watching relevant YouTube videos as well. What are the key components of competence? Competence includes knowledge, skills, and abilities that will lead to successful professional outcome. Three things. You should have knowledge, you should know how to apply that knowledge, skills, and abilities. Basically, attitudes that lead to, or here it is, abilities is like you should be able to take that thing, right? You should be able to deliver on it. Does an unsuccessful investment decision automatically means a member is incompetent? I recommended something to client, but he suffered losses. Does that mean I am incompetent? Answer is no. Even competent professionals may make decisions that lead to losses. Competence is based on proper research and analysis, not based on the outcome. Can education alone ensure competence? Na baba na, where is experience, where are skills? So no, education is important, but experience and specific knowledge for a given role are also necessary part of competence. A highly educated person may still be incompetent, especially Indian education system is like that. Okay. Let's move. What are some recommended practices to maintain competence? Some recommended practice to maintain competence. We discussed this. Training, study, sessions, certificates, watching YouTube videos that are relevant. Can members delegate responsibilities to fill knowledge gap in their role? Basically, can you hire experts? Let's say someone wants me to maintain a crypto, fixed income and equity portfolio. I'm expert in income, fixed income and equity, but I don't know crypto. So can I hire an expert to fill this knowledge gap? Answer is yes. Yes, member can hire expert to fill the knowledge gaps or seek advice for more experienced colleagues. This is possible. What happens if a member takes on responsibility without skills or knowledge? If you accept something about which you don't have relevant skills, you don't have necessary knowledge, then you are incompetent basically for that role, and you have therefore violated 1E. They fail to meet the requirements of competence under 1E. Okay. How does standard 1E addresses the need for staying current with industry trend? You want to stay current with industry trend. So this particular standard asks you to update yourself about the new developments in the industry to maintain competence. What should members do when new skill or knowledge are needed for their roles? What should they do? They should learn and develop those skills and knowledge. See, I have to also keep upgrading myself. So like I have to learn about markets, I have to learn about the curriculum updates, etc. So this is something that other professionals who are not also involved into education sector are supposed to do. Does passing an exam automatically prove competence? Answer is no. Education is not competence. Passing an exam does not necessarily demonstrate competence, though it is a sign in the right direction. Members must apply the knowledge and continue to improve their skills through experience and learnings. Why it is important for members to stay updated on the industry trends? Because your profession needs it. If you don't do it, you will not be able to deliver your professional duties, and it will be violation of 1D and 1E. Okay. Can members specialize in a particular area to maintain competence? Yes, you can be an expert. So you will have expertise into one area, but you will not have a lot of knowledge into other area, but basics you should know. So members may specialize in specific area of expertise, but they must ensure they have required knowledge and skills for any additional responsibility that they can take on. So if you are expert into one area, now you want to take responsibility of other area, develop that competence. How should members address knowledge gaps? By hiring experts and enrolling for relevant training programs. How can member be proactive in maintaining competence? By engaging into continuous learning, seeking new opportunities for professional development, and staying informed about changes in their field. What is the difference between competence and outcome? Competence is about knowledge and skills to make a well-informed decision. Outcome, even if you take well-informed decision, outcome could be positive, negative, neutral. So outcome and competence, like a competent person will be mostly able to deliver positive outcomes, but sometimes he will also deliver negative outcomes. Like if I teach, I think I am competent enough to teach CFA L1, L2, L3, FRM Part 1, Part 2, investment banking. But when I teach, do all the students pass all the time? Answer is no. Why is continuous learning important? Because it helps you to remain updated and deliver your professional obligation. Can members rely solely on the past knowledge for future competence? Nice question. Can members solely rely on past knowledge? Basically, they don't update themselves for future competence. No, they should update themselves, continuously learn and develop their skills and keep themselves updated with the industry trends. Okay, this is 1E. We are done with 1 and 7. Now we'll be starting with integrity of capital market, that is 2. So let me go to the first slide. Here we are. We are done with this. Now we are done with this as well. Now we will be starting with this. Integrity of capital markets. Now let us start with one of my favorite topics within ethics to teach. Substandard is integrity of capital markets. 2 parts within it: material non-public information and market manipulation. Material non-public and market manipulation. And so many questions can be formed on just these 2. Okay, firstly let us read the first one. Almost I have 40-50 questions for this and lot of questions for this as well. So firstly let us read this. Members and candidates, pay attention. Who possesses material non-public information that could affect the value of an investment must not act himself or cause others to act on the information. So it says if you possess material and non-public information, you should not act on this. Sir, what if I have material information but it is public in nature? You can act on it. If it is non-material, whether it is public or whether it is non-public, you can still act on this. So you can act on non-material information. Material public you can act, material non-public you cannot act. Okay, we'll see this in some time. Okay, so firstly, what is material information? Everyone pay attention. If the information is said to be material, if it can affect the price of the security, if it can affect the price of security, number 1, and number 2, a reasonable investor would want to know that information before making an investment decision. You would want to know that information, it is material, a reasonable investor, and it can impact the price. If either of the condition is satisfied, it is a material information. Sir, what is non-public information? Non-public is it is not given to public at a large, right? So until this has been disseminated to market and made available to investors in general. They've given, let's say information is given selectively to few individuals. Let's say CEO, CFO, VP, president, all these people know. Is it a non-public information? Still answer is yes. If it is given to, let's say, 10 analysts, that's it. No other person. Is it a non-public information? Yes, right? Focus, is it a violation to act on rumors or speculation from unreliable source? If you act on the basis of violation, so see, if it is violation, say if you are acting on the basis of rumors, and that rumors is related to material non-public information, and if you act on it, it is violation. But that rumor is related to public information, or like that rumor is non-material in nature, then you can act on it. Acting on information that is speculative or from unreliable source does not violate standard 2A. Can you act on it? Answer is yes. As long as information is not material and non-public. However, caution is needed to avoid acting on insider information that might be disguised as rumors. If insider information is spread like rumors, then be cautious about acting on it. What should a CFA member do if they are in possession of material non-public information? If you have non-public information, sir, I'll call everyone, let everyone know, mint money. Na baba na. You should not be doing any of these. If you have material non-public information, you should not act. Material non-public we read this, material non-public information, do not act or cause others to act. So do not act or cause others to act. Okay. Best course of the action is to ensure the information is publicly disseminated or reported to compliance officer within the firm. If you have it and if it is not public, do not act and let your compliance officer know that I know this information. Can an analyst use publicly available? You can definitely use it. And non-material public information in their investment. It is publicly available. It is non-material. You can definitely use it. Right? So this is called as Mosaic theory. So you don't have to especially learn what is Mosaic theory. I have discussed it here. Somewhere here I have discussed. Anyways, it will come. What is Mosaic theory? Like what kind of information? How does Mosaic theory apply to research and recommendation? So Mosaic theory is public plus public plus material, non-material. What information you can act on and you cannot act on. So yes, under Mosaic theory, analysts can use combination of public and non-material information to make investment recommendation. As long as investment gathered is not material, non-public, analyst is allowed to act on it. Is it allowed to disclose material non-public information to close family members? Sir, I want to disclose it to my wife, to my father, to my brother. Sir, my best friend. Can you do it? If you have material non-public information, it's close family. Can you do it? Answer is no. You are not allowed to disclose even to your wife, parents, brother, sister. Not allowed to disclose to anyone including family members. It is a violation of 2A. Okay. Regardless of your relationship, you should not be sharing it. What should a CFA member do if they accidentally receive material non-public information? A sudden mail came in and you see the company is expected to give out results in 2 weeks and I am sharing this information. Their sales have tripled and profit have 4 times. So what to do? Profits are quadrupled. Sir, act on it. No. If you accidentally receive it, what should you do? Firstly, treat it like nothing has happened. Do not act on it or cause others to act on this. Okay. And you can report the receipt of this information to your compliance department and refrain from taking any investment action. How does social media fit into sharing of non-public information? Sharing of non-public information. So on social media. So see, information that is shared on social media is considered public if it is widely available to investing public. If information is available at large and you are sharing it, is it fine? Answer is yes. If access is limited to a specific group, the information may still be considered non-public. If access to that information is, let's say, with 5 people, 10 people, and you are putting it out in social media, then you can't say, sir, I put it out, it is public now. Nah, baba, nah, it is not public. You are not the authority to release the information. CFA members must ensure that information obtained via social media is public before acting on it. If you are receiving some information and you want to act on it, make sure it is public in nature. Sir, some rumors are there, material non-public information is there, can I act on it? Even obtained via social media, you cannot act on it. Then, can a CFA candidate discuss non-public information shared during an analyst meeting? If some information during your meeting is shared with you, can you discuss it? Answer is a clear no. You should not act, you should not discuss, you should not let others know, you should not let others act. Like you receive it and forget about it. No, if non-public information is shared during an analyst meeting, must refrain from acting on it. The information is not considered public until it is disclosed to the market at large. What is appropriate course of action for a firm that learns of material non-public information during corporate deal? Because of a corporate deal, some transaction going on, you are aware of, like A company is buying B company, right? And you are an analyst, now you know about it. This has not been disclosed in the market. The talks are going on. In that case, what should you do? So first of all, you should not act on this, but how would a business, an organization will behave? Appropriate course of action for a business, for a firm. Establish firewall. That means if, let's say, investment banking division have got this, they should not be passing this information to equity research team, and restrict the flow of information to prevent employees from trading on material non-public information. It is firm's responsibility. They establish the firewall and restrict employees so that they don't trade or trade for clients as well. Employees involved in the deal must not communicate the information with other departments. Okay, in trading and other like security should be monitored. How does Mosaic theory apply to research and recommendation? Mosaic theory, like public, non-public, what I discussed over here. This is basically Mosaic theory. How does Mosaic theory apply to research and recommendation? Mosaic theory allows analysts to use combination of public information and non-material, non-public information to form investment opinion, as long as final recommendation is not based on material non-public information, it is compliant. So basically, when you are making investment recommendation, it should be based on public information or it should be based on non-material information. If it is non-public material information, then you are breaching the standard 2A and Mosaic theory. Then is it violation to act on an analyst recommendation if that recommendation affects market prices? No. It is, see, it affects market prices, but you have to check whether the information is public, non-public, material, non-material, right? So is it violation if you just act on the analyst information? Analysts have done a lot of research and then you are acting on it, and then it can impact market prices. There is no problem in this. You should not be acting on material non-public information. That's the problem. So no, acting on an analyst recommendation is not a violation if analyst conclusion are based on public information or non-material, non-public information. It is non-public, but it is not material. The recommendation itself, if derived through legitimate research, does not constitute material non-public information. Just research is not a material non-public information, right? What are the consequences of failing to maintain information barrier, that firewall, between departments in a firm? It is violation of 2A. May lead to misuse of material non-public information, which is violation. If there is no firewall, then there will be misuse, and in case misuse is there, it is breach. Can a CFA member use information obtained from industry expert to make investment decision? Yes. I've consulted an expert, someone have given me suggestion, I did my own due diligence and acted on it. What's the problem? Yes, CFA member can use information from industry expert as long as it is not material non-public information. Easy. What are the risks of sharing information obtained through expert networks? Risk of sharing information obtained through expert networks. You can share material. Where is this? There is a risk that expert may share material non-public information. Some insider groups, etc. can share it. Whenever you are sharing this information, make sure you are not sharing material non-public information, right? CFA members using expert network may be cautious and avoid acting on any such information that could be considered material and non-public. Easy. What should firms do to ensure compliance with standard 2A? Strong compliance procedure should be there. Firewalls, monitoring of employees, employee training, recognition of material non-public information, it should be there. Easy. Can a CFA member act on selective information provided to a small group of investors before it becomes public? It is given to, let's say, closed group of 20 people. Can you act on it? No, it is not public. You cannot act on it. Sir, why are we repeating similar kind of points? Because CFA will give you questions in a very twisted way. Do you think they will ask you simple, straightforward question? No. That's why we are trying to cover all the P and C's possible. Can an analyst share their non-public research opinion? See, again, something that is like given in a twisted way. Can you share your research opinion, that is non-public, like non-public research opinion, with others before they are publicly disseminated? So basically, you have done a research, and basis your research, like you are able to understand or like come up with certain guidelines about the expected performance of the company. So can analysts share non-public research opinion with others before they are publicly available? Answer is, you might feel it is yes. Answer is no. Analysts should not share non-public research opinion before the research is distributed to clients or public. Doing so lead to an unfair advantage and violation of market integrity standards. So everyone focus over here. Can an analyst share their non-public research opinion with others before they are publicly disseminated, basically publicly issued? Answer is no. Analyst should not share this non-public research opinions. Firstly, he will share it to his clients before the research is distributed to his clients or public, right? So what the question is saying is, I need some writing space. Let's write here. Research is done and it is released, right? It is released to clients or maybe to public or both, right? Now analysts have done the research, and basis that research he is able to come up with some non-public information. Let's say the results will be extremely good. So can analyst, before this research is released, inform others privately about this research? Answer is no. You are promoting insider trading or you are promoting front running kind of things. Should not be doing it. Research will be released, given to respective clients and public, and then analysts can act on it. Okay, analysts can tell others also. Okay, this is why I was saying it is very twisted. How should firms handle the release of material non-public information during conference call with analyst? Material non-public information, if disclosed during conference call, in that case, see, it is a non-public material information that is disclosed during a conference call. The company should issue a press release immediately to ensure that information is publicly given. This prevents selective disclosure and ensures compliance with 2A. So there was some conference call going on, and in that conference call, the company unintentionally released some report, some information about the material non-public information. An analyst learned about this. Analyst will definitely not act. But what should company do? How should firm handle? How should the organization, which is like, how should Goldman, JP Morgan, etc. react? They will issue a public disclosure about it. Anyways, once it becomes conference call, maybe in a day or 2 minutes, etc. will be available. But before that, the analyst or the firm should release a public disclosure on their own. Okay, these are very fine points given in your standards. Okay, how should firm research the release of material non-public information during conference? I think we have discussed this. Is it a violation to trade on general market sentiments or rumors that are not confirmed as material non-public information? There are some market trends or some rumors, and you don't know whether it is material non-public information or not. So is it a violation? Answer is no. It is not a violation. as long as information is not confirmed as material non-public information. However, see, you are acting on rumors, that is fine. Plus, please make sure you exercise your caution and ensure that you are not acting on any insider information. So if let's say market is trending upwards and you see some key indicators, GDP, interest rate, etc., and basis that you take a trade, or maybe some rumors are going about the company, it's just rumors, you don't have like source to verify it, can you still act on it? Yes, you can act on rumors, but please make sure the rumors are publicly available, or like the rumors, the information that you are acting is not an insider information, right? Because later on it will be very difficult for you to prove that you acted on rumors and not the information directly received by you. Okay. What is primary reason for prohibiting trading on material non-public information? It impacts the integrity of capital markets. Trading on insider information creates the perception that the markets are unfair, leading to investor avoid participation in the markets. Can CFA member trade if the information they have is public but difficult to interpret? Interesting question. It is publicly available, but like you see but you don't observe, like Sherlock Holmes says. So it is something like this. It is available but no one have paid a lot of attention to it. So can you act on it? Yes, it is public. It's not your responsibility that others understand it. If you understand it, you can act on it. Yes. How can analysts ensure that they are compliant when using Mosaic theory? How will analysts make sure that? Just gauge the information, whether it is material, non-material, public, non-public, basis this. And one more thing, document your research. How will you prove that you acted on something that was material, non-public, public, whatever it is, right? Why you acted on it? You should be documenting your research. Documentation will help you to demonstrate the conclusion were based on appropriate analysis and not on material non-public information. Okay. Is trading based on information received from government official considered as a violation? You are a friend with government officer and he have given you some information. So if government official have given you, he will not tell you like let's say a government official will not tell you how the company is performing. They will tell you there is a tax penalty levied on the company, or they won a large contract from government, or maybe we are penalizing them, there is some penalty on them, or maybe we have given them certain licenses. If this information is disclosed, it is non-public. No matter it is received from any government official, some mantri, some neta, it is violation. Yes, if the information provided by government official is material and non-public, acting on it will be violation. But let's say he says, I really like this company's product. So you can act on it, no problem, right? CFA members must not act on non-public information regardless of the source. If it is non-material, non-public information. If it is like non-material, it should be material non-public information. If it is non-material information shared by any source, you can act on it. What should CFA members do if they suspect a colleague is using material non-public information to trade? One of your friends, one of your dear friends with whom you go to for lunch or go for cigarette breaks, coffee breaks, you play ping pong in office, or you're traveling together and he knows about this. Then like you know that he is using some material non-public information, you suspect that. Then what will you do? Report it to the compliance team. Okay. Then can CFA members discuss their personal opinion about the company on social media? I think yes, you can discuss. Can express their personal opinion about company on social media as long as they do not disclose any material non-public information. You cannot disguise your tweets or threads or messages on LinkedIn or anywhere. Like if I know some material non-public information, I can say I like this company, or this company have given 5-10 years growth and I am expecting a good result from the company. That is allowed. But if I know, let's say promoters are selling more shares, buying more shares, some FII, etc., have increased their stake in the company, all these information, until unless it's available in public domain, maybe it will be available tomorrow, I cannot disclose such kind of information. Okay, so public non-material information can be disclosed. Public material information can be disclosed. Non-material public information can be disclosed, but material non-public information cannot be disclosed. What role does a documentation play in protecting analyst who uses Mosaic theory? It is basically a trail of how you reached a particular conclusion, right? So documentation is crucial because it provides evidence that analyst's conclusion were based on combination of anything other than material non-public information, right? Anything other than this, the analysis, the theory, the conclusion was based on this. What are the consequences of failing to prevent flow of material non-public information within the firm? If the firm fails to put firewall, or even if it is firewall, even if there is firewall, it's a weak one, then what will be the consequences of this? In that case, there will be regulatory penalties in case there are insider trading, there will be loss of reputation, and there will be violation of 2A as well. Is it allowed to take personal trading action based on market rumors? Think about it. Ignore the answer. Is it allowed? What do you say? It is allowed. Based on market rumors, can you act? Yes. Right? Yes, CFA member may act on market rumors if they do not constitute material non-public information. However, you should be cautious and advised to ensure that information is indeed public and not selectively disclosed to insiders. Can CFA member continue to trade for client if they receive material non-public information after initiating the trade? What a nice question. You executed a trade. Let's say you said sell this company, or maybe let's say you said you buy this company, but after this you received some insider information because you are working in the market, you have close ties with the company, you have already asked your client to buy. Now you have received an insider information that this company have suffered a major loss, so maybe they've lost some contract or there are heavy penalties on the company. So can you cancel the trade basis it? Can you, like, once you have bought it, can you sell the company because you know it will be even going down? Answer is no. You are still acting on the material non-public information. So no, you cannot. CFA member receives the material non-public information after initiating the trade. They must halt further trading until information becomes public. Continuing to trade will be violation. Basically, you should not act on that, right? If you have bought it, let it be. Let that information be public, and then you can close your position, right? Okay. What constitutes material information? I think we have discussed this. How can you determine if information is considered non-public? I think we have discussed this as well. I think this is repeating itself. So, okay, no, this is not repeating. Is selectively disclosing information to analysts considered as public dissemination? Answer is no. You have given it to a handful of people. 5, 10, 15, 20, 30, 40, doesn't matter. What does Mosaic theory allow analysts to do? It allows analysts to invest on the basis of public material information, public non-material information, non-public non-material information. Basically, you cannot invest on non-public material information. This is not allowed, others is allowed. How should members handle information obtained from industry experts? Done. Can CFA members use social media to communicate investment insight? Can I put my opinion on social media? Answer is yes. Can I inform others about the investment insight? Answer is yes. Just make sure you are not disclosing any material non-public information. They must not disclose any material non-public information. Public posts should comply with these same ethical guidelines. Okay, like any other communication. What should a member do if they come across material non-public information by accident? They should refrain to act on it. Don't cause others to act on this. What precaution should a firm take to prevent misuse of material non-public information? Implement firewalls, train employees. We have done similar question. How can analysts ensure that they remain compliant when using information from external source? When you are using information from external source, you should check whether it is a public information, whether it is non-material information, whether it is not public information. Then apply Mosaic theory and basis that decide. What are firewalls and why they are important? Firewall is like in your desktop Windows system, you have a firewall, right? It doesn't allow malwares, etc. to get settled in your computer, install like harmful software in your computer. It also acts as a barrier. Firewalls act as a barrier that prevent flow of confidential information within the firm from one division to another division. Can personal trading restrictions apply to member with access to material non-public information? If you have access to material non-public information, you should not be trading on that. Yes. So personal trading restrictions, like you will be not trading for firm and you will also not be trading in your personal demat account basis that material non-public information. I think it is valid. Yes, personal trading restrictions may apply to prevent members with access to material non-public information. So when I was working with Bain, every week, every Monday, around 9:30, 10 a.m., we used to receive a mail in which they used to say, you are not supposed to trade in these 50, 100, 200 shares. Because you are working with the team at the back end, so we were aware of a lot of material non-public things. I can utilize it to make lot of profits. So I'm not supposed to do it. I'm also not supposed to cause my father do it, brother do it, friend do it, wife do it. I should not be acting on it or causing others to act. What steps should a firm take to ensure equitable dissemination of information to all market participants? Now it is your responsibility, if you are some material non-public information, you are acting as an intermediary and you have to disclose it to the entire market. In that case, what are the steps that you should be taking? So adopt disclosure policies that ensure all analysts, regardless of their size, influence, receive the same information. Firstly, everyone receives the same information and it should be given out to the public in transparent way, fair way, through public press releases, and should be done at the same time. You cannot disclose the information to one client maybe 2 hours before than others, right? So it should be done at the same time in a fair and transparent way. Like let's say you want to inform it to exchange via a mail. So first send mail to exchange and then send it to your clients, or do it at the same time, right? Okay. Now, how can firms manage their risk of insider trading during sensitive events like M&A? If in case you are helping some company to go through merger and acquisition, then how do you prevent this insider trading? Implement strict controls like restricted list, watch list, limit trading in securities related to the event. They should ensure that employees with insider information are not allowed to engage in trading. So whenever you are working in M&A transaction, your firm is not supposed to allow you to trade on in those companies' share, right? So you put it in your restricted list that no trading in this. There is watch list as well. Like we are working on this, so no trading in this as well. And limit trading. Okay. So basically ask your analyst not to trade. Which action should be taken if material non-public information is inadvertently disclosed during an analyst meeting? It is accidentally disclosed, then what should be done? Immediately the company should issue press release. If it is accidentally done, issue press release. Okay. Company should immediately issue press release or otherwise make information publicly available to prevent insider trading. What is the role of compliance officer in managing material non-public information? Role of compliance officer. What is his role? He is responsible for ensuring confidential information is handled appropriately within the firm. Okay. If in case any interdepartmental transfer is there, communication is there of sensitive information, then he is responsible, right? He should ensure that unauthorized trading doesn't occur. Can an analyst change their recommendation on stock after receiving material non-public information? No, You should not act. Changing opinion, causing trade, not causing trade, nothing. Can you do it? Answer is no. How should members handle rumors or unverified information in the market? Can you trade on this? Yes. You can act on rumors, very much allowed, but make sure it is not an insider information, right? So members should treat rumors or unverified information cautiously. If the information is unreliable and not confirmed as material, non-material, public, non-public, they may consider it as a part of general market noise. Okay? If information is unreliable and not confirmed as material, non-material, public, non-public, basically material or non-public, in that case consider it as a market noise. But if you suspect it could be insider information, do not trade on this. Okay? Can you act on rumors? Yes, but make sure it is not an insider thing. Can CFA members share material non-public information with family members? Can you do it? Close friend? No. Father, mother? No. Okay. So with this we complete 2A. This is done. Now we will be starting with 2B, market manipulation. Members and candidates must not engage in practice that distort the prices or artificially inflate trading volume. That distort the prices. That can price to move up, can price to move down, or price to stay sideways. Anything, you are artificially doing it. Or you are increasing trading volume, artificially inflating trading volume. Though word written is artificially inflate, but the gist is you should not be playing with the volumes. Can you cause deflate and will it be violation of 2B? Answer is yes. With the intent to mislead market price. Your intent is important. So if you are asking your client to actually buy, so your intent is not to mislead the market, right? Your intent is actually helping your client to buy. So that is fine. The intent is misleading the price or market manipulation. In that case, you should not be engaged into price manipulation and volume manipulation. So basically this is a technical chart. You cannot manipulate the price as well as the volumes. Okay, this is 2B. And here if because of any action it is increasing, decreasing, that is fine. But the intent should not be misleading market participants. Okay. Now let us solve questions on this. Okay. Market manipulation. Let us start. First question. What must members and candidates avoid doing to maintain capital market integrity under standard 2B? Do not engage into practices that distort prices or artificially inflate trading volume with the intent to mislead the market. I think we have discussed this. What are the two types of market manipulation? Information based market manipulation, like putting false rumors into the market, or transaction based manipulation, maybe by inflating, pump and dump, inflating volumes, etc. What is the information based market manipulation and how does it affect the market? Information based market manipulation involves spreading false or misleading information to influence market participants, leading to distorted prices and unfair market condition. Like every now and then we listen, Tata Group is going to acquire this company, this group of Tata, this company of Tata Group is going to acquire this, that. Most of the time it doesn't happen. It is all market rumors. What is transaction based manipulation? How it can mislead investor? Transaction is basically creating artificial prices, unnecessarily increasing the price, decreasing the price, or volume movements, increasing the volumes, such as by trading in the way that gives impression of market activity when it doesn't exist. How can technology advancements increase the risk of market manipulation? What happens because of technological advancement is spreading false rumors is very easy. Like right now, if I want to spread some rumors, I have to create a false video and then put some ads on YouTube, and I can make lakhs and crores of people view it in a week, right? And this have happened. Like in case you are not using YouTube Premium, that most of us don't, you would have seen many times Some share unnecessarily has been recommended on one particular channel with millions of views. That is market manipulation. In fact, many YouTube finfluencers, that's what you call them, have been like summoned noticed by SEBI for doing all these activities. Then how does creating false rumors online about company to boost its stock price violate standard 2B? You are artificially raising the volume. You are just creating false rumor. This company is a gem of a company. Next 2 years, it will be gathering so many contracts. It is undervalued. Now the promoters are also increasing their stake. The profit margins of the company are very high. Debt level is low. It's a hidden gem. Buy it. This is all rumors. And mislead market participants constituting market manipulation. What type of manipulation occurs when someone exaggerates negative information about company to benefit client with short position? So in case, let's say, give me a second. So in case, let's say, you have suggested your client to short a particular share, but it rather goes up. So what you do is you artificially implant some negative rumors about the company so that you or your client can make profit. That is, you are exaggerating negative information. Let's say negative information is CEO or CFO of the company have gone to hospital. It is for his regular checkups. He goes every time once in a month. But right now, you will click some pictures very secretly and then post it online, and maybe we'll create some artificial image of him being on maybe ventilator and say this person have died, and you start spreading rumors, and maybe for a day the prices dips, clients made profit, and then it's all done and dusted. What happens when a person attempts to manipulate the stock prices by trading between two funds they manage? So what they do is, let's say I manage fund A and fund B. This fund will place buy order of a particular security, and this fund will place a sell order of particular security. So basically this fund is transferring shares to this. So volume will increase. Ultimately, are you making any profit? No. Buy, sell, loss, profit will negate. It's your fund only, both the funds. But volume have gone up. This is how you can artificially manipulate the stock prices by trading between the two funds. It is violation, right? Violation of 2B, but because you are distorting the prices. How does exaggerating earning projections to trigger stock price increase violate standard? Exaggerating earning projection. This company is right now making losses. They are going to win a big contract or government subsidy is received. They have some political connection, and because of which the price of this company is, like the earnings of this company should 3 to 4 times increase in next quarter. Therefore, it's a good time to buy it. Otherwise, you will not get a chance to buy it again. Such kind of things. Exaggerating earning projections. Maybe they have political connections. Maybe they have got some subsidy. There are some government contracts they've won. But maybe that will inflate their revenue or profits by 10, 20, 30%. But you are exaggerating to increase the prices. That is again market price manipulation. Pump and dump scheme, that is, you end up buying shares, and because of which the price increases. Now everyone starts noticing it, or everyone say that see, in last 2 months the prices have increased 50%. Still it can go 50% up. There's a good point to buy. Everyone starts buying over here. Maybe it moves up slightly because everyone is buying. Then you dump all your position overall over here. So you have get good money. You bought on an average around this price, you sell around this price. It is pump and dump, and now when you sell, the price crashes. This is pump and dump. So it is obviously violation. You have artificially increased prices, and then you are misleading investors. You are selling your stock at inflated prices. How does market manipulation model input to obtain higher ratings for structured products violates 2B? So basically, what you are doing is you are you are manipulating the model inputs. So there is, let's say, valuation model or rating model. Instead of saying 2% expected growth, that is actual, you are putting 10% expected growth. So
it will become a buy recommendation, or it will become a like the rating will shift to positive buy, right? Or for structured product like MBA securities, etc., it will become like more positively rated. And this is basically you are playing with the input so that the prices can increase. It is violation of 2B. So directly or indirectly you are trying to inflate the prices, right? Market manipulation, manipulating model inputs to downplay risk, mislead investor and rating agency, leading to artificial confidence in the product and potential market harm. Is market manipulation still a violation of 2B if there is no personal financial gain? You have done market manipulation, but you have done it for client, or maybe you have done it for friend, or you have done it as a favor. There is no personal finance gain. So can you say, sir, there is no gain, look at my statement, so why do you say I have manipulated the market? Still, you can do it for others. So even if there is no personal gain, it is violation. Even if the intent is to harm others or create regulatory trouble, it is misleading participants, right? Can legitimate trading strategy based on perceived market inefficiency violate 2B? No, it's a trading strategy. It is not manipulation, right? You have seen some inefficiencies in the market, and because of which you are able to make certain gains, or you are trading in the market basis that. It's not a market manipulation. You are trying to just earn on the basis of your analysis, your strategy. What must firms disclose when inflating trading volumes to promote new financial product? This is really interesting. What must firm disclose when inflating trading volume to promote new financial product? Let's say there is a share, there is IPO of this share. In this IPO, there is a book runner, basically an investment banker, right? Now, their job is to make IPO successful, transfer all the shares from promoters to public. In that process, book runners are given. See, what happens is, because of IPO, the prices goes up, then comes down, then goes up. Like, it's very volatile. Book runner have some extra share that they have borrowed from the company for the purpose of unnecessary, if the prices goes up, so they short the shares. If the prices are down, they end up buying so that they stabilize the prices. Intentionally, with the permission of client, regulators know it, you are doing it. That is fine. So basically, if you are doing it, give disclosure that we are artificially boosting volume, or maybe we are providing liquidity. Okay, it happens with certain ETFs as well. There is market maker in CFA level 2. You will learn, if in case not already know, that there is a manager for ETF creation basket and redemption basket. He buys and sells that particular shares. That is, again, he is creating artificial liquidity. That is there because the clients can redeem their ETFs. What should members do if they suspect market manipulation is occurring? Firstly, do not participate. Don't say, if everyone is making profit, why should I be left aside? Do not participate in manipulative practices and report the suspected activity to appropriate authority or compliance department. You can report it to SEBI or compliance department. How does transparency in large transaction help prevent market manipulation? Transparency, you inform others that we are going to make a large trade. Because of this, unnecessary volume boost will not be there. Everyone will know, okay, this happened because, let's say, I dumped a lot of shares or I bought a lot of shares. So transparency ensures market participants are not misled about true market activity, maintaining fairness and integrity of the market. What is the consequence of inflating trading volume without disclosure when launching a new product? When you are launching a new product, so you want it to trade, so when you are doing it for the first time, you want buyers. So on this other side, there should be sellers, right? You are the sellers. So you are ready to dispose a lot of quantity so that the market interaction happens. Buy, sell starts, right? So first time you will have to artificially boost the volumes.
In case you are doing it, just give a full disclosure. Why must members avoid spreading rumors to influence stock prices? Because it will mislead the investor and violate 2B. How does selectively communicating exaggerated earning projections to specific group of clients violate standard 2B and fair dealing? Let's say, how does it violate 2B? You are selectively exaggerating the earning potential of a particular company to a specific group of clients. Does it violate? Yes. It is basically misleading the client. And selectively sharing information with particular group violates the principle of fair dealing, giving unfair advantage. Basically, all information, you cannot be selective about clients, that I'll give information to this client because he gives me more commission, and I'll not give information to this client because he does not give me more commission. If you have some information, it is relevant to both the clients, should be given at same time to both the clients, irrespective of their size, right? So you should not be exaggerating, that is for sure. Earning projections or anything, or like whatever it is, state as it is. Don't exaggerate, do not put it negatively as well. Okay. So this is 2B. We are done with it. Now we will start with the third standard, duties to client. Standard 3, duties to client. Altogether 5 substandards are there. Let me read out the heading and then we'll cover them one by one. Loyalty, prudence and care, fair dealing, suitability, presentation, performance presentation and preservation of confidentiality. Now firstly let us focus on this, performance presentation. When communicating investment performance information, when you are communicating performance of an investment, you must make sure you take reasonable efforts to make sure it is fair, accurate and complete. It should be fair, accurate and complete. What should be fair, accurate and complete? The investment performance presentation that you are sharing with the client. Okay. Let's solve some question on this. Performance presentation. You should make sure, or you have put in the reasonable efforts. Fair, accurate, complete. Okay. 3D requires members and candidates regarding performance information. What does this require? You have to provide credible performance information to clients and prospective clients. And avoid, important, avoid misstating or misleading about past performance or reasonable expected performance. Basically, in this case, you have to give performance, that is performance, like the details of historical performance should not be misleading. Whatever it is, give true picture. What does standard 3D encourage in terms of disclosing investment performance data? It should be a full disclosure. Full disclosure. Okay. Everything should be disclosed basically. What practices are prohibited under 3D? It is misleading, giving misleading performance details, or like giving unreasonable expectation of the future performance. Prohibits misleading past performance or expected performance. Okay, you should be giving fair, complete and accurate picture. Then what should members avoid stating or implying regarding clients' future returns? Future returns के बारे में आपको क्या नहीं बोलना है? What should you say? Members should avoid stating or implying clients will obtain or benefit from rate of return that was generated in the past. That means you are saying past return does not imply the same future returns, right? In case a strategy have worked well in past, doesn't mean it will be able to generate the same returns in future. You should not be directly saying this, nor indirectly stating or implying this. Avoid stating or implying that client will obtain or get benefit from rate of return that was generated in the past. Okay. What is required when providing performance information about pooled funds? Pooled funds, example is mutual fund. What should be like provided? In this case, it should be accurate and it should not be misleading. The same requirement as above. Next, what should members do if performance presentation is brief? Performance presentation is brief. In case, let's say you have given disclosure about the performance, but you have disclosed it in a very short, maybe the time was not enough or whatever is the reason. In that case, make that presentation. If the presentation is made in brief, the member should make it available on request, the detailed information supporting the communication. Let's say you have shown one chart in which return over multiple years of a particular fund is disclosed. In that case, if let's say you have not given all the details, then what are the constituents, what was the weight, who was the fund manager, all these things you have not given. So if in case it is presented in brief, in case client request, you should be ready with the detailed presentation as well. How can members and candidates meet their obligation under standard 3D without applying GIPS? Okay, since we have not discussed GIPS, it's very difficult to discuss few terminologies directly in ethics, like weighted composite portfolios or maybe terminated accounts. So I'm ignoring this question for the time being. When we discuss this, I think after that, once we discuss GIPS, after this you will be able to understand it. Okay, GIPS will be covered later on separately, not part of this. What is the best method to meet obligations under 3D? The best method is compliance with GIPS. If you comply with GIPS, you will automatically comply with 3D. Okay. What is GIPS? We'll discuss later. What should members and candidates consider when presenting performance data? What should you consider? You should consider when you are giving performance data, you should understand how, like which kind of audience there is. Audience knowledge, present performance as weighted composite of similar portfolio and include terminated accounts. Again, something related to GIPS, so I am ignoring it right now. What disclosure should be included in performance presentation? What disclosure should be included? Clarify the returns are gross of fees or net of fees, post-tax, pre-tax, right? So whatever you are disclosing the returns, be very clear about, like whether it is pre, post tax, gross of fees, net of fees. If in case, let's say the fund was not there, so simulated results is, let's say I want to give performance from 2010 to 2020, but in case the firm was formed in 2017, but I want to disclose if in case the same strategy was followed in last 10 years, 3 years I was operating, 7 years I was not operating. So you can simulate, like you are investing, let's say specifically in mid-cap stocks, that's it. So you can simulate that in case I would have invested in the same companies in last 7 years as well, other than these 3 years, how the performance of the fund would have looked like. Okay, so that is simulated performance. You're not there, but you are saying in case we were there, we would have followed the same strategy. These were the returns that we would have generated. What kind of record should be maintained for performance presentation? Basically, records used for calculation of performance, ensuring transparency. So basically, all calculations of performance that should be maintained. All the data should be maintained. Then, what is an example of violating 3D due to misrepresentation in performance brochure? So you are giving your brochure of performance, right? It need not to be a physical brochure. Maybe you are presenting it on your website as well. So this is an example. By stating 25% steady growth rate in a brochure without disclosing that it occurred only in 1 year, and by not including performance of all relevant accounts. Basically, when you are giving performance presentation, it should be of all the accounts combined. You cannot handpick, right? That cherry picking is not allowed. So in case it is done that, then it is violation of 3D. Then what happens when a performance return are not calculated in accordance with GIPS standard? Then it is violation of 3D. If in case you are not complying with GIPS standards, in this case it is violation of 3D. Then how should past performance from a prior firm be presented when promoting the performance? If you are working in previous firm and you generated certain performance, certain returns there, how you should be showing this in your present organization. It must be accompanied by appropriate disclosure that the performance was achieved at a prior firm. Then what must members disclose when disclosing simulated performance results? They should discuss like we were not there and how we have simulated this. So we are assumed that if you would have followed the same strategy with monthly rebalancing or whatever it is, then in that case this result would have been generated in the previous year where we were not existing. Must clearly identify the results as simulated. You should clearly write these are the simulated performance and explain source and methodology used to produce them. What violation occurred when composite of selected accounts was presented without full disclosure? Basically, no full disclosure is given. In that case, it is violation, right? Because you are misrepresenting the firm's performance. So composite account is basically 10 accounts are managed together. You should be giving their average returns because they are following the same strategy. But you have handpicked only the nice performing, better performing accounts. So this is misrepresentation because you have selectively included accounts that improved your performance and excluded the otherwise. Okay, and you have also not given the disclosure about it. What is required if changes are made to performance attribution methodology? In case you are changing your performance methodology, like how do you calculate performance, then in that case both original and revised results should be provided. In case let's say you have moved from one particular method to another particular method of performance presentation, the way you are calculating returns, you are moving from net of fees to gross fees, pre-tax to post-tax, so you should disclose. If the older methodology we would have followed, we would have got this result. We are following this methodology, this is the result. What violation occurred when return values were manipulated by choosing the most favorable reporting? So in case there are accounts that generated positive and negative returns, you are just picking up this. Basically you are doing selective reporting, that is again misleading the clients. Let's say if QuintEdge pass percentage is 50%. But if I say to everyone QuintEdge pass percent is 100%, 80%, 90%, then it is misleading the clients, misleading the candidates. The same applies over here. What performance report include for transparency? What performance reports include for transparency? So you should be including, like what must be included in your reports basically for transparency. So include consistent calculation methodology, how you have done the calculation. In case there is any variation, disclose that, such as using higher value between the different days of performance reporting. So I think this is just an example. What should you do? Report the methodology in case there is any deviation from the methodology or you have tweaked the methodology, disclose that. How should concerns about accuracy of performance data be addressed by members? How it should be addressed by the members in case there is concerns about accuracy of performance? Then what will you do? Members should question changes to performance metrics. You should ask the firm to change because it is not accurate, because this will give incomplete, inaccurate picture. Okay. Then why should members include terminated accounts in their performance? So let's say I was working with a client, I am working with 10 clients, out of which for 2 of them I generated extremely bad performance and they left me. Now I'm left with 8 in the next year. If someone asks me to report last 2 years performance, should I say, sir, now I have only 8, so I should calculate performance on the basis of only of these 8 accounts? No, they were there with you last year, so include them. You should include the terminated accounts. Otherwise, anyways, you are eliminating the most negative ones. It should be complete and accurate. You should include terminated accounts. How should composite portfolios be presented for accurate performance? Composite portfolio be presented for accurate performance. Composite portfolio means a portfolio that is made up of multiple asset classes, multiple accounts, right? In that case, they should be asset weighted and representative accounts should not be cherry picked to inflate the results. So weight should be given on the basis of how much allocation is done to a particular asset or asset class or shares, and you should not be cherry picking accounts within it. How can simulated performance be fairly represented in advertisement? With a disclosure that it is a simulated performance. Clearly disclose as such methodology used and explain, avoid methodology used should be explained. So it is simulated performance and how simulation is done should be taken care of. What should be done if different methodologies for calculating performance produce varying results? In case you are using two methodologies and both of them are giving different returns or results, in that case which one should you use? Answer is give both to the client. Both should be presented to the client with an explanation of differences and allow for meaningful comparison. So let's say you have to calculate returns. One is time weighted return, one is IRR, right? One is time weighted return, one is money weighted return. In that case, what will you do? You can give both of them and explain this is time weighted, this is money weighted. Both the things are fine. Okay. Why it is important to maintain performance records? Because in case you want to verify it later, if in case you want to check the accuracy, it can be done. Maintaining performance records ensure the data used in presentation can be verified. What are the consequences of manipulating composition of portfolio in presentation in performance presentation? Basically, if let's say 30% was dedicated to equity, 50% was fixed income, and remaining 20% to alternate asset class, maybe cryptocurrency. But let's say crypto performed extremely well. Now you are saying I'll give 40% weight to crypto and remaining 60% will be divided equally. You cannot do this. If you are manipulating this, then you are violating the duty to present accurately, fairly and complete information. Basically, it is violation of this standard. How can performance report mislead if they do not provide full disclosure? If they don't provide full disclosure about the performance, about the methodology used, everything should be clearly stated. In case it is not there, then you are misleading the clients. What should be done when clients request performance data of past year? Then give it to him. Present it accurately with necessary disclosures. How does standard 3D affects analysts promoting their recommendation? How does affect 3D, this particular performance presentation affects analysts promoting their recommendation? Think about it. Basically, whatever analyst is promoting as the recommendation, that maybe let's say they are promoting a particular kind of portfolio or particular fund. So the performance of the fund should be reported properly, accurately, full disclosure should be there, should be fair. So analysts must ensure the claims about the success or accuracy of recommended products or recommendations are fair, accurate and complete, avoiding any exaggeration or misleading statement. Simple, done. Okay. We'll be starting with preservation of confidentiality. Okay, but before that, let's read the text of it. Preservation of confidentiality. Members must keep information about current, ex, and prospective clients, unless three exceptions. Your client information should be kept private, whether he is your current client, he is your prospective client, or he was your client earlier, right? If in case it is the client have allowed the disclosure, so do it, then it is fine. If the client himself has given permission, do it. If in case law requires you to give that information, then also do it. Client mandate doesn't go above law, right? And number 3, if in case it is about illegal activity, concerns illegal activity on part of client or prospective client, then you should be sharing this information. Otherwise, you should be keeping it confidential. Every information about the client should be kept confidential. Like all, I should say, confidential information about the client should not be shared until unless 3 conditions are there. Number 1, The client have allowed you to share it, then you can share it. Or law requires you, then you should do it. Client's mandate is below the law. And number 3, this one. If in case it is about illegal activities, it concerns illegal activities, then you can you don't need to keep it confidentiality. You don't need to keep confidentiality, otherwise you have to preserve the confidentiality. Okay. What must candidates and members do to comply with this? I think we discussed this. When can members and candidates disclose client information? We discussed this also. Required by law, client have permitted, or it is about illegal activities. Does 3E apply to former client as well? Answer is yes. It applies to former clients as well, ex-clients as well. What should members and candidates do when there are legal requirement to disclose the information? Then follow the law. Must comply with all applicable law. But if the law requires confidentiality, members should not disclose information even if it concerns illegal activities. Interesting. Everyone focus over here. What should members and candidates do when there is legal requirement to disclose information? In case there is any legal requirement, answer is you will comply with the law, full stop. But if law requires, if you have to comply with the law and law requires you to remain silent, do not share confidential information about the client. Like if in case, let's say I'm let's say fighting a case in a court, I'm protected that I can tell the truth to my lawyer and then lawyer will present it in the court, right? I can share it with lawyer and lawyer will put it in the court. Now lawyer and I, there is no gap between us. I have to tell him everything. So I will not say I'm trying to protect the client confidentiality, right? So if the law requires confidentiality, if the law says you have to protect the client's confidentiality, you have to keep your information private, then member should not disclose information. Then member don't have to do it even if it is concerning illegal activities. Let me give you one more example. Okay, so the law is phones cannot be cracked open by, let's say, CBI. So basically, if in case there is passcode, you are not supposed to open that phone. You have to ask that person to unlock it, but you cannot forcefully do it, like snatch his phone and then give it to some person who is good with all these technical work. Forcefully, you cannot unlock someone's private data, right? This is the law. You are not allowed to do this, right? Now, the case is going on for illegal activities. But law gives you this protection that your phone will not be unlocked. So now read this. But if law requires confidentiality, in this case, yes, law requires confidentiality, then members should not disclose the information. Law have given you permission that there should be confidentiality. Then you cannot say, sir, I'll disclose illegal activity. Illegal activity ka requirement is by standards. It cannot override law. Follow the stricter law, right? Follow the stricter one. So you will follow law. Law says that you have to protect the confidentiality. Now you cannot say, sir, it is illegal activity, therefore I'll disclose it. Even if it is illegal, but law requires you to keep it private, then you should keep it private. What must members and candidates do if they are unsure about disclosing confidential information? If you're not sure, take legal help. Compliance personnel or legal counsel before disclosing the confidential client information. What are some key areas members and candidates should focus for maintaining electronic information security? Basically, how do you protect digital information? Make sure there is no accidental disclosure. Okay, accident disclosure is also a disclosure and violation. Adhere to firm's policies on storing client information on electronic device and be cautious about their security on mobile and social media platforms. Okay, even if it happens accidentally, it is breach of confidentiality. Okay. What role CF Institute professional conduct play in relation to confidentiality? Candidates and members are encouraged to cooperate with PCP investigation when permissible by law, or any other information shared with PCP is kept confidential. So this is something that we'll discuss again later. How can members and candidates best comply with standard 3E? How can you comply with this? Basically, do not disclose, avoid disclosing any client information except to authorized employees working for the client. That's it. What steps should members and candidates take? What steps should members and candidates take when considering disclosing non-confidential information? When you are disclosing non-confidential information, then let them know the context. Should consider the context in which information was disclosed, whether sharing it would improve the service to the client without violating the confidentiality. So if you're disclosing non-confidential information, check what is the impact of this. Will the quality of service improve? The context in which it is disclosed. What is the importance of training employees on confidentiality procedure? Basically, you are making them aware of client, like you are making sure the client information is protected. How can technological advancement impact client confidentiality? So basically, if in case you have some data on your server or you're on mobile phones and accidentally someone hacks it, accidentally someone gets access to it, then they might be exposed to confidential information of the client. Advancements such as social media, mobile communication pose a new risk for accidental disclosure, making it essential for firms to regularly review and update their confidential practices. Okay. What should members do if a client wishes to communicate confidential information through inappropriate method? Read this again. What should you do if client wishes to communicate confidential information through inappropriate method? Who is doing it? Are you disclosing it? No. Who is disclosing it? Client. Clients want to communicate some confidential information but through inappropriate method. Then firstly, let them know that, sir, this is inappropriate way of communicating. Let us do it using appropriate way. Discuss the appropriate method for communicating confidential information with clients and advised against using insecure platform like social media and for sensitive information. Let's say client is telling you something confidential, but he is telling you via Facebook message. It is not safe. It is not encrypted. There have been many instances of Facebook account security breach. Then let the client know, let's discuss this in a meeting, right? Or let's discuss it over secure mails. Let us not put it over the Facebook messages, right? Okay. Next, what should some person do when asked to disclose confidential information about the client's plan? That person, that member should divulge, should refuse to divulge sharing the information. What mistake did a person do when she shared, the member did when she shared information about client's charitable donation plan? It is again client's information, confidential information. The mistake is by revealing this confidential information. What should a person do when government official examine pension fund records and the person suspects illegal activities by a client? So pension fund is a client and government officials are examining the accounts of pension funds and you are a member. What should you do in this case? Firstly, inform the supervisor, go to legal counsel, and if required, she can report the illegal activity as well, and she can also resign from this particular role. How should a person handle suspicion of embezzlement, chori, by CFO of a client's company? Okay, so there is a client company in which you are an analyst, or you are helping that client, and you come to know that the CFO is stealing the funds. Then in that case, what should you do? Firstly, go to your compliance department, determine whether the securities regulation require reporting of CFO's financial misconduct. Let's say SEBI says that in case you come across any senior manager doing some frauds in the company, you have to report. Basically now it's a law requirement, so you have to go and report the illegal activity. What should a person have done differently to prevent accidental disclosure of a client's confidential information? Just should have been more alert. Should take reasonable precaution. Why it is important to avoid disclosing client information unless authorized or illegal? Because without proper authorization, there will be violation of 3E, and that can actually damage the client's reputation and trust and cause them financial loss as well. What should members do if client accidentally disclose confidential information on a public platform? Immediately ask him to remove it. Okay, and inform clients about the risk of sharing sensitive details on public platform. What are the consequences of failing to maintain confidentiality in electronic communication? Violation of 3E. How does 3E relate to professional conduct investigation by CFA Institute? Basically, if in case there is any misconduct and CFA Institute knows about it, comes to know about it, they can do a professional conduct investigation on you, right? So it is regarding that, how 3E is related to professional conduct investigation by CFA Institute. So 3E says that you should cooperate with the CFA Institute investigation by sharing client information with the PCP as part of an investigation does not violate 3E. So in case there is an investigation going on you and for a professional misconduct, and now because of that investigation you have to share client information, so is it preservation of confidentiality, breach of this particular standard? Answer is no. If you are cooperating with CFA Institute, in that case it is not a violation of 3E. Okay, members are encouraged to cooperate with investigation of CFA Institute, and sharing client information with PCP as a part of an investigation does not violate standard 3E. Can members disclose client information to improve services without breaching confidentiality? Everyone focus over here. Can member disclose client information to improve services without breaching the confidentiality? You are disclosing some client information to improve the services and you are not sharing the confidential information. Can you do it? Yes, no problem. But only if the information is outside the scope of confidentiality. Yes. What should members do if they are asked to share confidential client information within their firm? So you can only do it with authorized employees who are also working for the client. I'm working in, let's say, team A or department A. If let's say HR department asks me to share this information, I'll share no. If we are working as a team, I have to share it with like my senior, my juniors, my colleagues. But outside the department, I don't have to share. You can only share it with authorized employees. How does 3E addresses compliance with interdepartmental communication restrictions within the firm? Requires members to comply with law and regulation that restricts flow of information within the firm. Basically, the point that I discussed above. Okay. What action should members take to prevent accidental disclosure of confidential information? Follow firm's policy. Right? In case it happens accidentally, then also inform that it happened accidentally. Okay. How should members handle requests for client information from external parties? If in case it is a confidential information, say no. If it is some information that anyways is available in public domain, then you can share it. Members should assess whether the information can be disclosed under 3 or not and consult legal counsel or personal compliance person if unsure. What procedure should be in place for firm to maintain confidentiality of client information? Procedure for storing, sharing, communicating client information. Then what should be the response when client requests communication through unsecured channel? Then through unsecured channel, maybe it is via a public platform, via a Telegram group, all these things. So inform client that there is a risk and encourage to use a proper channel to prevent confidentiality. You cannot say no to client that I'll not share, but at least let him know, sir, this is not the right way. Come to my office, I'll come to your office, or maybe I'll send someone to collect the information or to share the information, or maybe let's do it via encrypted servers, right? What should members consider before disclosing information outside the confidential relationship? Then just evaluate the relevance of information that is being performed, whether disclosure would violate the confidentiality or not. Basically, other than confidential information, if required, you can share. But before doing that, at least let's assess what kind of information you are sharing. How should members ensure their firm's practice aligns with standard 3E? Members should encourage their firm to conduct regular trainings on confidentiality procedures and update their policies. Okay, so we are done with confidentiality as well. I hope you are enjoying this. I'm trying to walk you through all the questions possible. Okay, we are done with this. Now loyalty and prudence, loyalty, prudence and care, fair dealing and suitability. Let us discuss fair dealing first. Okay, now let us start with fair dealing. Members and candidates should fairly deal and objectively deal with all clients. All. Providing investment analysis, making investment recommendation, taking investment action, or engaging into any professional activity. Basically, every client is equal. Every client, I should not write equal, we'll learn this. Every client should be treated fairly. That's it. Every client should be treated fairly. Does fair means equals to, like, does fairness equals to equality? Answer is no. We'll learn about it. I think what is standard 3B we saw. What does it mean to treat clients fairly instead of equally? Treating clients fairly means do not giving any favor to one client over another. But can you offer extra services to one client in comparison to another? Answer is yes, depending on what kind of package they have obtained for. This does not mean treating clients exactly the same. If they have different investment needs and objectives, members can offer different level of services and this must be disclosed. So those services, important point is that packages, you cannot say, sir, premium package is not available to you. Packages or whatever the service is, the top tier product should be available to everyone. It should be disclosed to everyone as well. Okay. How should members handle investment recommendations fairly? If you have done some research and basis that research you want to recommend a particular investment product, how will you ensure like it is treated fairly? Everyone should know about it at the same time. You cannot say I'll inform few clients today and few clients tomorrow. Send them mail at the same time. Okay. Any material changes to previous recommendation also should be communicated at the same time promptly. What is the right way to handle information investment actions? Right way to handle in the context of 3B. Investment action like buying a particular security, selling a particular security, you have to make sure that everyone is treated fairly. Treated fairly as in no client get advantage over another client. You cannot say I'll give buy recommendation to the top tier client first and then the later, maybe tomorrow after 1 week, to the other clients. No. If let's say there is a new stock issue, it should be allocated fairly amongst all the clients. Another example, right? How should oversubscribed issue be handled? So let's say there is an IPO. Now IPO is oversubscribed. So let's say you applied for 100 lots for your 10 clients. Let's say 10 lot per client, but oversubscription is there. So you have not got the 100 lots, you have got 60 lots. Now you cannot say I'll give 10 lots to premium client and the non-premium client will not get anything. Then, okay. So the camera battery just died. So now we are starting with this again. Okay. So in case like there should be pro rata distribution, right? So in case there is an oversubscribed issue, that is what clients want to buy is more than available shares, then it should be distributed fairly, typically prorating, like proportionately. Everyone will get 6/6. Okay. Members should avoid allocating shares to themselves or family members. First client, then yourself. I think this is pretty easy to understand. How does selective disclosure violate fair dealing? Selective disclosure is you are disclosing some information and you are not disclosing some information. Selective disclosure occurs when members give investment information to certain clients before others. That is violation. Should be given at the same time. How can firms ensure fair trade allocation? Fair trade allocation, how will you ensure? Firstly, see what is fair trade allocation? Let's understand this. Firm should have a clear procedure to allocate trades fairly. Example, documenting the trade orders, allocating trades on first come, first serve basis, and ensuring all the clients participating in block trade receive the same execution price. Sir, what is fair trade allocation? Let's say there is one client who's taking the most expensive package from me, the premium services, and there is another client who is taking non-premium services. Now I have inventory of 10,000 shares. Both of them want to buy. This person gave me order to buy at 10.2. This person gave me order to buy at 10.5. So fair trade allocation should say, let's say this person have told I want to buy 3,000 shares. So I'll give him 3,000 shares and remaining 7,000 can be given to him. Let's say this person told I want 9,000 shares. So I cannot say I'll give this person 1,000 and give this person 9,000. No. First he'll execute his trade, he'll get 3,000, balance will be going to this person. Okay. Firm should have clear procedure allocating trades, like documenting the trade orders, allocating trades on first come, first served basis, ensuring clients participating in the block deal receive the same execution price. Block deal as in, let's say all the clients combined have placed order for 1 lakh shares. A block deal have happened in which you have got them 1 lakh shares at the rate 50 rupees per share. Now you cannot say I'll give this the most premium client at 47 and the non-premium client at 52, averaging out to 50. You cannot do it, right? Everyone should be getting the same price. What are block trades? Block trades involving placing one large order from multiple clients to improve the execution efficiency. We have discussed this. What are the disclosure requirement for trade allocation? Disclosure requirement is what is the allocation process, first come first serve basis, etc. Right? This basically helps trying to understand how, if in case they are placing an order, how it will be processed. What is the purpose of systematic accounts review? What is the purpose? Sir, what is systematic account review? Audits. Systematic account review ensure that no client is receiving preferential treatment, that investment actions are suitable for each client's objective. Regular reviews can detect any biasness or unfairness. So basically, how the clients are being treated, audit of it. Systematic account review will help you to understand, is it the case that order was received first from this client but still his order was executed first? Something like this, okay? Is there anyone who is receiving preferential treatment? Whatever, let's say this account is of a retired person. This account is of a young person. This young person can take on the volatility. This person should not be taking a lot of volatility. So all the investment actions are suitable to each client's objective or not. You should not be putting a lot of equity weight over here. Can members offer different level of services to client? Yes, you can do it. Equality doesn't mean fairness. We have learned this. What are the guidelines for handling family members account? Family members account should be treated like your, see, if let's say I'm the fund manager, I have client ABC and my father account. My father account should be treated on par with client ABC. Should be treated as same other client's account. should be treated as same other client's account, especially if they are fees paying accounts. Anyways, you have to treat it on par. What does simultaneous dissemination means? That means giving information at the same time. Simultaneous dissemination means sending investment recommendation to all clients at the same time. Avoid giving information first to preferred clients and second to not preferred clients. What is pre-dissemination behavior and why it is important? Pre-dissemination refers to the actions of members before investment recommendation is released to public. Members should not take any action based on recommendations before the information is shared with all the client. So pre-dissemination simply means, firstly, information will be shared with client. Then after this, before this, you should not be doing anything. Members should not, where is it? Members should not take any action based on recommendation. Once you have made a recommendation, just a second. Members should not take any action based on recommendation before it is shared with all the clients. Basically, you cannot say before giving it information to client ABC, let me trade in my personal account, my father's account. No. How should trade orders be documented to ensure fairness? To ensure fairness, basically first come first serve basis, or whatever is your methodology, it should be like not promoting favoritism. It should not be treating one client over another, right? Properly documented and time-stamped to ensure that trades are processed in the correct order. Whatever is the firm's policy, basis that. How should members handle new issues fairly? New issues like IPOs, etc. Allocation should be based on client's interest and suitability. If issue is oversubscribed, then follow fairness, that is pro rata allotment. And members should not keep shares from themselves. If it is oversubscription, don't allocate to yourself first, your father first, client, and then yourself. What is the duty of fairness in relation to IPOs? I think we have discussed this, distributed fairly. Why it is important to have clear allocation procedure for bulk deal? Because every client should be treated equally. Fairness should be given to equal all the clients. Otherwise, it will be violation of standard 3. What are hot issue securities and how they should be handled? Hot issue security. Anyone aware of this term, hot issue security? Don't read it. Hot issue security is highly demanded stock. If there is a lot of demand of a stock, let's say what happened with Hyundai recently, lot of demand for the stock. So we'll say it is hot issue security. Hot issue securities are stock in high demand that trade at a premium once they are available, right? So like post listing, you will see the price going up because it is in lot of demand. Members must ensure that these securities are fairly distributed amongst clients and not used for personal gain. The same application as normal securities. Okay, next. What is the role of soft dollar agreements in fair dealing? Okay, so firstly, let's understand soft dollar commissions, etc. You will come across these terms in ethics. So there is something called as hard dollar and there is something called as soft dollar. Hard dollar is you take a service and you pay in cash, right? Simple. You take a service, you pay in cash. Soft dollar is you take a service but you pay using some indirect way. For example, let's say there is a fund house. Fund house will be managing clients' accounts. Now fund house have to, let's say, execute a buy order. It will do via a broker. Broker is giving services to fund house. Maybe giving some research reports. Now ideally broker should charge him. Fund house should pay broker the fees. But since fund house is also going to execute client's trade via broker, so broker is giving commissions to fund house. Broker should be paying commission to fund house, and fund house should be paying the cost of research report. But indirectly, like they set off each other. So you don't have to pay actually this because you are executing trade via them. This is soft dollar, right? Soft dollar. Soft dollar arrangements where brokerage services are paid for with client's commission should not disadvantage clients. Members must seek best execution for their clients and ensure that any soft dollar arrangements benefit the client. Basically, whatever commissions you are earning via broker, that commissions should directly be benefiting the client. Okay, let's move to maybe one or two more questions. You will understand. How should different fee structure be communicated to clients? Different fee structure must be clearly disclosed. Any difference in service levels or fees to all clients. At what fees you will be getting what kind of services, you have to disclose it to all the clients. Basically allow clients to make informed decision. Tell them, okay, these are the products available to us and this is the charge. How should members ensure fairness when making investment recommendation to multiple clients? Make sure you are making recommendation as per suitability of their portfolio. You are giving them information on time. You are giving them at the same time. How can members maintain fairness in trade execution? It should be done as per the policy of the firm, which is already disclosed to the client how the trade will be executed, and should be done fairly, timely and fairly, with all clients receiving same level of care and attention in trade processing. Okay. How should members handle conflict of interest in trade allocation? We have already discussed this. Do not prioritize one over another. Okay. I think soft dollar, you will come across this somewhere else as well. So soft dollar commissions should be used for the benefits of client. You cannot use this commission for some other own purpose, right? You are earning because of clients, so these research reports should directly benefit the client. Okay, we are done with this as well, fair dealing. Then suitability is left, loyalty, prudence and care is left. Let us deal with them one by one. Firstly, let us deal with suitability. Suitability, when members and candidates are in an advisory relationship with client. Oh, so suitability is only applicable to advisory relationship. Answer is yes. When you are making advices, investment advices to clients, in that case, you must make a reasonable inquiry into clients or prospective clients' investment experience. How much experience he holds of making investments, what is his risk and return objectives. It is your responsibility to ask all these things. What are his financial constraints prior making any investment recommendation or taking any investment action. And it is not one time thing, it should be reassessed over the period of time. Reassess and update this information regularly. Basically understand his experience, his risk return profile can change, his financial constraint can change. So do it frequently. Determine that an investment is suitable for client's financial situation. Basically, retired or pension funds ideally should not be invested into, let's say, cryptocurrencies, very volatile, right? Should be consistent with the client's return objectives, mandates and constraints. Basically, whatever client have told you as per his financial situation, it should be suitable to him. You have to judge the suitability of investments in the context of client's total portfolio. This is important. It should not be done on the basis of the judgment about whether this particular product will suit him or not should not be done on just seeing a part of portfolio. It should be done at portfolio level. With examples, you will understand this. Number 2, when members and candidates are managing portfolio for a specific mandate, strategy or style, they must make only investment recommendation or take investment action that are consistent with investment objectives and constraints of the portfolio. If you are, let's say, managing value portfolio, then do not chase the momentum, as simple as that. If you are managing portfolio for a pension fund, Please do not park that money where like there is a lot of volatility. Okay, let's discuss this. Suitability. First question, what must members and candidates do before making investment recommendation or taking investment action in an advisory service? Make reasonable inquiry into risk return profile, his objectives, investment experience, risk return profiles, financial constraints, and reassess and update it regularly. How should members and candidates ensure that an investment is suitable for client? How will you make sure? By understanding his financial condition. Must determine the suitability to the client's financial situation consistent with his objectives, mandates, and constraints. What should members and candidates consider when judging suitability of an investment? When you are judging suitability of an investment, consider his total portfolio, his risk profile, and whether the client has means to assume the associated risk. See, we'll discuss this. So, let's say my account and my father's account, his risk appetite, my risk appetite is very different. So I'm very darpoke kind of investor, extremely risk averse, right? Maybe this is because of my Marwadi genes, or like I cannot stand loss of capital, right? So for me it is, don't give me exceptionally, I don't want 20% return, 18% return. Give me 12%, 15%, even 10%. But I don't want to lose capital. I don't like lot of volatility. On the contrary, my father, in spite of his age, like he's 60 plus, but despite of this, he is very much into risk taking. So he says that, see, whatever I have to do, I have already done. You are well educated, you are managing your own business. Whatever savings I needed, I already have this. I have every financial obligations. I don't have any financial obligation. Whatever parent should do for a kid, I have done it for you. Now I have some extra capital of maybe 50 lakh rupees, right? And then other money is parked there. That 50 lakh rupees, I can do XYZ things with it. I can invest in stock market, I can explore crypto, I can park it into real estate, I can just flip the real estate properties, I'll put it into bonds that are coming. I'll manage. He keeps on playing with that money, right? He's able to generate, but he's very volatile. Like he can absorb that volatility. For me, it is like I'm not able to sleep at night, right? So for me, suitability is, though I am young, the suitability says that it should be a very stable kind of portfolio. Lot of allocation to fixed income securities and very small allocation to equity. For him, it is different case, right? The total portfolio that he is having, let's say, is of 50 lakhs, and he is ready to take lot of volatility because it's not about his age. He is able to absorb them. It suits him. He don't have any financial obligation. Maybe I have a loan, right? He don't have any loan. So because of that, like the managers should understand what is the need of a particular client, what is the risk profile of the particular client, and whether the client has means to assume the associated risk. I don't want to take risk. I don't also have means to take the risk. My father wants to take risk and he is having surplus capital as well. So he have means to assume the associated risk, but I don't have it. What must members and candidates do when managing a portfolio to a specific mandate or strategy? Do not divulge into any other thing. Must make sure only investment recommendation or actions are consistent with those stated objectives or strategy. What are the key highlights in developing an investment policy for clients? Key highlights is understand client's risk profile, update the investment policy, ensuring diversification. This is important. There should be diversification. You would want to reduce the risk. Unsystematic risk, you would want to eliminate as much as you can. Addressing unsoliciting trades request and managing an index or mandate. So what are the key highlights for developing investment policy for a client? When you are developing a document for a client that that helps you to understand how you are going to park his money, his financial constraints, his goals, etc. So you should be accounting for all these things, like addressing unsolicited trade request. If in case something is outside this policy,
how we are going to deal with this, managing an index or mandate, how you are going to manage that particular mandate, updating the investment policy, what frequency you will be updating, every year, every 6 months, once in maybe 2 years, 3 years, right? Then why is gathering client information critical in developing investment policy? Because it helps you to understand his financial circumstances, risk, objectives, etc. What should be included in written investment policies, ISP? What should be included in IPS, investment policy statement? What should IPS contain? All the things that we have discussed above. Risk tolerance, his return requirements, investment constraints, responsibilities of the parties involved. Constraints, risk, return, responsibilities. What factors should member consider when understanding client's risk profile? I think it's pretty much clear from above as well. Risk, impact of investment strategies and possible effects of changing investment environments on client's portfolio. This is slightly different. What factors members should consider when understanding client's risk profile? You are trying to understand client's risk profile. If market condition changes, what will be the impact on client's portfolio? The impact of strategies that you are going to deploy and his risk level, risk tolerance level. How often should investment policy statement be updated? Answer is once in a year at least. Should be updated at least annually before making any material change to investment recommendation or decision. So once annually, and in case let's say you are changing the strategy or you are doing some major change in the policy, then the document should also be updated. What is the importance of diversification in a portfolio? Diversification reduces the risk, ensuring unique risk of individual investments are minimized. What should members do if they receive an unsolicited trade request that is unsuitable for client? So they have received a request. Let's say I'm a very not so aggressive investor, but one day I asked my portfolio manager, I have heard about this coin ICO, like a crypto coin coming to the market. Each of my relative friends are invest in this. How will members deal with it? So firstly, inform the client that, see, remember the original document we prepared in which it is written you don't want aggressive investment. So discuss the concerns with the clients, then educate them how request deviates from IPS. Can you say, sir, I'll not do? No, it is his money. You will have to do it. And if necessary, seek client approval or update the IPS. So sir, if you are saying this, so can we make like risky bets also? Maybe 10-20% of your portfolio can go into risky bets. If it is fine, then update the IPS. Just educate him, address the concern, right? Wait for, takes client approval, right? What are the options if client insists on unsuitable, unsolicited trades? So I think we have discussed. What is the option if the client insists you? Then you may execute the new trade in a unmanaged accounts or evaluate whether to continue advisory arrangement if no options are available. So firstly, unsolicited, basically outside the IPS that we prepared, a request is there. In case it is fine, continue with your employment, continue with the services to him and execute this trade into separate account. Okay, and if it is not possible for you, ask him to disassociate. Basically, you will not be able to continue the advisory arrangement. What are the members' responsibilities when managing pooled asset to a specific mandate? Just coming back to the previous question again, why you would want to discontinue with advisory arrangement? Let's say I am an expert into fixed income securities, but now he wants to invest into real estate. I can't do it. That's why I'll say, okay, sir, maybe I'll refer you to some other person who is able to take care of real estate. Now he will be managing your account. Please go and connect with him. Okay. Next, what are members' responsibility when managing pooled asset to specific mandate? So pooled asset means, let's say
You are managing mutual funds. And the mandate is, it should be invested in blue chip securities. Now you will think about fund at a large, mandate at a large. You cannot think about individual accounts. Let's say there are 5,000 accounts within this. You cannot manage them individually. If they all have agreed for a mandate, you don't have to pay attention to individual accounts. Invest in the manner consistent with the mandate and the fund of the fund, and are not responsible for determining suitability of the fund for individual investors. Okay. If they have agreed to the mandate, then at large you have to take the decision. What should members include in an IPS to fulfill standard 3C? These are the things: client information, name, address, some details, other personal details, date of birth, etc. Objectives, constraints, and performance measurement benchmarks. Okay. How should members and candidates conduct suitability test? Basically, whether an investment product is suitable for a client or not. By understanding the impact of that particular investment on the portfolio diversification, if included, that particular product is included in the portfolio, how it will impact the diversification, risk with the client's risk tolerance level, what is the risk of that particular investment, and what is client's risk tolerance level, and assess the fit with required investment strategy. Does it go with the current mandate or not? What is an example of violating 3C due to differences in client's risk profile? Basically, if someone wants aggressive investing, do not recommend him. Passive, do not recommend him less aggressive one, and vice versa. Example, an advisor recommends an aggressive investment strategy to risk-averse client. How should members judge the suitability of an investment within a client's entire portfolio? Members should consider how a particular investment will impact the overall characteristics. Let's say portfolio is of 10 CR. You are adding 1 CR of Bitcoin into it. How the returns and risk of overall portfolio will be impacted, right? Rather than focusing on individual securities, yes. Why is regular communication with clients essential for updating IPS? Because the changes happens in client's life, his financial situations. Basis this, his investment objectives will also change. Maybe like his father died and received lot of inheritance. Then the financial condition now has suddenly changed overnight, right? Like large inheritance, which may affect their ability and willingness to take risk. What should members do if they invest in a manner inconsistent with fund's mandate? Then align it. Align with the mandate. What happens when an IPS prohibits illiquid investments but member invest in such asset class? It is violation. If the client have said, don't invest my money into real estate, you end up investing there, then it is violation. What is an example of failing to assess appropriateness of sub-manager for clients? A member violating 3C by selecting sub-manager based solely on fee structure without considering the risk profile of clients. So, a fund manager or a fund house will have multiple managers, right? Manager 1, manager 2, manager 3, or a fund house can invest into multiple other products as well. Now let's say the fees here is 3%, 1.5% and 2.5%, right? So you cannot just say, I'll select this fund manager because he is the cheapest to manage. So selecting sub-manager solely on the basis of fee structure should not be the case. Fee structure is important, but consider other things as well. Maybe fees is 1.5%, but the returns are hardly 8%, and the client is very aggressive into returns, and his expected returns are 12 to 15%. So the fees is less, the return is also less, so you should not be selecting him. How can compensation arrangements conflict with the risk profile in an IPS? Compensation arrangements, basically a fund house end up investing in, let's say, or end up investing in a particular security via broker. The broker said this, if you invest in particular kind of security or in particular kind of portfolio, we will give you 3% commission. It is a very high commission for execution of trades. But this particular portfolio is high risk and the client is risk averse. So you have breached this particular standard by purchasing, let's say, high beta security for long-term pension plans to achieve short-term performance. Again, is against the risk profile of clients. Why must members establish an IPS for each client? So it should be done for each client, and if it is a pooled account, then it becomes difficult. Then what you do is, there is a mandate that you inform the clients in advance, because you have to ensure that for each client you will ensure that the recommendation match their risk and return profiles. Okay, with this we complete this standard as well, 3C. Now we are left with, where is it? Oops. We are left with this, loyalty, prudence and care. Okay. So we don't have a lot of questions on this, loyalty, prudence and care, 25 questions. Okay. Let's read this, loyalty, prudence and care. Members and candidates have loyalty to their clients, duty of loyalty to their clients, number 1. And you should act with reasonable care and exercise prudent judgment, exercise prudence. You have duty of loyalty to your clients. You must act for the benefits of their clients and place client interest before their employers as well as their own interest. Client, employer, own. Okay. So you have duty of loyalty to the clients. Clients come first. That's it. Okay. And whenever you are doing anything for them, you should be exercising prudence judgment. You should be having reasonable basis for taking a decision. You should take reasonable care. Okay. Now, what is the primary duty of members and candidates under 3A? We have discussed this. What are the key components of acting with prudence? Prudence means being careful and cautious. Members should balance risk and return, making sure the investment action fits the client's need. What should members do if they are unsure about investment decision on behalf of a client? What should members do if they are unsure about investment decision on behalf of the client? Then in that case, what will you do? Consult the client. And if that is not possible, inform client in writing for the approval, ensuring that they act in the client's best interest. I think it's easy. If you are not unsure, ask client. If in case that is not possible, inform the client in writing to get the approval. Ask him for the written approval. How should members identify the actual investment client under 3A? Members should find out who is the real beneficiary. So example is, okay, they have given this example. So fund house is providing its services to pension fund. But pension fund house is not the real client. The real client will be here, the pension, like the normal people like you and me, right? The government officers, etc. The people who contributed for their pension. So ultimately, you will be working or you have loyalty towards pension, not towards pension house. You will be pension fund. You will be having like duty of loyalty towards these people. Okay. While managing plans or trust, the duty of loyalty goes to the beneficiary, not just the company that is hired by them. What are soft commission policies and how they can violate 3A? So I think we have discussed soft commission policies previously. Involve using client commission to buy research services. Members violate 3A if they pay higher brokerage fees for services that don't benefit the client. I told you there, the soft commission part should be used for the benefits of clients only. What obligations do members have when voting proxies on behalf of the clients? So when you are holding shares on behalf of the clients, like I have invested in mutual fund, let's say 9 lakh rupees. Now mutual fund is ultimately holding it in my name and I get units, right? Mutual fund is holding, fund house is holding. Now they get to participate in the decision making of the company, in the meetings of the company. They get to vote. So they are not the real owners. I am the real owner. So they are voting on my behalf. They are voting as a proxy. What obligations do members have when voting proxies on behalf of the clients? So answer is, vote should be benefiting the clients, right? It should not be benefiting the fund house. It should not be benefiting anyone else. It should be behaved in such, like you are representing the client, so you would want the best interest of the client. How should members manage conflict of interest between their firms and client's interest? If there is any conflict of interest between firm and client, client always comes first. Avoid conflict of interest. If they cannot avoid, then disclose the conflict of interest clearly to ensure there is transparency. So you will act in the benefit of client. You will disclose the things. In case you cannot avoid that conflict of interest, in that case, clearly communicate that also to the client. What are the requirements for disclosing compensation arrangements to client? All form of compensation arrangements, we have discussed this earlier as well. All form of compensation you should be disclosing to the client. Anything, fees, commission, etc. should be fully informed so that there is no conflict of interest. How should members and candidates handle client directed brokerage? Client directed brokerage. Sir, what is client directed brokerage? Basically, client have asked, don't execute my trade via Zerodha, execute it via Upstocks. So that is client directed brokerage. If a client directs which broker to use, member must still aim for the best prices and execution. I cannot say, sir, you suggested that broker, I executed trade via him. Still negotiate for the best prices. They must also explain any trade-offs. Like maybe I would have used Zerodha, the fees, the commission, or maybe like the fees charged by Zerodha will be 1% of the trade size. But you have directed me to use Upstock. I have negotiated to the best of my ability, but still you have to pay 1.2%. So like potential large fees, first execution quality, just inform them about everything. What should members and candidates do to ensure that their duty of loyalty, prudence and care is upheld? So it is very easy generic question. Be transparent, follow all laws, regularly reviews portfolios. Disclose the conflict of interest and ensure the investments matches clients' goals and tolerance. What is the responsibility of members and candidates with respect to clients' investment objectives? Think about it. I'll grab a water bottle. Okay. What is the responsibility of members and candidates with respect to clients' investment objectives? So before making any recommendation to client, make sure that recommendation meets the client's objectives. Before making investment recommendation, must understand the client's investment experience, goals, risk tolerance level. How should members and candidates handle diversification in client's portfolio? Should diversify as much as possible. Should diversify client's investment to reduce the risk. What is meant by best execution under standard 3A? Best execution of what? Best execution of trades. Best execution means making trades that maximizes value for client and getting the best possible terms. Basically, get him the best deal. Okay. How should members manage proxy voting for clients? Proxy voting, basically, we understand what is proxy voting, right? You are, like fund house is holding shares of company for the unit holders. Now, unit holders will not take decision. They have units. Fund house ultimately is like, they are the DIIs, right? If it's a domestic fund. Now, they will be voting on the matters discussed in the company's meeting. So, make sure the vote is taken in such a way that it benefits clients, and make sure they follow policy that fits client's goal. And they should disclose the proxy voting policies and ensure voting is done responsibly. Okay. How should members handle client asset custody? Basically, you are holding, owner is client, you are holding his assets. How will you handle this custody? So answer is, you must tell client where their assets are held. Location. Provide detailed statement at least quarterly. Give details, like detailed statement, buy, sell, particular security, its prices, etc. Listing transactions and balances, closing balance, basically passbook of asset. Client assets should be kept separate from other assets, including members' own. Firm's asset kept separately, client's asset should be kept separately, and your own asset obviously should be kept separately. What steps should members take to handle firm's conflict of interest that affects client? In case there is a conflict between firm and client, sir, firm pays us the salary, so we will favor the firm. Answer is no. Firstly, disclose any potential interest or actual conflict of interest to client. Disclose them this so that client can assess how it affects the decision. Okay, so you have to give the disclosure. When is soft dollar usage acceptable under 3A? It is only acceptable if the research or services bought with the client's commission directly benefits the clients. Otherwise, it violates duty of loyalty. What is the requirement for regular portfolio review? Basically, at certain frequencies, maybe once in quarter, once in half year, annually, the portfolio should be reviewed. Basically, the condition changes, the market changes. So does your portfolio aligns with the goals of the client or not, right? And I think I have not highlighted this. Asset custody detail should be shared at least quarterly. Okay. What is the requirement done? How should directed brokerage be handled under 3A? We have discussed what is directed brokerage. Members must seek the best execution, even if it is directed brokerage. Try to get the best deal possible. What are the reporting requirement for members who manage clients' assets? Reporting requirement for members who manage clients' assets. You are managing clients' assets. So you have to give reports about the custody of the assets. You should give regular reports, at least quarterly. Detailed statement, transactions, all the assets, balances, debit, credits, basically passbook of assets, statement of assets should be given. What is the importance of placing client's interest first under 3A? Basically, firm or personal interest should not affect the decision that you are taking for the client. Last 3-4 questions. How does proxy voting relate to loyalty and prudence? Proxy voting is a fiduciary responsibility. Members must vote in a way that maximizes, I think pretty much easy to understand. What is the responsibility of members when providing investment reports to client? It should be accurate, complete, and full disclosure should be there. In case there is any error, it should be promptly corrected. How does confidentiality tie into 3A? You should protect information of all the clients and not disclose it without the client permission or when required by the law or illegal activities going on. We have discussed this earlier. What should members do if they have custody of client's asset? Then manage it with extra care as per the rules or agreement that you have with him. Give him at least quarterly reporting of the statement, debit, credit, balances of the asset. Okay. With this, we complete standard 3. Okay, now let us start with duties to employers. Everyone focus over here. Focus. 3 substandards: loyalty, additional compensation arrangements, and responsibilities of supervisor. Just 3. I'll read this paragraph, we'll solve question. I'll read this paragraph, we'll solve question. And I'll read this paragraph and we'll solve questions. Okay, let's erase this. Oops. Firstly, loyalty. In the matters related to employment, members and candidates, ignore this point, just over here. Members must act for the benefit of their employer. act for benefit of employer. Okay, and not deprive employers of the advantages of their skills and abilities, divulge confidential information or otherwise cause any harm to employer. So in whichever firm, business you are working with, firstly you should be acting for the benefit of your employer. That means if in case there is any conflict of interest, employer will come before your own personal interest, and you should be using all the skills you have whenever you are delivering the work. Number 3, whenever you work in a business, you gather confidential information, right? You should not be spreading that confidential information or in any other way cause harm to the employer. So if I want to divide it into points, one is act for the benefit of employers, basically work. Second, work with your 100% abilities. Third, do not spread, do not let others know the confidential things about the business and the trade secrets, etc., and whatever like information you have about even other things as well, and do not cause harm to the employer. Okay, now I think let's start with the questions. What must members and candidates do to maintain loyalty to their employee under standard 4A? What you should do, we have discussed this. Act for their benefit, do not harm employer, or do not take advantage of confidential information, and use 100% of your skills. Can members prioritize their personal interest over employer interest? Na baba na. You should not prioritize employer over employee. Members must not prioritize personal interest over employer's interest, but they are not required to subordinate important personal and family obligation to their work. What is required of members who want to engage in independent practice while employed? If you are working in an organization, you want to start something of your own, independent practice of your own. In that case, you should let your employer know, notify the employer that you would want to engage into independent practice. Then you let him know about the nature of the work, nature of the practice, duration, compensation of independent practice, and receive consent before rendering the service that could compete with the employer. Okay, first of all, if you are working in an organization and you are planning to start something of your own, independent practice, so inform the employer and take written consent from him. What will you inform? What kind of work? What is the expected compensation? What kind of duration, and other details, right? And in case you are devoting time, or basically you are starting competing service, in that case take consent before. Ideally you should be taking before only, but if in case you are having a like competing service, in that case explicitly you need it before. Okay. How should members handle their responsibilities when planning to leave an employer? If you are planning to leave an employer, what will you do? Even if, let's say, you are serving notice period, but still you are working, so you will continue to work in the best interest of employer. Do not engage into any conflicting activities. Avoid soliciting clients, that is making firms clients to my own clients, or using employers' resources for their future business until after they leave the employer. Basically, you cannot use the office laptop for your own personal purpose, ideally, right? Or you cannot ask office clients, sir, I am leaving the project, you pay them maybe, let's say, $10,000 a month. Anyways, I am handling the project, I'll do it for $3,000, $4,000 a month. You cannot do this. Do not engage into conflicting activities and continue to act in the best interest of employers. Even if you have decided to leave, you are serving notice. Can members take client list or proprietary information when leaving the employer? Can you do this? Can you take their own like proprietary information, or maybe can you take client list? Answer is no. It's a clear no. No, cannot take client list or proprietary information, including any kind of information, client records, company files, trade secrets, until unless you have permission. I don't think any employer will give you permission for this, but without permission you cannot take. What should members do with their social media accounts when leaving the employer? Bitch about them on social media? No. What should they do? They should follow the policy of employer's policy regarding handling of firm co-owned social media accounts, and ensure that they do not use those accounts to solicit clients, promote competing business without the permission. Okay, so I think we misunderstood the question in some way. What should members do with their social media accounts when leaving the employer? And the answer says members must follow their employer's policies regarding handling of firm owned social media accounts. Okay, so the question says their social media account. So there I think is referring to the firm's social media account. What should members do with their social media accounts when leaving the employer? Lack of clarity is there. Let's see it from both point of view. If let's say it's your personal social media account, you're not supposed to use it for saying bad words about the employer for whatsoever you are leaving the firm. And in case it is firm's social media account, you have to follow your employer's policy regarding handling of firm social media account, and ensure that they do not use those accounts to solicit clients or promote competing business without permission. Is it acceptable for members to use their knowledge and experience gained from employer after leaving? Yes, knowledge is yours, experience is yours, you can use it, right? But you cannot use their clients list, client data, right? You cannot use their confidential information as well. How should members handle a situation where they suspect their employers is engaged in unethical or illegal activity? Now, loyalty says you should not do anything. Is it the case? I am loyal to my employer. Even if he is doing unethical thing, I should be loyal to him. Answer is no. You should not be loyal to him anymore. You should be loyal to law, CFA Code of Ethics, or in case firm policy is there about whistleblowing, you should be loyal to it. So follow firm's whistleblowing policy or go to legal counsel if necessary for protecting the clients and market integrity. Where is it? If necessary, they may act in the interest of protecting client and market integrity, even if conflict with their employer's policy. Okay, so basically, you can go to regulatory authorities as well. Okay, if your employer is engaged in unethical activity, it doesn't mean you have to be loyal to him. Use firm's policy of whistleblowing, take legal help. If necessary, you can act in the interest of protecting clients and market integrity. Even if the conflict is with their employer policies, you can go to regulatory authorities. What constitutes whistleblowing under 6A? I think some previous standards we discussed, right, this whistleblowing policy, and I told you whenever we are going to discuss standard 4, I will be discussing whistleblowing in detail. What constitutes whistleblowing under standard 4A? Whistleblowing occurs when a member reports illegal or unethical action by the company, by employer, to protect interest of client or market integrity. This can involve reporting issue even if conflict with employer's interest. Basically, you have to let go of loyalty in case it is illegal, unethical. How should members approach starting a competing business while still employed? If you want to start, let's say, if you are working in accounts management, investment portfolio management of a team of a particular firm, now you have gained enough experience and now you want to start your own portfolio management services, advisory services. So in that particular situation, how will you handle such thing? So firstly, inform the employer, take written consent. We discussed this here, we discussed this. If you are in notice period, continue to act in the best interest. Do not engage into conflicting activities if you are serving until unless you get written permission. Do not steal his clients. Do not use his resources for your personal purpose. Similar kind of thing over here. Do not solicit clients. Begin operating a competing business while being employed. Can you operate? Can you do your own practice while you are working? Answer is no. It was here also written, do not engage into conflicting activity. So let's say you cannot start your portfolio management service until unless you are employed. Okay, so you should not be engaging into any competing business while you are still being employed. Can members contact former clients after leaving employer if there was no non-compete agreement? If there is non-compete agreement, anyways you cannot do it. After leaving the organization, can you contact its former clients? Answer is yes. But please make sure you do not use any proprietary client information in doing that. Okay. Then what should members do if they have overlapping personal and professional connections on social media? So basically like your LinkedIn, right? LinkedIn, sometimes you have a lot of professionals as well as sometimes there is personal connections as well. So in that case, the question is, what should members do if they have overlapping personal and professional connections on social media? So you cannot do too much about it. Just discuss with the employer how we are going to manage this situation, how to handle situation where personal connection overlap with professional responsibilities. Let's see, like it depends on what your employer suggests. Then how can members ensure compliance with employer's policy on client notification through social media? So client notification through social media is not like you are telling client buy this via social media. Basically, let's say you're not working with an organization anymore, so you want to let everyone know, so maybe you'll update it on LinkedIn, something like this, right? So you should follow your employer's policy on client communication, especially when notifying clients about your departure, and ensure that you do not violate any contractual obligation or use firmed own accounts inappropriately. It's very easy. Then what is the responsibility of employers under standard 4A? Employers, what is the responsibility of employers? Employer should create policy in regard to 4A. So create ethical work environment, establishing fair compensation structure that do not encourage unethical behavior, and setting policies that aligns with ethical standards. Okay, so very generic answer. Okay. Can members solicit clients for a new employer before leaving their current employer? So you are working in A company, you are going to maybe start working in B company after 2 months. In those 2 months, can you ask your clients, current clients, that is the clients of company A, to move to company B when you are working? Answer is no, you cannot solicit clients for new employer or your own or business before officially leaving the current employer. While you are working, you cannot do it. After working, can you do it? Answer is yes. What is expected from members when handling confidential information after leaving their employer? How should member handle confidential information of an employer once he has left? Firstly, he should not be discussing in case something remains with him. In case any other information is there, delete it. return or erase all the proprietary and confidential information before leaving the employer and must not use it for their own or new employer's benefit. Proprietary information, confidential, you cannot do. Can I maybe can I approach clients? Answer is yes. But you cannot use their proprietary or confidential information, right? What are the recommended practices for handling non-compete agreements in this particular standards? So firstly, if it is a non-compete agreement, first thing is do not breach it, right? Assuming you are not breaching it, then other things are carefully review and understand the terms of non-compete agreement which you have signed, including the restrictions on you, on client solicitation, comply with the terms even after leaving employer. What should members do if their personal commitments interfere with their responsibilities to their employers? Because of personal commitments, your work commitments is getting is not getting the top priority. In that case, what should you do? Sometimes the things are unavoidable, right? So for have an open dialogue with your employer and find a mutual agreement how to balance personal obligation with responsibilities of the firm. Obviously, we cannot always prioritize work over personal things and vice versa as well. So have an open dialogue with your employer. How should members handle firm approved social media account upon departure? So if in case there is a firm approved social media account, basically firm social media account, in that case you are moving away from that company, or you are moving to some other company, you are retiring, you are not going to continue to work in this particular company. How should you be dealing with this? So in this case, firm approved business related accounts like your email should be transferred or deleted according to firm's policy. Members must avoid using these accounts to benefit new employer or themselves after leaving. Okay, so social media account, emails, etc., it should be transferred, given back, since nowadays we have laptops, right? And that laptop have that particular Outlook installed. So once I give my laptop, submit my laptop back to the company, I don't have any access to company's data. What actions can members take if they notice unethical behavior but their supervisor does not address the concern? Okay, it should not be exactly over here, but it makes sense to some extent. You notice something unethical going on in the organization, you go to your supervisor, but supervisor doesn't address this. In that case, what will you do? You should consult the compliance department or go for whistleblowing. Okay, whistleblowing procedure to escalate the issue of compliance and integrity. Go to your supervisor. If supervisor doesn't give you a lot of interest, if supervisor is maybe intentionally ignoring this, then go to your compliance department. If not possible, or if there is no compliance department, whistleblow. Okay. How should members handle a situation where they receive a job offer but still have obligations to their current employer? You have an offer letter, but you also have obligation to your current employer. In this case, complete your obligations first. Continue to fulfill your obligations to current employer and then do the general thing, right? Do not engage into competitive activities, do not transfer the knowledge, do not use confidential information, do not solicit clients. Okay, continue to act in the best interest of current employer until unless you leave. Okay, can members use publicly available information to contact former clients after leaving employer? See, after leaving employer, anyways you are allowed to contact. Can you use public information for this? Yes. Can you use private data of employer, the previous employer? Answer is no. How should members? Answer for this is yes, you can use publicly available information, like his email is mentioned on his website. I can use it. How should members handle whistleblowing if they suspect illegal activities by their employer? If in case there is illegal, unethical activities, you can follow whistleblowing policy or consult compliance department, go to compliance department, take legal help, right? Is it a violation of standard 4A for member to leave their employer without informing clients immediately? If you are leaving your employer without informing clients immediately, is it a violation? Answer is it depends. It depends on the employer's policy regarding client notification and departure procedure, and they should not independently notify clients unless authorized to do by employer. So basically it depends on employer's policy. You should not be doing it. First you tell your employer, you notify your employer, and after this employer can give notice to clients, right? But you are not supposed to do it directly. How can employers encourage adherence to standard 4A? How would employers encourage? By clearly laying down the policies. Okay, this is it. Now let us move ahead. Additional compensation arrangements. I don't have lot of questions on it, hardly 15 questions, but all of them are like very different in nature. Okay, so can members accept a performance bonus directly from client without informing the employer? Additional compensation, performance bonus, can I get it from client directly? Answer is no. You cannot get it. You have to inform employer in writing about the performance bonus offered directly by client, as it could create conflict of interest between employer and client. Okay. Then written consent from employer is required to accept such additional compensation. Okay, I think I missed out on the paragraph, so let's read that first. Anyways, it's easy. You should not accept any gifts, benefits, compensation or consideration. Basically you should not accept any gift or monetary compensation or benefits that competes with or might reasonably be expected to create conflict of interest with employer's interest unless they obtain written consent from all the parties involved. Okay, so you should not be engaging into, or you should not be accepting gifts, getting the benefits, or you should not be saying yes to a compensation if in case that will or that is expected to create conflict of interest between conflict of interest with the employer. Okay, and you have to obtain a written permission. Oral will work. Answer is no. Okay. Chalo. Is a non-monetary benefit like gym membership considered as a compensation and that must be disclosed? Answer is yes. Because if you read this, oops, just a second. If you read this, the text says gift, benefits, compensation or other consideration. Non-monetary thing can also be a benefit. Okay, so gym membership is also a consideration and you cannot accept this. What if third party offers sponsorship for industry events or conference? In that case, this is also kind of compensation. You should disclose it to the employer and take written permission from him, obtain written permission and disclose it. Okay. Then how should members handle offers for commissions or incentives from clients for future performance? If in case the client have told you that you will be getting certain commissions, certain incentives based on the future performance, some like maybe getting some returns more than maybe 10%, 12% or anything, any future performance. If in case your performance is good in future, you will be getting some additional compensation. So can you say yes to the client directly? No. Firstly, disclose it to your employer. Then after that, ask him to give written permission. Members must disclose the offer of future performance based commissions or incentive to the employer and receive written consent before accepting them. Okay. Such offers may affect the objectivity and potentially create conflict of interest. Can members accept travel benefits to visit a company they are analyzing without disclosing it? Travel benefits, can you accept? Answer is again a no. You have to disclose it and obtain written permission. No, any travel benefit or accommodation offered by company that member is analyzing must be disclosed to employer. Written consent is needed to ensure travel arrangement does not affect the member's objectivity. What should a members do if a client offers equity in their business as compensation? Again, same thing. Client is, instead of giving money, they are giving you certain benefits, some other consideration. So in case client is offering business equity in their business, disclose this offer to the employer, seek written consent. Okay. Then are there any circumstances where a member can accept compensation from outside source without informing their employer? Answer is no, there is no exception to this. You cannot accept any additional compensation without getting the written consent, disclosing and getting the written consent. No, it should always be disclosed and written consent should be obtained. Then, can a member accept compensation for providing expert witness testimony in a legal case without informing the employer? So, there is a legal case in which you are acting as an expert. Like many times some legal cases are going on and then someone have to maybe give certain judgment, on particular case, some particular situation as an expert. This is like doctor sometimes gives some reports, right? Or like let's say some case is going on but some person is mentally unstable. Then an expert will come and say, I have tested this person and I can vouch that he is mentally unstable, right? Something like this. You are an investment expert, so you will be giving your expertise on the investment. So can you do it without disclosing it to employer? Answer is no. You cannot accept this additional compensation. You have to firstly disclose, then obtain consent in writing. Okay. Accepting compensation for outside activities, whether it is business or something unrelated, may create conflict of interest. Then what if member receives a referral fee from a third party for recommending service provider to a client? So you have client needed some services, you know certain vendors or you know certain softwares, you referred that particular vendor or software to client and that particular vendor gave you fees. So is it an additional compensation? Answer is yes. If it is additional compensation, without any exception, you have to disclose it to your employer and obtain written consent from him. Okay. Can members accept gift or of significant value from client without notifying the employer? Answer is no. Again, it will create conflict of interest. And what my standard said? Anything that competes with or might reasonably expected to create conflict of interest with employer, for them they are not supposed to do it until they obtain a written consent from all the parties involved. Then can members accept gift of significant value? Answer is no. Disclose the significant gifts to clients, by clients to employer and obtain their written consent. If in case you accept gift of significant value without disclosing it to your employer and obtaining written consent, then it might create conflict of interest, therefore will impact the member's objectivity and therefore breach of this standard. Is it necessary to disclose non-cash compensation like vacation, ticket to an event of Diljit Dosanjh etc. offered by a client? Answer is it is a violation. Is it necessary to disclose? Yes. If a client offers to pay for a member continuing education courses Should member disclose this to their employer? Answer is again yes. If client is sponsoring your education, then also you have to disclose it. Can a member accept compensation from multiple clients without informing their employer? Answer is again no, you cannot accept it. Is it acceptable for member to accept future promise of compensation from a client for services to be rendered today? In future, you are supposed to get something for some task that you are doing for client today. Answer is again no. Is it acceptable? No. It should be disclosed and written permission should be obtained. Then can members accept can a member accept personal use of client's property such as vacation home without notifying to employer? Again no. If your client is saying, sir, I have a very nice property in Germany, since you are going to Germany, maybe stay there for a week, it's on me. Can you do it? The situation is like, okay, what's the harm? But it creates conflict of interest in your professional life. Therefore, you should disclose it to your employer. Okay. With this, we are done with additional compensation as well. Now, the third part, responsibility of supervisor. Okay. Members and candidates must make reasonable efforts to ensure that anyone subject to their supervision, basically your colleagues, your juniors, or authority, complies with applicable laws. You have to make sure anyone to whom you are supervising, you are the supervisor, you have to make sure they comply with applicable law, rules and code of ethics. Okay. Okay, now let us start with responsibilities of supervisor. So what is supervisor's main responsibility under 4C? What is his main responsibility? He have to make sure everyone under him, under his supervision, follows applicable law, regulation, firm's policy and code of ethics. This includes implementing and enforcing an adequate compliance system. So it is his responsibility to ensure compliance system is implemented in the team that is working under him. Is a supervisor responsible for violation committed by employee if supervision has implemented, supervisor have implemented reasonable compliance procedure? So there is compliance procedure and even after that there is breach of law, code of ethics, regulations, rules. In that case, it is responsibility of supervisor? No, he did his work, right? It will be responsibility of employee then. If supervisor have implemented reasonable compliance procedure, taken steps to monitor them, then he is not responsible. What steps should a supervisor take if they discover an employee is violating the law or code of standards? You have discovered, you are a supervisor and you have discovered that some of your or one of your employee is breaking the law, is violating the code of standards. Then promptly investigate the violation, limit the employee activities to prevent further issue and take corrective action to ensure compliance. Sometimes reporting the violation up to your seniors can also be taken to prevent reoccurrence. Okay, it is easy. So in case someone is violating, what will you do? You will investigate, make sure the employee is not able to do it anymore, take corrective actions and report it up if required. Can a supervisor delegate all their supervisory duties to others? So see, ultimately it is your responsibility. You can give your employees or some other person some work, but ultimately you will be held accountable. It is your responsibility. While some supervisory duties can be delegated, ultimate responsibility for ensuring compliance still rests with supervisor. I think it is pretty clear. And like you have to make sure that to whomsoever you are delegating the duties, that person is capable enough, is trained enough for this responsibility. What constitutes an adequate compliance system? What is an adequate compliance system? So what is adequate compliance system? That matches the firm's operations, industry standards, and includes procedure for preventing and detecting violation of law, etc., etc. Okay, and it should be communicated, documented, everyone should be knowing about it. So basically, what is an adequate? Adequate depends on firm to firm, organization to organization, industry to industry. It should be sufficient enough. Sufficient enough for what? So that it can prevent and detect the violations, right, of law. So compliance that is adequate enough to prevent and detect the compliance, that is adequate compliance system. Then how often should compliance procedure be reviewed and updated? They are asking about the frequency. That is, there is no particular guideline on this. It should be matching the industry norms. Compliance procedure should be reviewed and updated regularly, ensuring that they are aligned with current industry standards. Then can a supervisor rely solely on employees' assurance that violation will not occur again and again after misconduct have been identified? So there was some misconduct, you identify it, you asked employee, you told him that this have happened, and he give you assurance, sir, next time it will not happen. So can you rely on it? Answer is no. Still, you will make sure that you can trust him for his words, but still it is ultimately your responsibility. So firstly, you will check what else I can do so that it doesn't happen in future. Corrective action should also be taken. So no supervisor must take further steps beyond accepting assurance. Like they need to investigate the extent of misconduct, increase monitoring of the employee, and potentially limit their activities until the investigation is completed. I think pretty easy. What should a supervisor do if they find firm's compliance to be inadequate? Now it is your responsibility to execute this supervisory part. Now you know that there is inadequacy in this compliance thing. Then highlight it to the firm, bring it to everyone's notice. Must bring inadequacy to the attention of senior management and recommend corrective action. Sir, what if I do and then also they don't take any any formal action? In that case, you have to decline the responsibility until the system is developed. Okay, so if there is inadequacy, go and tell your seniors. If they are able to rectify that, create a procedure for it, create a system for it, well and good. But if they say no, we don't want this, then you have to deny the responsibility. Basically, you will not be acting as a supervisor. If a supervisor learns an employee's violation of code and standards but delay taking action, does the supervisor violate standards? Answer is yes. As soon as you are aware of any breach of law, rules, regulation, code of standards, in that case, you have to take actions immediately. You cannot delay taking actions. So there should be prompt action. Can a supervisor delegate all their responsibilities for ensuring compliance with code and standards to a subordinate? Can you delegate all of them? No, some part can be given, all cannot be given, and ultimately you are responsible. No, although supervisor can delegate some responsibilities, they ultimately are responsible for ensuring compliance. Okay. Then, is a supervisor in violation of 4C if an employee violates law despite the supervisor having implemented a reasonable compliance procedure? You have a reasonable compliance procedure established in place, there is system, and even after that there is violation of law by employee. So it is not on you then. Okay. So if supervisor have implemented adequate compliance that meets industry standard, there they are not in violation of 4C. Can a supervisor be held responsible under 4C if the compliance procedure in place are outdated and they do not address recent changes in the industry? It is your duty to develop and maintain this. So can you be held responsible? Yes, you cannot say I'm doing compliance, it's just 6 months based on 6 months old law. You cannot do that. If a company compliance system is inadequate and supervisor bring this to the attention of senior management but no action is taken, then what should supervisor do? Decline the duty of supervisory. Say no, refrain, and until unless some action is taken and system is put in place. Formally decline accepting the supervisory responsibility. What should a supervisor do if they discover that compliance department is not enforcing firm's policy or monitoring employee activity as expected? Then in that case, Firstly, address the issue, address the inadequacies in compliance enforcement, number one. Like telling senior management to strengthen the compliance department, or maybe increase the audits, etc. But in case you know some deficiencies and you are not still addressing them, then it is your responsibility. Failing to address deficiency would violate 4C. If in case you see there is some deficiency in the compliance part, let others know. You let them know, and if they don't comply, then don't accept this responsibility anymore. How should supervisor handle compliance education and training programs? Compliance education and training programs under 4C. So supervisor is responsible or should implement ongoing compliance education and training program. It is ultimately your responsibility for this under 4C for the compliance, right? You are the supervisor, so you should be promoting, you should be involved in ongoing education and training of employees to help them to understand the areas that are prone to ethical and legal issues. Regular training is encouraged. Regular training, clear communication ensure employee understand firm's ethical guidelines. What is the supervisor's role in establishing an ethical culture within the firm under standard 4C? What is your role? Ethical, firstly, like you make sure that it is your responsibility, team under you, under your supervision, they are following all the laws, right? So you are responsible for establishing and promoting ethical culture within your firm, within your teams. This involves setting positive example, enforcing ethical policies, encouraging employees, etc. To act with integrity. I think this is okay. Then if a supervisor is unaware of violation due to inadequate compliance monitoring, then does this absolve them of responsibility under 4C? If you are not aware of any violation because there is lack of monitoring, so you can say, sir, I was not aware, therefore it is not my responsibility. No, you are still responsible under 4C if the compliance is because of inadequate monitoring. Okay, you should take reasonable actions that the non-compliance is being monitored regularly, and then further actions are taken accordingly. Okay, lack of awareness due to insufficient monitoring does not absolve them of responsibility. How does standard 4C apply when a supervisor has focus, please pay attention. How does standard 4C apply when a supervisor has limited authority within a large organization? You are a supervisor, but you are not the ultimate boss, or you are not amongst the VPs and president. In that case, how does 4C apply? In that case also, whatever is your level, till that it is your responsibility to make sure the team complies with laws. You are still responsible for working within the firm structure and develop, implement and enforce the compliance. Even if you don't hold a very large position, ultimately it is your responsibility. You should communicate your concerns about compliance to senior management and recommend corrective actions. What should a supervisor do if they suspect that an employee may violate a law, but no violation has occurred yet? So what should you do? Like, there is no violation right now, but you suspect he will do something naughty. In that case, what will you do? Then, sir, please wait unless he doesn't actually breach the law. Just sit there, watch him, observe him. Answer is no. You have to be proactive. Take proactive actions. In case you see, okay, there is this gap and he is going to misuse this gap for he'll not be following law. He'll be exploiting this particular gap in the policies and the laws. Then what should you do? Take proactive actions. Take proactive measures, like maybe increase his supervision, or maybe provide additional training to him. Limit the employee from responsibilities. Okay, basically don't wait. Once the breach will happen, then I'll be becoming active. If you suspect that there will be some breach, then take proactive actions. Okay, preventive action is a key aspect of 4C, and addressing potential issues before they occur is ensuring for compliance is essential for compliance. Does standard 4C apply to formal hierarchical supervision or does it apply to informal supervisory situations? It applies to every kind of supervision, right? Whether it is hierarchical, it is formal, or it is informal. It applies to all kind of supervision. Even in an informal capacity, they are expected to ensure the subordinate complies with all applicable law and code and standards. What are the potential consequences for supervisor if they fail to address compliance deficiencies that they are aware of? If in case there is any deficiency and you are aware of and you still fail to address them, it is violation of 4C. Violation of 4C. And because of which there could be disciplinary action by CFA Institute and damage to professional reputation. Can a supervisor delegate the responsibility of detecting violations to compliance department and assume that they are free from responsibility under standard 4C? You give your responsibility to, like, sir, there is a compliance department, they will make sure the law has been followed. I am supervisor, but I have given my responsibility to them. Can you do it? Answer is no. You can delegate some of your tasks to compliance department, but you cannot fully delegate your responsibility. Ultimately, you are responsible. How does a supervisor failure to provide regular training on compliance procedure impact the responsibility under 4C? So it is your responsibility that team is complying with laws and all, right? So for them, for this you have to give them training, education, make them aware about the laws, and in case something happens, let them know about the penalties. So failing to provide regular training is violation of 4C. Must ensure that employees are regularly trained on firm policies, ethical standards. Then what is the role of incentives in promoting ethical behavior according to 4C? What is the role of incentives in promoting ethical behavior according to 4C? They should be basically reward ethical behavior and penalize unethical behavior. Incentive structure that reward ethical behavior and compliance with law rather than focusing solely on financial performance. So sometimes you might have to compromise ethical behavior for delivering superior performance. So there should be some structure in which you are also rewarding financial performance and you are also rewarding ethical behavior as well. Like I remember there is one of the clients in which there is employee of the month kind of award that is there. But there is also one award for someone who have worked the most number of projects on, or they have made the maximum number of mistakes. So every month they have a theme. Most number of like trial and errors done by an employee or by a team. That team also get recognition. It is something like this. Award the ethical behavior as well. What should a supervisor do if they are unable to prevent or detect violation due to lack of resources or authority within the firm? If they are not able to do it due to lack of resources or authority within the firm, so firstly ask the team that, see, I will need this much resources, this much authority to ensure compliance with law. If your firm gives it, then well and good. If in case the firm say no, we cannot give any resources, maybe because of some constraint, in that case you should decline in writing to accept further responsibility. Okay, so this is also done. We are done with standard 4. This is done. Okay, now let us start with investment analysis, recommendation and action. So this is standard number 5. Now everyone focus. In this standard, it has been told how your day-to-day workings will look like and for how long you should be retaining the records of your workings. So you should have due diligence, you should have reasonable basis when you are working. Then how you are going to communicate with clients, prospective clients, and record retention. So firstly, let us read the first one. So 5th A, we'll solve question. Then 5B we'll read, we'll solve question. 5C we will read and we'll solve question. Okay. So let us start with this 5C. Members and candidates must develop and maintain appropriate records to support their investment analysis, recommendation, action, and any other investment related communication with clients and prospective clients. Basically, anything that you are communicating with client or prospective client related to your core work, you should retain record for it. You should develop and maintain records for it. So whatever communication you are doing with the client, you should retain records for it for some period. What is that period? We learn about it, but you have to do it. Okay. Let's see questions on record retention. What does standard 5C require from members and candidates? We have just read this. To develop and maintain appropriate records that support their investment analysis, recommendation, action, or any other investment related communication. So do you need to maintain record of any personal communication? Answer is no. If it is related to your work, then you have to maintain with clients and prospective clients. Okay. Sir, why is record retention important for members and candidates? Why it is important? Why you are doing it? So just ignore the standard. Why would a person maintain its record of professional communication? To safeguard himself. In case there is any dispute in future, you would want to show that, see, I told you this, right? And other than this, you also want, in case, like say you want to analyze some error, in case you want to go back and look at your work, you should be having that. It helps to sustain the scope of research and reason behind investment decision. Why? Basically the backlogs of your backings of your work. Whatever work you have done, you should have reason behind it. Like if you have made some recommendation, why you made that recommendation, reason should be documented. It ensures accountability and transparency in investment process. I think it is pretty clear. What types of record should members retain to meet requirements of 5C? What kind of records? Members should retain record such as personal notes from company meetings. In case there is any meeting, maintain records of it. Press releases, presentations, models, input of the models, risk analysis, client meeting notes, and external research report. Now, logically think about it. Press release anyways will be available over internet, right? Presentation will be available over internet. Client meeting, it's a very private thing. Highly recommend you to maintain it. External research reports will also be available over internet. Risk analysis, again very private. Input parameters and outputs, again very private. So majorly you should be maintaining records of the data that won't be available to internet, and it's very private. And since standard have asked you to maintain everything, so anyways these things you can also get in future as well. Does the format of records, paper or electronic, paper versus electronic matters? Do you need to print out everything? Answer is no. It could be in any form. Record means record. Electronic, via on paper, it doesn't really matter, right? How does standard 5C apply to use of new media such as social media or text messages? So there is a requirement for investment related communication with clients to be documented, right? Developed and documented, maintained. So how does this standard apply to use of new media like social media, text message, voice notes, etc.? So do you have to retain these as well? Yes. Must retain relevant information from new media formats, including email, text message, blog post, Twitter post, if they were used in investment recommendation analysis, etc., etc., right? So basically, in case, let's say you read a blog post, basis that you got an idea, and basis that you made a recommendation to client. So is it your responsibility now to retain this blog post? Answer is yes. You saw some Twitter post, you saw some text messages. Basis this, you did your research, and then basis this, okay, you are able to confirm that this Twitter post, whatever it is suggesting, I think we can like move ahead and invest, and basis that you made the recommendation. So is it your responsibility to keep a copy of this Twitter post? Answer is yes. Who owns the record that members create during the employment? So if you have created, or maybe you are working with a team, you communicated for, let's say, XYZ firm, you communicated your thoughts to client. Now basically the question is, the records are maintained of that communication, but is it your record, it's your personal property, or is it belonging to the firm? So answer is, it is belonging to the firm. ये personal property नहीं है, it is not a personal property. It is belonging to the firm, not to individual members. If a member leaves a firm, they cannot take those records with them without the firm's permission. What should a member do if they leave a firm but want to use their prior research or analysis at new firm? Very interesting and very genuine thing, right? So I have done some research at XYZ firm, I leave it, now I'm in ABC firm. I want to utilize my research that I did earlier over here. So can I do it? Answer is, I cannot copy paste it. So whatever knowledge I have gained, basis that, can I recreate that research? Answer is yes. You must recreate the research or analysis using publicly available information or direct sources. So basically, in case some private information was available, basis that you did the research, so that is something that you cannot use. Publicly available information, you can recreate the research, or you may be using some direct source, but they cannot use record from their previous firm unless they have explicit permission from the former employer. In case you want to use their records for your new firm ABC, you should have permission from your previous employer. Anyways, in real life, if XYZ and ABC are competitor, I am not going to get that permission. Okay, now question number 8. How long should records retained according to CFA Institute recommendation? Answer is 7 years or as per law or firm's policy. So record should be retained at least for 7 years unless local law regulations or firm policy dictates otherwise. So minimum 7 years, but let's say firm policy say retain it for 10 years or law says retain it for 10 years, then do it for 10 years. What if the firm policy or law says retain it for 3 years? Then follow 3 years. You will not say minimum 7 years and anything more. Then follow 3 years, right? What is as per law? What should members do if their local law require a different record retention period than what CFA Institute recommend? Then in that case, if local law require longer or shorter retention, then comply with that. Okay? Longer and shorter, whatever law recommends. Then who is responsible for ensuring compliance with standard 5C at firms? See, individual members will follow this. Generally, responsibility of record retention is of the business. Members must ensure that they maintain records supporting their investment recommendation, communication, action, and either electronically or in hard copy. But general responsibility is of firm, right? What should members do if the firm does not have a clear record retention policy? There is no policy. In that case, sir, I'll stop working there. No, just encourage firm that you should have it, right? If the firm does not have a clear policy, members should maintain their own records in compliance with CFA Institute's recommendation and local laws and encourage their firm to establish a proper policy. See, if there is no policy, can you say, sir, I am free, I'll not retain? No, you have to retain. As 5C is 5A is applicable on you, right? So you have to retain. It's just that you have to encourage firm also, please make a policy on this. Anyways, we are going to do it because CFA Institute want us to do it. How does 5C relate to investment action that do not lead to change in position? Let's say you have to give recommendation to a client, some action you have to take in client's account, but overall his position is going to remain the same, long, short, etc. exposure, etc., everything will remain same. In that case, will the 5C apply? Answer is yes, it will apply. It applies to both investment action and reviews that do not lead to changes in position. You must maintain record supporting your analysis and reasons why no action was taken, right? If in case, let's say there is some market activity going on, and because of which the best course of action is to hold the position, then in that case, now this is your action that you have to hold, you have decided to hold the position. In that case, you cannot say that I don't need to maintain the record. Whatever is your reasonable basis of holding the position, maintain record for it. What are some examples of documentation that support compliance with 5C? What kind of documentation you have to do? Answer is model outputs, why a particular share was selected, selection criteria, maybe if some external advisor was used, so his reports, risk analysis reports, notes from clients meeting, etc. What happens if a member fails to maintain proper records? If you fail to maintain proper record, it leads to violation of 5C, as it may be difficult to sustain the member's investment decision or actions without necessary documentation. How should members handle records of client communication? How should you handle all communication records with the clients that is related to investment decision, recommendation, or changes in investment strategy to ensure compliance with 5C should be retained? Personal communication do you have to retain? Answer is no. Anything that is related to your core work, you have to retain that. What should a member do if they are unsure whether a specific document should be retained or not? Now in that case, safe is always to retain it, right? If you are unsure whether you should retain the document or not, on side of caution, it is better to maintain the records than the risk of non-compliance. What should members do if they use external research or third-party reports in their recommendation? Oh, you are making recommendation, but your analysis, your conclusion is derived from others' third-party report. Then in that case, maintain copy of that report as well, external research or third-party report, as a part of documentation. Then can a member rely on memory or informal notes after leaving a firm to recreate a prior work? XYZ to ABC, now you want to recreate the prior work. So can you rely on your memory or informal notes? Answer is no. Members cannot rely on memory or informal notes to recreate prior work from previous firm. They must gather all the new information through public sources or maybe direct data collection to support future analysis. Like in case you have someone known in the company that you researched, so you're working in XYZ, you research, let's say TCS. Now you have direct contact at TCS, you can call them and ask, I want to do this research, can you share the data? That is fine. Direct data collection. Or through public sources, that is you download P&L, balance sheet, cash flow, or any other report of TCS available in the public domain. But can I use my memory? Can I use informal notes? No. If a firm switches from paper to electronic retention, do old paper records need to be converted to digital form? So till now you are maintaining records in hard copies, now you have moved to digital ones. Now the question is, your previous hard copies need to be converted to digital one? Answer is no. A record is a record. So not required, but obviously it is recommended to digitalize old record for ease of access. Then what is the key takeaway for members regarding record retention under 5C? Record retention must be accurate, complete, and organize records to support all the investment related decision. It must be accurate, complete, and it should be able to support whatever decisions you took and you communicated to the client to ensure transparency and accountability. What should members do if they have made a recommendation but did not follow through with investment action? Interesting question. In case you made a recommendation to a client that we should be buying shares of Reliance now, but then later on you said, I don't think so. So should you maintain record of this? Ultimately nothing happened. You should do it. Members must still maintain records of a recommendation and reasoning behind the decision even if no action was taken. Right? This again helps you to ensure transparency and accountability. Oh sir, so no action taken, still record to be maintained? Answer is yes. If a member relies on qualitative model to make an investment recommendation, what documentation they should retain? If you are relying on a model, so what documentation will you maintain? Firstly, output of the model, input of the model, assumption made in the model, and summary of how the model was applied to reach recommendation. Basically, ensure you have that particular Excel sheet or piece of code, right? So input, output, how you have reached that particular, like how you utilize the model to reach a particular decision. Okay. Now, how should members handle records related to client request for change in investment strategy? If a client have requested you to change maybe from less aggressive to more aggressive investment strategy, what records will you maintain? Firstly, copy of client's request. Maybe it is done, if it is done in the meeting, then meeting notes, or communication explaining the reasons for request or like why he wants to switch, and keep a record of how strategy change was implemented or why it was not pursued. If client requested, whether it was pursued or not, like why, like you had a discussion, you will have a discussion with the client, right? So maintain its record. Okay. What should members do if their firm uses a third party service to analyze securities or manage record? If you are using a third party service, third party research for like maintaining the records, then make sure they are accessible, right? Members should also keep copies of any third party reports used in the analysis. If you are using third party in your third party research report, etc., in your analysis, maintain records. If a member works in a team who is responsible for retaining the records of joint analysis or recommendation, every member most of the time will be working in a team, then who will be like primarily responsible? Generally, it depends on firm's policy, but every team member should ensure that all the records of joint analysis are properly maintained and accessible to the team. It is joint and individual, like it is a joint responsibility. Typically depends on firm policy, but it is joint responsibility for everyone to maintain the record. How should member document the rationale behind not recommending a specific security after conducting an analysis? If in case you did an analysis and you said, okay, like client requested, okay, sir, I believe EV sector will do really well, therefore we should be investing in Tata Motors and Tata Power, right? So in that case, you did your research and you said, no, it is not, like, because EV is just a fad, you should not be investing in EV companies. So ultimately the decision was not to invest. The member should retain summary of analysis performed, reasoning behind not recommending the security, and relevant external research or model outputs. This provide evidence of diligence and thoroughness. Okay. What should a members do if their firm does not have a formal policy for retaining records from informal communication like text message or call? If in case there is no policy for record retention, then in that case what will you do? Record retention from informal communication like text message or email. Then you can say, sir, firm don't have a policy, so I will not do it. This is applicable on you as well. So personally you should maintain the copies of relevant information, informal communication such as email, text message, that contribute to investment decision, ensuring they meet the requirements of 5C. Okay. Then see, it is formal, informal doesn't matter. If it is related to your core work, you should do it. How should members handle records if they work for multiple clients with different investment strategy? It is going to be the case most of the time. You will be handling 2, 3, 4, 5 accounts at the same time. Each account may have same or different strategy. Then maintain separate record for each client. Simple. Each client's investment strategy, everything, right? Then how should members retain records for recommendation that were later found to be based on incorrect data? Nice, good question. How should members retain records for recommendation that were found some recommendation was done, but later on you found that the recommendation was based on some miscalculation, some incorrect data, something went wrong. In that case, should you destroy, since it is incorrect, can we destroy it? Answer is no. Maintain and retain the original records along with any follow-up documentation. In case it was done or there was, maybe the recommendation is still going to remain by despite of wrong data. So you should be retaining the wrong data and then follow up, that is the correct data also, explaining the error, how it was discovered and corrective action taken. Transparency is the key even when the error occurs, right? So this should also be communicated with the client, though it is not discussed over here because it's not part of 5A. So what will you do? Error record you will maintain, then follow up, that is corrective actions you will maintain. Error you will be maintained. Sir, but sir, it is wrong. Why to maintain it? Because ultimately your first analysis was based on this. So error should be maintained, follow up should be maintained, and you should also maintain like how that error was discovered, what corrective actions were taken. Okay. If a member relies on proprietary research developed at their firm, what should they do if they leave the firm? Proprietary means this is in-house research done. Basically, it's your product, right? So can you take firm's proprietary research with you? Answer is no, you cannot take proprietary research with them when you leave. If they wish to use similar research in the new firm, they can recreate it using publicly available data, or maybe they can conduct new research, or maybe they can use direct contacts as well. How should a member document meetings with clients regarding investment policy statement? Okay, so how will you maintain documents related to meetings with client? Should retain detailed notes from the meeting, including whatever was discussed, client's goals, risk, agreed upon changes in investment policy statement. Keeping these records ensure alignment between client expectation and investment strategy. Simple. What should a members do if their firm does not have clear procedure for storing digital records? Storing digital records. There is no clear procedure. In that case, you have to do it on your own. In the meantime, encourage firm to have it, and then in the meantime ensure that their own records are organized, secure and easily retrievable with in compliance with 5C. How should members handle records of client communication when working remotely? You and client is based on different geographies, different offices. So maintain their emails, whatever communication, text, email, video call, maintain it. All communications, whether through email, video calls or any other means, are to be documented and stored even when working remotely. If a firm changes its policy on record retention, then how should member handle records created before the change? Then in that case, if in case, let's say the policy was to retain it for 3 years. Now the firm have decided we will retain it for 5 years, right? Now in that case, how will you deal with this situation? So you should follow new policy of the firm. I think that is pretty obvious. going forward, but also ensure that all records created before the policy change are retained according to previous standards unless instructed otherwise by the firm or regulatory requirements. For example, this 3-5 year example will not apply. Let's say you were supposed to record reasons of a particular recommendation and you were supposed to keep a very detailed report of how you reached at this reason. You were supposed to keep a very detailed. Now the firm have changed, policy have changed, and they said that reason and a brief description about how you reached at that particular reason is okay, right? Now in that case, any research that was done prior to this date, you will keep a detailed report and you will keep it. But after this date, you will keep a less detailed brief reports. Okay. How should members handle records when switching from one investment approach to another for a client? So maybe based on client's request or maybe based on like your own analysis, now you think client should not be that aggressive with the investments. Maybe because he is retiring, he should be making investment into bonds and fixed income securities more. Majority of the portfolio should be on the fixed income security side. In that case, how will you, like you're switching from one investment approach to another. So how will you maintain record for it? Members should retain record of previous investment approach. You'll retain it, including rationale for switching, why you are switching, like maybe the client is now retiring, and maintain the documents for new strategy, including any changes in client's objectives or market condition that influence the decision. So previous record to be maintained as per the previous guidelines, like previous requirements of the client, then why there is a change, and new one should be dependent on like whatever the client requests next. If a member disagrees with their firm's research findings, should they still retain those records? Answer is a big yes. Whether you agree, disagree, you should maintain records of both in this case, whatever firm research is and your own analysis or disagreement. Okay, and make sure a full picture of the decision making process is documented. This is your own analysis, this is firm research. You don't agree with it, but ultimately you'll have to go with the firm. So your disagreements, firm research, and how you arrived at the particular decision, you have to document that. How should members retain records when using social media to share investment related content? Yes. So maintain copy of social media post, take screenshot, right? Simple, screen recording, etc. What should members do if they are unsure whether a specific document or record needs to be retained? Simple, on safe side, retain it. Then, can members rely on external cloud storage service for record retention? Answer is yes. If it respects the privacy, it is accessible, it is secure, then what's the problem? Members can use external cloud storage service if the firm permits. I think I missed this point. I assume that the firm permits. Okay, so if the firm permits, you can maintain it on external cloud, provided that there is security, privacy, and it is all time accessible. Okay, to protect sensitivity of the client's investment data. Okay, this is easy. Record retention. We are done with this. Now these two are there. Let's deal with B, communication with clients and prospective clients. When you are communicating, any form of communication with them, make sure you disclose to the clients and prospective clients basic format and principles of investment process. How you make investments and what philosophy you follow, what principles you follow before making an investment. Okay, they use to analyze, select, and construct portfolio. Okay, and must promptly disclose any changes that might materially affect those processes. Disclose format, principles related to your work, portfolio development, etc., and any changes. Principles, format, and changes should be disclosed to the client. Also disclose to the clients and prospective clients limitations and risk associated with investments. Limitations and risk associated. Use reasonable judgment in identifying which factors are important in investment analysis, recommendation or actions, and include those factors in the communication with clients. This is important. One is to include it. So whatever are the important factors in analyzing an investment, recommending an investment, as you see questions, I think you will be able to understand this better and communicate it with the client. Your responsibility is to firstly keep it like in your process and then communicate it well also with the client. And very important, distinguish between fact and opinion. Fact is something that can be verified based on past data. You can verify it like stock price, like financials of the company. That is fact. Opinion is what will happen in future. I believe the company sales will grow 20% in next 2 years. This is just an opinion. So you should make very clear distinction between fact and opinion when you are giving or presenting any investment analysis or recommendation to client. Okay. Now let's solve questions. What is the main purpose of standard 5B? 5B. Standard 5B, what is the main purpose? To clearly and thoroughly communicate the process, including everything that we have discussed. Risk, limitations, general principles, the portfolio construction process, everything that is there, right, that we have discussed. Then what must members disclose about investment process to clients and prospective clients? What should you disclose about investment process? We discussed this. You should thoroughly and clearly communicate the investment process. What within investment process you will disclose to the clients? Basically, you will discuss the basic format and principle of investment process. Explain how you analyze the investments, how you select security, how you create portfolio, and in case there are any changes, inform to the clients. What is why it is important to disclose changes in investment process? I think it basically helps client to understand. It basically helps client to understand how the changes can impact his investment objectives, right? And then ask them or help them to make informed decision on the updated information. What types of risk should member disclose to the client? In short, every kind of risk. Market risk, counterparty risk, credit risk, liquidity risk, everything should be disclosed. Must disclose all significant risk like market, risk of using complex model, this is called as model risk, leverage, counterparty risk, sector risk, industry risk, every risk should be disclosed. What is the difference between fact and opinion in an investment report and how they should be communicated? Clearly communicated. Fact is something that is verifiable like past earnings, stock prices. Opinions are estimates or predictions that you cannot verify because it will occur in future. Then how should members handle the communication of risk associated with qualitative model? How should member handle the communication of risk associated with qualitative model or strategies? Okay, so basically how you will handle the communication of risk related to models. So help them to understand, help clients to understand assumption of the model, limitations of the model, risk of qualitative model. Ensure that clients understand how model works. It is your responsibility. See, he don't need to be a CFA, FRM, etc. to understand how model works. Broadly, you should be able to explain, okay, what is happening, right? We are considering multiple factors like GDP, inflation, unemployment data, foreign exchange, and basis this we are able to predict how the stock market is going to perform in next 1 year. Basis this we are taking some investment decision. So at least explain him this, right? What risks are involved. They must make it clear that the results generated by model are estimates, not certainties. What model generate is just a forecast, prediction. What are members required to do when using new or evolving communication methods like social media? So even see, it is not in the context of how the communication will be done. Everyone focus over here. Okay. What are members required to do when using new or evolving communication methods like social media? So any form of communication, the same principles apply, right? Make sure even if you are using social media to communicate with members, with clients, ensure that all the clients receive fair and equal access to the information. Even if you are using social media, some modern communication, maybe voice messages, a video a message, etc. Make sure everyone receives it fairly and have equal access to it. They should be diligent in making sure that information is treated as if it was publicly disseminated. Basically, it is treated as a public information. Then what should be included when preparing a report on a specific security? If you are preparing a report on a specific security, what factors will you include in your report? Firstly, the key factors should be included that influence your recommendation, like P&L, balance sheet, cash flow of the company, market conditions, risk faced by the company, risk factors, any limitations of the analysis, and make sure report allows user to understand the reasoning behind the recommendation. Basically make it in a simple language, and all the key variables or all the key factors that influence or that could influence the decision of the client should be included. Everyone focus. How should members communicate limitations that could impact the investment process? How will you communicate it? It should be communicated clearly. Communicate limitations that could impact investment process. So it should be communicated, the limitation should be communicated clearly. Like the security in which you are investing might be illiquid. Capacity issues which may affect ability of investment strategy to perform as expected. This ensures the clients are fully aware of potential challenges. What happens if a member fails to disclose material risk or limitations associated with an investment? What happens? Violation of 5B happens. What types of communications are covered under 5B? Communication under 5B include everything: written reports, oral presentation, email, like telephonic conversation, media broadcast. All form of communication is covered. This is called as communication with client. Any type of communication is covered over here. How should members handle communication of complex financial products or strategy? Make it simple. Client should be able to understand it. When communicating complex products, members must explain product structure, risk limitations, in a way that client can understand. Also provide scenario showing how products would perform under different market conditions. So in case you are communicating a very complex model financial product strategy, let them know how it will be performing under different market scenarios. What should members do if they change an investment process that affects client's portfolio? Inform them promptly and let them know the reason why there is a change. Must promptly notify the clients of any change of the investment process that can impact their portfolio. This ensures client can reassess their position and make informed decision based on new information. Then what is the importance of follow-up communication after providing an investment recommendation? Follow-up communication means, let's say you provided investment recommendation 3 months back, but now the times, situation, markets, new financials, everything is there, right? Things have changed. Now maybe buy can become sell, buy can become hold, hold can become sell, sell can become buy, anything can happen. So basically you want to make sure the client is aware of latest information. That's why you would want to give him regular updates. because this will impact their investment strategy and ultimately portfolio. How can members ensure that their communication remains clear and understandable? Basically, use simple language. Use plain language, avoid jargons, and ensure that complex concepts are easily explained in a way that clients can understand. Okay? They should always be ready to answer clients' question and provide additional information as needed. When must members distinguish between opinion and fact in an investment communication? It should be done always. There is no specific point. Always. Opinion is different, fact is different. Be very clear about it, right? Distinction will help client to understand some data is what data is verifiable and what is speculation. What is the important, why it is important for members to disclose limitation of investment model? So you have to disclose a limitation. Why it is important? Because it will allow clients to understand the weaknesses and the risks of the particular model. Basically promotes transparency. How should members handle investment advice based on quantitative research? Make sure the data used to do quantitative research is accurate, is backed by reliable data. Communication is clear about the methodology used and any limitations. They should avoid presenting quantitative results as definite and highlight these as estimates and subject to change. If like you have used a model, it's going to give you forecast. So let the clients know it is not a definite thing, it is a forecast. Highlight that these are estimates and subject to change. Then what should members do if an investment report includes projection or future estimates? Make it very clear that it is future estimates. Should clearly state this. What are the consequences of not separating facts from opinions in an investment recommendation? If you are not able to segregate this is a fact, this is an opinion, then it is violation of standard 5B. Then how should members report performance related to information to clients? How should members report performance related information to clients? Firstly, be very clear about it. It should be performance information should be given in a balanced way, including both positive and negative aspects. They must ensure that the clients are aware of risk limitation and assumptions. So performance, sir, what is performance related information? Like how much returns you are expecting to generate. So tell them, if let's say you are investing in equity security, so upside is also there, downside is also there. If you are investing in let's say a debt security that is having very good rating, so you can let them know there is virtually no downside, upside is also very limited. If you are investing in a security with very low fixed income security with very low ratings, there is high chance of default. So let them know there is high upside as well, but default is also there. Then when using leverage in an investment strategy, what must be disclosed? That leverage is like a 2-edged sword. It can generate significant gains and losses. You have used leverage and it can amplify gains and losses. How should members communicate errors in investment process? If in case you are able to identify any errors, make sure you inform the clients promptly. Explain how the error is being addressed. Basically, inform clients there is an error and then how you are addressing that error. Why is it important to disclose risks associated with illiquid or complex assets? Because there will be times when the client would want to liquidate an investment, but maybe there is no seller, no buyer available for it. In that case, client won't be able to do it. It's a limitation that you are making investment into illiquid security. It might not be like realizable in cash immediately. You will need some time. So let the client know about it. A liquid or complex asset can pose risk such as difficulty in selling or maybe accurately valuing them. By disclosing these two clients, you ensure that the clients are aware about potential challenges and can assess whether the asset is suitable for their portfolio or not. Then what should members do if they receive new information after an investment recommendation have been made? If in case you receive new information, communicate that also. Update the clients with the new information that could affect the previous recommendation. This allows clients to adjust their decision based on the current and relevant data. We are done with this as well. Okay. So 5C is done, 5B is done. Now we have to discuss 5A, due diligence and reasonable basis. But before that, let me take a water break. Okay, focus over here. This is very easy. Basically, whatever work you are doing professionally, you should have reasons for it, like why you are doing it. You should be rational about particular process decision that you are taking. Number one. Number two, you should be diligent about things. Basically, this standard says that you have to exercise diligence, independence and thoroughness. Basically, the recommendation that you are going to give, the analysis that you are going to do, everything should be based on thorough, detailed research and should be rational. Simple. Have a reasonable and adequate basis supported by research and investigation for any investment analysis, recommendation or action. Okay. So you see, you don't have to learn them word by word. Sir, there is a word written, let's say research and investigation. So both the things should be done, supported by research as well as investigation. Don't take it for word by word. Understand the gist of it. They are saying if you are working, work diligently and be rational about your work. Whatever you have, you should be able to back it up, right? Now let's understand this. The main principle I think we have discussed: be diligent and be independent while be thorough, be independent while doing all the core investment related work. What does diligence mean in the context of investment analysis? Now, if someone asks me what is diligence, basically diligence means you are doing 100% to your ability to do the research. You are putting in all the efforts to put all the necessary efforts to thoroughly research and analyze the investment before making any recommendations or decision. What is meant by reasonable basis? Reasonable basis, it was written over here. Reasonable basis. What do we mean by reasonable basis? Reasonable basis means any investment recommendation or action should be supported by appropriate research. Then why it is important to have reasonable basis, reasonable and adequate basis? Why? Because it ensures that client can trust you and helps to minimize the risk of unexpected losses by making informed decision. Then how should members handle investment decisions if they rely on third party or external research? Now think about it. It is asked in the context of due diligence and reasonable basis, and they are asking how will you handle investment decisions in case it relies on third party. You will make sure the third party data is coming from credible source. You can rely on it, right? That is your due diligence over here. That is your diligence over here. Diligence means you put all the efforts to thoroughly research and analyze the investment before making any decision. Now if you are using third party report, it is coming from, let's say, some shady PQRXYZ broker, and one is coming from, let's say, JP Morgan. So JP Morgan is more reliable one. So make sure that it comes from credible source. Also check to the extent possible. You cannot cross verify every number. See, if it is coming from credible source, I think that is fine. But if in case it's coming from PQRXYZ, Chintu Mintu research, in that case check accuracy, assumption and independence of the research. But in case, like, after checking it, you doubt the quality or you doubt the independence of the research, then you should not rely on this. What types of factors should be considered when forming a reasonable basis for investment recommendation? So you should be having reasonable and adequate basis for your investment analysis recommendation. So what is reasonable basis? Reasonable basis, to call it a reasonable base, you have to consider factors like whether it is global, regional or country level economic conditions, right? How the economy is performing right now. Company's financial and operating history, in which company you are investing. So basically this is macro level. You're following top down. Economy followed by company and industry. Fee structure and management history of mutual funds, in case like you're investing there. Then accuracy of quantitative models. Yes. The quality of underlying assets in securitization. So this is altogether different. This is a different asset class. If you are investing in equity, economic conditions, companies operating and financial history, industry sector details. Then in case you are investing in mutual funds, so fees and structure of mutual fund, history of mutual fund. Then if in case you are using quantitative model, accuracy of the model. If in case you are investing in securitized assets, in case you don't understand securitization right now, that is perfectly fine. In a fixed income it will be discussed. Then quality of those securitized assets. So low quality securitized assets was the reason for 2007-9 financial crisis. I think that is why this point is over here. How should members approach the use of quantitative models in investment decision? Now we are not talking about communication. Communication, limitations of the model, input, output, parameters, all these things were there. Here we are talking about due diligence and reasonable basis. So how should members approach the use of quantitative model for investment decision? Make sure whatever is the assumption limitations of the model, we are not talking about communication. It is realistic, right? Using those assumptions, or those assumptions can be applied in case of clients or not. So more understand the assumption and limitations of quantitative model they use, and test and validate the model to ensure they give accurate results before relying on them for investment decision. Here what is important is limitations and all is obviously there, but before you use it, since you have to use diligence, you should have reasonable basis. So you should ensure that you should test the model, you should validate the model whether it is giving accurate results or not. Okay. What steps should be taken while developing new quantitative model? What steps will you take? Think about this. Firstly, we discussed we have to test the model, validate the model, thoroughly test the model. Then model is fine, data is good, accuracy of data, ensure the data is accurate and includes various market conditions. Data is accurate and like is suiting, or I can say it is comprehensive. It is taking into account all the kinds of market conditions, and you understand the limitations of the model. You should not be using model without validating this. Then can members participate in group decision making process, and what are their responsibilities? Can you participate in group decision making process? Answer is yes, you can do it, no problem. Now if in case, let's say you disagree with the group, let's say the team came together and they are deciding whether you should ask PQR, maybe let's say Mr. A, to invest in PQR company. The group says they should not be investing, he should not be investing, but you believe he should be investing. So are you supposed to disagree from the group? Answer is yes. Even if they disagree, members disagree with group's final recommendation, you don't have to like say I am going to disassociate from the group, right? From the report, dissociate from the report if the group conclusion is based on reasonable and adequate research. So what is written is, if in case group's conclusion and your conclusion, there is a disagreement, group's conclusion is also based on thorough research, your conclusion is also based on thorough research. So are you being diligent? Are you using reasonable basis? Answer is yes. In case they are not based on thorough research, then you can withdraw yourself. But both of you are based on thorough research. In that case, you cannot or you should not be disassociating yourself from the group. It is perfectly fine. You do not need to disassociate from the report if the group conclusion is based on reasonable and adequate research. What should members do if they suspect that research they are relying is flawed or biased? Now this is different scenario, right? You're suspecting that the research that you are using is biased, it is flawed. In that case, do not use that research. Do not rely on the research that you are suspecting. Investigate the source of research, check its validity. I think it is whenever in doubt, investigate, check, validate. What responsibility do members have when they use quantitative model provided by third party? If you are using some quantitative model, let's say for valuation of illiquid security, but it is not your in-house developed model. It is developed by third party and you are using it. So can I say that since it is developed by third party, it is not my responsibility? I don't have to be like using reasonable basis. I don't have to be using diligence. Answer is no. Ultimately, even if it is provided by third party, you have to check that the model is valid, even if it is coming from third party. Okay, should understand how model works, verify its accuracy, and confirm that it produces a reliable results. Okay, what due diligence should members perform when selecting an external manager or advisor? Make sure the manager and advisor is having sufficient experience, knowledge, expertise, is ethical for your work. Members should review external managers' ethics, investment process, performance history, fee structure. This ensures that external manager is suitable for client's need and aligns with the firm's investment goals. Okay, so ethics I told. Other than this, like I told few more things. They have listed few more things. Check his investment process, what is his performance history, so that you can be in line with the client's requirement. What should members do if they are part of research team and disagrees with final recommendation? It is perfectly fine, right? If team's recommendation have reasonable basis, then you don't have to disassociate yourself from the report. Even if it does not reflect your personal opinion, you must ensure that the decision is based on sound analysis. It's fine. What is the role of testing and validation in using quantitative model for investment analysis? Basically, the model doesn't generate the incorrect results and ultimately it doesn't lead to bad investment decision. Therefore, you have to check it. How should members communicate the level of research and analysis they perform to client? You should explain this all to client. You should explain to the clients the thoroughness of the research. It's a very detailed research. We have spent so many hours. This much team was involved. These sources were used. And basis this, these models were used and we are able to arrive at this conclusion. Source, how the analysis was conducted. What is the risk of using outdated or incomplete information in investment analysis? It will lead to bad investments. If you are using, let's say, 2023 financial statement to invest in 2025, it doesn't make sense. It will lead to poor investment decision and client can suffer losses because of this. How can members ensure their firm follows proper procedure for reviewing research and recommendation? How will members ensure that their firm is following procedures, proper procedures? How will you ensure? Just push the firm. Here it is. Members should encourage, push the firm to adopt policies regarding research report, credit rating, whatever your business is. Recommendations to be reviewed by a person or committee that they make ensure that they are well researched, right? Encourage the firm adopts the policies related to this and it is reviewed, the policies is reviewed by the person or committee to ensure that they are well researched and meet necessary standards. Basically, they should push for the policies and the policies should be reviewed by committee or some qualified person. How should members handle investment models that rely on assumptions that are no longer valid? If in case some investment model relies on assumptions and then assumptions are no longer valid, in that case you have to inform the client, since this is not about the communication, here you have to update the analysis. Members should regularly update the assumption. What should members do if they discover errors in investment recommendation? In case you have discovered errors, what will you do? Let it be? No. You will rectify those errors. This might lead to change in investment recommendation as well. And you have to, like as per the previous one, you should communicate errors also with the clients promptly. Members should correct the errors immediately, notify clients, take steps to prevent similar mistakes do not happen in future. What is the importance of scenario testing in investment analysis? Scenario testing means if let's say GDP is expected to grow, how my investment recommendation will perform. If GDP doesn't grow, how it will perform. If GDP grows very mildly, how it will perform. Basically, best, worst and moderate scenario is talking about that. So basically it helps you to understand how the unexpected events are going to impact your investments. Okay, how the investments will be performing under different conditions. How does standard 5A apply to selecting a fund manager? If you are selecting a fund manager or if you are using service of some third party fund manager, so we discussed check for his ethics, historical records, his vintage in the industry, like how long he have been managing, all these things. Track record, investment style, ethics, performance history. Simply choosing fund manager on the basis of fees or recent return without thorough analysis will violate. So like just don't choose lowest fees is the best, or maybe out of last 15 years, just check last 2 years and you see okay, he have performed well. See for a longer history. Then what should members do if their firm research process is not adequate? Then if your firm research process is not adequate, encourage the firm to improve their research process, right? And we discussed this as well. Ask them to create policy, then policy should be verified by a committee or an expert. Here also, encourage firm to improve its research process by implementing policies that ensures adequate due diligence is performed. This might include developing better research standard or reviewing third party research providers. Okay, so we are done with standard 5. All the 3 substandards A, B, C are done. Okay, now we are starting with conflict of interest. Very easy. Conflict of interest, very few questions are there. I think 15-20 questions each substandard is there. 3 substandards are there. Disclosure of conflict, priority of transaction, referral fees. Okay, so firstly let us start with referral fees. It's the most interesting one. Members and candidates must disclose to employer, client and prospective client, all of them, employer, client, prospective clients, as appropriate, any compensation, consideration or benefits from or paid to others for recommendations of product or services. So in case you have got any consideration or you have paid any consideration to anyone, you should be disclosing it. For recommendation of a product, you should be disclosing it to your client, employer or like whosoever is the party involved, including prospective client. So basically referral fees, right? Referral fees should be disclosed, as simple as that. Let's solve certain questions on this. Referral fees. What does standard 6C require members and candidates to do to disclose the referral fees? Easy. What is the importance of disclosure of referral fees? Basically, it helps to understand the biasness, right? It allows clients to evaluate if there is any bias in the recommendation. Let's say if I have to recommend 2 investment product to client, one investment product I am getting 3% as referral commission, another one I am getting 1% as referral commission. Anyways, whatever I am going to recommend, I should be telling that okay, I have got some referral commission, right? So generally the attitude of a professional will be, let me recommend the 3% one. Whatever you do, if it is okay for him, recommend him the 3% one over 1%, but disclose that okay, I will be getting sir 3% commission on this. Okay. Then when should referral fees be disclosed to clients? It should be disclosed before you enter into any formal agreement for services. Okay. Make sure that about, like, it's about the transparency, right? So it should be done before. Then what types of benefits must be disclosed under this particular standard? So referral fees, maybe it will be a cash payment, or maybe soft dollar like research services, or non-cash benefits. Basically everything should be disclosed. Okay, we'll discuss soft dollar in some time. So basically every kind of referral fees, like whether it is cash, non-cash, anything should be disclosed. Okay. You should also disclose nature and value of the benefits. Like it's a commission, it is non-cash benefits, I'll be getting some trips, or I'll be getting some maybe vouchers. Everything should be disclosed, and how much value will be there, right? 2%, 3% of the transaction, 5,000, 10,000, 20,000, 5 lakh rupees, whatever it is, disclose that. Does standard 6C apply to internal referral fees within the firm? Internal and external, both. It applies to both external and internal referral fees. If a member or candidate is receiving fees from another department within the firm, it must be disclosed. Let's say you recommend, there is an investment bank which is also managing, let's say, a fund house. It is also doing equity research. The client is for equity research, and the tie-up between department is, in case a particular equity research firm recommends a particular product portfolio, let's say fixed income or maybe some portfolio, then some commission will be transferred from the portfolio management division to equity research division. So in this case, are you required to disclose it? Answer is yes. Even if it is happening within the firm, the client should be aware about it. Okay. What should firms do to ensure compliance with 6C? Basically, develop policies related to referral fees, and sometimes restrict referral fees entirely or outline the appropriate steps for seeking approval and disclosing them. So your policies, maybe the policy is you cannot accept any referral fees. In that case, anyways, it is not done, right? In case it is there, so how you are going to disclose it? Promptly disclosure should be there. All these things, policy should be there. What is considered appropriate disclosure of referral fees? Appropriate disclosure is you should be telling the nature of the fees, the value of the fees, and it should be done before. If you don't have exact value, maybe give an estimate, right? Means clearly informing to the client about referral fee arrangement, the nature, like it's a flat fee, percentage, one time, ongoing, and value of the benefits. In case of interdepartmental referral fees within a firm, what must be disclosed? The arrangement must be disclosed. Nature and how it benefits them, even the referral fees is paid within the same firm. Can members or candidates accept referral fee without disclosing them to their employer? Na baba na. Employer, client, prospective client, all. You cannot accept it. Okay, you have to disclose it to the employer. And like, sir, how you should be reporting it depending on the firm's policy. What is an example of violation of 6C? Basically, you accept referral fees from another firm or department for recommending a service to a client without informing the client or the employer. Okay. What should a members or candidates do if a third party referral fee is involved? In that case also disclose. Anyways, it is to be disclosed, right? Must be disclosed to the client and employer in case any compensation is received from third party for making referral before the agreement with the client. What is the key ethical concern that 6C is addresses? Basically, it is about the biasness. It is about the conflict of interest, because like I will recommend product A because I am getting 3% commission, even though product B might be better. So I have to disclose that I am getting 3% fees here, I would have got 1% there. For you, still I will recommend the 3% one. It is not for me to make higher commissions, but for you, because it is a better product as per your needs. How should referral fee disclosure be made to ensure transparency? Over call, over email? Answer is over email. Like as in it should be in writing about the nature and value of the benefits. If a firm implements referral fee program, what update should it provide to the employer? Okay. If a firm implements a referral fee program, what update should it provide to employer? Let's read the question again. If a firm implements referral fee program, what update should it provide to the employer? Update about nature of transaction, like nature and value, and it should be done at least quarterly. So how much commission you have earned in the quarter? This should be updated by firm to its employer. Okay, it should be done at least quarterly. It should be about the value, and it should be about value and the amount. In an example where firm has referral agreement with another company, what must be disclosed? This agreement is there. Any benefit received, such as research commission, commissions directed to referring firm. Basically, referral arrangement should be disclosed. What is the purpose of requiring disclosure of referral fees? To avoid conflict of interest, for it to be unbiased. The purpose is to maintain transparency, that is avoid conflict of interest, allow clients and employers to assess the objectivity of recommendation and full cost of service provided. I think this is easy. Okay, so we are done with this. Referral fees. Then let's do priority of transaction. Focus here. Investment transaction for clients and employers must have priority over investment transaction in which member or candidate is beneficial owner. Basically, client and employer's transaction should be executed first over personal transactions. Okay, or transaction if it is not personal, even if you are beneficial owner, like it is not in your account, it is in your wife's, mother's, brother's, friend account, then also you are beneficial owner. So you should be executing client's transaction, like employer's transaction first, then you can execute the personal transaction. Okay, let's solve this question. I think main requirements we have just seen this. Why is client priority important under 6B? It's client, employer and self. So it ensures client interests are placed first, preventing any personal financial interest of members or candidates taking precedence over client's investment decision. Very easy. What does beneficial owner mean in the context of 6B? Beneficial owner refers to someone who has direct or indirect financial interest in the security, such as personal account, family account, retirement account. I think we have discussed this. How can members and candidates avoid potential conflict in personal trading? Nice, good question. How you will avoid conflicts in personal trading? So whenever you are doing personal trading, make sure it doesn't cause any harm to the client. Ensure that personal transactions do not disadvantage client. They do not benefit personally from the trades made by client, and they comply with regulatory requirements. So let's say there is IPO, okay, and you can get 100 lots. The client have requested for, let's say, 100 lots, and you also want to invest in this IPO and you want 10 lots. Now firstly you will execute this 100 lots, but sir, there are only 100 lots, you will not get it. Yes, you will not get it, right? So client over yourself. In this case, maybe if you executed your trade first, is it causing disadvantage to the clients? Yes, he requested for 100, you had 100, but now you are giving him 90. It is causing disadvantage to client, right? Or maybe you are taking personal advantage over here. It's the same thing. Can members or candidates engage in personal trading that contradicts the advice given to the clients? Can you do it? Let's say you have told a client, do not buy shares of MRF tires. But in your personal account, you are doing it. On the face of it, it looks wrong. But answer is you are allowed to do it. Because client's portfolio might be alag, his requirements would be alag, right? So let's say client tire sector is basically bit volatile. Client is not ready for that volatility, but in your personal account, you are ready. He's 65, you are 30. In that case, maybe you are ready to take that volatility in your portfolio. So it is fine. Can you do it? If you have said no for a particular share, but you do it on your own account, answer is yes, you can do it. But make sure, see, you are not doing it for his disadvantage. You are doing it because it doesn't suit him and it suits your portfolio. Yes, but only if it does not disadvantage the client and the member follows 3 criterias. Client is not harmed, personal benefit does not come from client trade, and regulations are followed. I think pretty easy. So client is not harmed is easy to understand. Personal benefits do not come from client's trade. So if you are executing client's trade or you are not executing client's trade, there is some benefit to you. It should not be there. And regulations are followed. I think that is very much clear. What are the key standards for personal trading under 6B? 6B. Firstly, client's trade followed by personal employer's trade and then your trade. So personal trading must be secondary to client and employer transaction. Number 1. Members and candidate must not benefit from inside knowledge of upcoming trades or convey non-public information to others for personal gain. So I think this is pretty easy to understand. Your trade will be secondary, client's trade will be first. You should not cause any harm to the client. There should not be any personal benefit that you are getting from client's trade, and you are complying with law. You are not disseminating the non-public information, and you are not using some knowledge about upcoming trades for your personal benefits. Like in this case also, there is something discussed about front running, I guess. Okay, we'll see. Then I'll give you example. Here it is. What is meant by front running? So front running, I think couple of months back, it happened with Axis Bank, like the Axis mutual fund. So front running is, let's say you have 1,000 crores and you are going to deploy that 1,000 crores from the firm to a particular share. Now you know that share is not that large in size, so deploying 1,000 crore will immediately shoot up the price by 5 to 10%. Now what you do is, this trade will be executed next week or maybe tomorrow, day after tomorrow, in very short span of time. So you start taking position today. You build your position, you will invest maybe 1 crore, 2 crore, it will not move the share much, right? But when 1,000 crore comes, so you execute the position. Now you wait for the fund to execute its position. Now as soon as the fund executes the position, maybe your 1 crore become 1 crore, 5 lakhs, 10 lakhs, and then you come out of that, right? You sell your square of your personal position. That is front running. Now this front running, it is unlawful. You are not supposed to do it. You are using knowledge of upcoming trades for your personal benefits. You are causing, like, how do I say, this is personal benefit to you from client's trade. So it is wrong, right? It is violation. Okay. So execute personal trade before executing similar trade for clients, which is unfairly benefiting your personal account. Therefore it is violation. What should members do if they wish to sell securities for personal reason, such as paying tuition bill? So it is perfectly fine, right? If you have a valid justified reason, let's say you have asked a client to hold a particular position, buy a particular share, you already have it and you are selling it. So can someone come and say, sir, you are saying the entire world to buy, but you are selling your own shares. Is it ethical? Answer is yes. There should be a genuine reason for it, right? Ensure that selling the share does not harm client or create conflict of interest. They should follow firm's policy regarding this. How should personal trading be handled if the member or candidate has access to non-public information? You're not supposed to act on non-public information. Simple, easy, right? We have already learned this. Personal trading also must be avoided. Okay, if you have non-public information. Because this is something you are using non-public information for private gains, personal gains. What is the impact of standard 6B on family accounts? First of all, family accounts in this case should be treated like clients' accounts and should not be given any special treatment. Family accounts is, it's not your personal account, maybe some of your relatives, mother, father, brother, sister's account. Treat it like a normal account. You should not be giving them advantage over clients, right? However, if a member or candidates have beneficial ownership, pre-clearance or reporting requirements may apply. So I think yes, it's very much easy. If you don't have any beneficial, see, ultimately treat it on par with client. Client first and then others secondary. Client, employer, your personal things. Now family account, you can say, sir, I don't have any beneficial interest. It is just of my friend. So I don't have any beneficial interest. He'll be taking his money. But can I give him like importance over client? No. Treat it like normal client's account or maybe below it, right? What types of personal transactions might be restricted by employer under 6B? Anything that gives gain to the member over the clients, that causes harm to the clients, that doesn't follow the law, those things. Transactions in IPOs or private placement which may provide personal gains before the clients have an opportunity, they are often restricted to avoid conflict of interest. So they've just given an example in IPO or private placement. Anything that gives personal gain before the clients, then it is a violation. What are blackout periods and why they are important? Blackout period is a period in which you are not supposed to trade in your personal account. Right? Blackout period are time frames where members or candidates cannot trade securities in their personal account before the clients do, ensuring that personal trade do not take precedence over client. So basically, if let's say IPO is coming, firstly you will make sure the client is getting all the allotment that is suitable to him or that he requested, and in case it permits, like beyond that, scope is available, then you can take into your own personal accounts. Okay. Then what are the reporting requirements under this 6B? You have to disclose your personal holdings. Which kind of share you are holding, how much amount, how much quantity, not in fact yours, anyone in your blood relation you have to disclose. Mother, father, sister, brother, wives also, spouse also you have to disclose, right? What is pre-clearance and how does it help to prevent conflict of interest? Pre-clearance is before making any trade, you take approval from the firm. Pre-clearance is process of seeking approval before making personal trade. Basically, you are asking your firm, sir, I want to invest in this particular share. We are also working on this, or I want to invest in this particular fund. This particular fund is also recommended to our client. I want to own this particular fund or share or portfolio because of XYZ reason. Am I allowed to do this? So basically, it prevents conflict of interest. What is the firm roles in establishing personal trading policies in under standard 6B? What is the firm's role? Basically, they are the ones that is making sure client interest is above your personal interest, right? They should establish clear policy to prevent conflict of interest. How should members and candidates disclose personal trading policies to client? Clear disclosure without using jargons, full and fair disclosure before executing a trade, or let them know in advance, right? Personal trading policy to clients should ensure transparency. There should be full disclosure, should be clear, informative, and not be a general boilerplate language. So basically, it should be specific. What is potential violation of 6B related to IPO participation? IPO participation, I think we have discussed this. If you participate in IPO before the client, then you are violating this. Okay, don't prioritize personal gain over clients advantages. How does standard 6b apply when managing family accounts? Family accounts should be treated like normal clients accounts. They should not be given priority. Treated like any other client account and must not receive any special treatment. If you have any beneficial ownership, then follow pre-clearance and reporting requirements. Now I think you are able to understand what is pre-clearance. What are the consequences of not completing firm's personal transaction reporting form under 6b? If in case you are failing to comply with personal transaction form as required by the firm, basically you are failing to follow the firm's policy. The firm policy is you should always go for pre-clearances, or maybe there is a list that okay, if you are working on this, you are not supposed to enter into trade related to those securities. Whatever it is, you have to, or maybe you have to disclose your holdings every quarter, every month, or before start of any new transaction. This is all firm's policy. You have to give it in writing, or basically fill up the form. If you don't do this as required by the firm, then it is violation. Basically, you are not following firm's policy. What changes happens if a member trades on a recommendation before the report is disseminated to clients? Before giving clients, you got a report. Now let's say the report says buy this share. Before telling client, you are using your own funds to buy a lot of shares in your personal account, and then you send the report to client. In that case, it is a clear violation. You are taking unfair advantage over clients. It is violation. Okay, we are done with B as well. This is done. Now conflict of interest. Conflict of interest, you should make full and fair disclosure of all matters. Full and fair disclosure of all matters. That is expected to create conflict of interest. That is expected to impair independence, objectivity, or interfere with respective duties to clients, prospective clients. Basically, it is going to create some conflict of interest, expected to create conflict of interest. And such disclosure should be prominent, ideally before, right? In case, like as soon as possible. And it should be delivered in plain language. Don't try to hide it in the text. Don't try to put it into very small text. It should be clear. It should be on the face. And it should be communicated effectively. All the relevant information should be given. Okay. Basically, be very truthful about conflict of interest. Try to be as honest as you can. Disclose it timely. Okay. So I think main requirements we have just discussed. If anything is going to impair your objectivity, independence, will cause conflict of interest, disclose it to everyone. Employer, prospective clients. Why is disclosing conflict of interest important for investment profession? Very, very important question from life's perspective. When you are going to become CFA who is managing funds, why it is very important? It just helps to be very transparent about things. It protects from biased decision, favoring personal interest over the client's interest, employer's interest. How should a conflict of interest be disclosed? I think we read it. Plain language, upfront. It should be delivered. It should be like in a very easy language. It should not be hidden. Plain and clear language, ensuring information is effectively communicated and client understand the potential impact on the advice they received. What is meant by conflict of interest? What is conflict of interest? Personal interest, relationship, compensation will affect objectivity in providing investment decision. Basically, personal interest versus client interest or employer interest. Can member or candidate avoid conflict of interest entirely? Theoretically possible. In real life, it is not possible. It may not always be possible to avoid conflict of interest, but make sure you strive to avoid as much as you can. What types of conflict of interest must be disclosed to employers? What type of conflict of interest? They've given example, anything that impacts your objectivity and independence, like ownership of a stock being analyzed. Let's say you hold 20% of a company and your team is analyzing that company. So you should like disclose this, right? Participation on outside boards, if in case you are working in a firm and you are also board of member of a company that is being analyzed, so let the company know. Or financial pressure that could interfere with duties to employers must be disclosed, or anything like any financial pressure someone is pushing about this, like basically it is creating conflict, right? So you have to disclose that. How should conflicts arising from cross departmental activities be handled? Cross departmental activity, like within this organization, let's say you are into equity research division and there is investment banking division. Investment banking division is forcing you to issue a positive report about a particular company because they are going to execute a particular deal with this company. In that case, this is a cross departmental pressure. You should disclose this whenever they arise, right? Disclose this to your employer, disclose this to your clients as well. Disclosure, potential, like members and candidates must disclose potential conflict when they arise from activities like underwriting, market making, issuing research report that may benefit other departments of the firm. Ensure transparency across the organization. So I've taken example of this issuing research report. It could be underwriting as well. It could be market making as well. Okay. What must stock ownership be disclosed under standard 6A? Why must stock ownership be disclosed? Because why it should be disclosed? To avoid conflict of interest. Why you want to avoid conflict of interest? Because this will lead to unbiased, it will lead to biased investment recommendation. If let's say you own a stock 10% into a company, and then if you know if a buy recommendation is given by your firm, then stock price will jump, let's say from 400 to 550. That is significant gain to you, right? So you should be disclosing this. Then what is the role of disclosure when a member or candidate serves as a director of a company? The company that is being researched, you are a director, independent, full-time, whatever it is. If you are a director, you have to disclose it. When you are serving as a director of the company, you must disclose this role to employer and the client. Because serving as director again will create a conflict. Ideally what the firm will do, firm will ask not to participate in this particular project. Okay, next, what should members do if their compensation arrangement could affect their objectivity? Simple, disclose, right? If compensation arrangement can impact your objectivity, let's say the compensation is based on the output. If let's say output is favorable to the company that is being researched, the compensation will be maybe 5% of the extra 5% is there, and in case it is not favorable, then maybe a fixed fees is there. If the compensation is based on certain outcomes, then in that case you have to disclose it. How should conflicts involving compensation from third parties like stock promoters be handled? Any kind of compensation that is going to cause conflict, disclose it. Receives additional compensation from third parties, then they must be disclosed to the clients. Then what happens when a member or candidate's personal trading conflicts with professional duty? Personal trading conflicts with professional duty. If in case that is the case, firstly, since it is going to impact your objectivity, disclose it to employers, and the firm's policy should be followed. If the firm policy says you're not supposed to trade in your personal account because there is conflict of interest, so do not do the trading, right? It should be fully communicated to the employer. I think this is easy. How should conflict of interest be communicated to client when ownership of a stock or investment in the company is being recommended is involved? Let's say you are recommending company Aarti Industries to a particular client, and you have some interest or you have some stake into the company. Then let them know about this because it will create conflict of interest. should be informed of any material ownership. Sir, I have 0.01%, or maybe company have 5 lakh shares and I have 1 share of the company. Should I inform this? Answer is no, it is not material, right? This will not create any conflict of interest. Then, can conflict of interest arise from relationship with colleagues or friends? Answer is yes. Let's say the company that is being researched is owned by my friend. So it can arise, conflict of interest can arise because of my relationship with the friend. Such as favoring friend's firm in an investment allocation, or they've given another example. You are recommending a particular company that belongs to your friend. That is again some conflict of interest. You are recommending it not because it is suitable for client. It is good for your friendship. That's why you are recommending it. What should members do? Focus. What should members or candidates do if they are assigned to write report on a company in which they or close member hold stock? Close member of their family. Disclose it. Sir, everything should be disclosed? Yes. And follow firm's policy on it. Sir, can I say I'll refrain from it? It depends on firm policy, right? If you make a disclosure and then company says, okay, you have disclosed it. Now, if you're objective enough for the recommendation, we don't have any problem, then you might not refrain it. But if the policy is, let's say, once you disclose it or company is aware about it, then you're not supposed to work on that project, then that is also fine. What is the disclosure requirement when a member or candidates receive fees from recommending a mutual fund or a service? It should be disclosed. The client must be aware of this fees. We discussed company A, B, 3%, 1%. What should the members do if they have received a personal request or favor that conflicts with their professional duties? Nice. They've received a personal request or favor that will conflict with your professional duties. So, sir, personal, then employer, then client. Na baba na. Client, employer, personal. Then you have to let go of your personal things, right? As per firm's policy, at least primarily give disclosure. Must disclose. Like if a friend asks for investment allocation to his firm, then this must be communicated to employer as well as client. How often? Like you should communicate it with your employer first, and then if this particular transaction sails through, still the allocation will be done in your friend's firm, then inform client as well. How often should conflict of interest be disclosed? Always, every time, whenever they arise. What should members and candidates consider when disclosing potential conflict? What should you consider? It should be done clearly in plain language. It should be done promptly. All these things clearly, prominently, in a way that ensures clients and employers understands how the conflict may affect the objectivity. It should be done in plain language. How does disclosure of conflict helps protect clients and employers? Basically, it will save them from biased recommendation. Okay, we are done with this as well. With this, we are done with standard 6 as well. We started here. I told you there are 7 of them. We are done with all of them. This is done, this is done, this is done, this is done, this is done. Everything is done. The entire ethics with lot of questions. On an average, there were around 20 to 30 questions, even more. Let's say 30 questions on an average, and there are 23 substandards. So 23 substandards into 30. I have not done the exact calculation, but 23 into 3 is approximately 690 questions, right? 23 into 3, 60, and then 9, 690. That is almost 700 questions. Now, is it enough? See, the questions that I have discussed were situational, condensed into the gist form of it. Now, we have gone through almost 700 questions together, right? Your responsibility is for each standard, at least practice few more questions now. Make this reach maybe around 12 to 1500, right? Few more questions. Even if there is repetition of the concept, that is perfectly fine. Okay. With this, we complete ethics and professional standards. Okay. Now, one more part is pending, that is GIPS, right? From GIPS, it is sure that almost 3 to 5 questions will be tested in CFA Level 1 exams. So we'll be discussing GIPS in a separate video. Till that time, we are done with this particular session on ethics. See you next time. Bye-bye. And if you have stayed till here for so many hours, I appreciate you. No matter whether you clear or don't clear the exam, you are a really good student for me, and that really matters for me, right? Your efforts is something that I look at instead of results. Obviously results matter to me. I operate an institute, but if there is a student, and there are many students I have seen, they give their 100%, they are not able to achieve results immediately, but over longer period, 2 year, 5 year, 10 year, they reach different kind of heights in comparison to candidates who put in less amount of efforts, and because of luck, etc., they end up clearing the exams. Okay, so that is it. Bye bye.